Good morning.
I was like, do I have music playing? Man.
I was just feeling the vibes from Ilya Tapuria. Was a good fight in the UFC. I don't know if you follow that stuff, but I caught it over the weekend. It was a pretty cool fight, to say the least. So hats off to the Spaniard, and congrats to him.
Yeah, just watching Volkanovski in his last fight, I was just like, man, that dude just seems off. But in that fight, it was just pretty more apparent. So I mean, it's tough, man. When you start getting older and you're inactive
That's what I was about to say. I feel for him. He's a fellow Slavic like me, but from Australia. So I'm a fan of his, but the other guy's a great fighter too. So hats off to him. Definitely was a cool fight to watch. But I totally agree with you. I'm 45. I'm not quite the same that I used to be when I was 25. I'm holding up okay, but I definitely agree with what you said.
Yeah. But it was still, I mean, it was entertaining though, so
that's all that matters, right?
Yep.
So there's a lot to go over.
Oh, there is.
We have quite the economic calendar week, which is where I kind of want to start off today. So let me pull that up. There's a lot of Fed speak, which I'm not the biggest fan of whenever that happens, because it's a lot of noise. It's a lot of blah, 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 blah. So let's see here. Let me get my economic calendar going.
I'm actually going to post in the comments here so that you guys can.
I was a little coffee last night, so hopefully I'm not too bad through spaces today, but I try to take some like Ricola or something. It's just from the snowboarding going fast, and it's been kind of like snowing while I've been snowboarding, so just get that little kind of runny nose, chest cold sometimes.
Yeah. Little temperature change.
Yeah.
It's cold and you warm yourself up.
So turn down the Bloomberg a touch.
Right, so if you guys could share out the space if you don't mind, and see if we can't wake some people up. I don't know how people roll out of bed and hopefully brush their teeth and wash
Let
their
me
face.
do that too. I forgot to do that as well. So for people out there, you're listening on your phones most likely. Go to the bottom right corner. You'll see the little purple thingamajig, and give it a like, and then retweet the space. I'm doing the same. Just done. All right. My market watch isn't pulling up for some reason, which is weird. I can get it from somewhere else. But...
If you go to, I posted the entire schedule, and so if you go to the comments section, guys, on the bottom right, that little tab we were just talking about, I posted the entire week economic calendar in there. I tried to make it in a format that's easy to read on Twitter, so it looks like
nice job on that.
And US merged. So it's not AM US yet, or whatever that looks like. It's AM space US. So I don't know why I did that, but
I get the idea. I think others will as well. But let's kick it off there. So today at 10 a.m. Eastern, 7 a.m. my time, so basically in about an hour from now, is going to be U.S. leading economic indicators. It's important. It's always important, but it carries certain annotation now, because it's one of the few things, as in the name, that it tries to be leading, even though it's really lagging between us. But
I think it's more for the insight of future health of economies versus the state of what it currently is. But
yeah, absolutely. So that's going to be out, and it's a tricky spot we're in, and if anybody says different, they're lying to you. So we're at a point where we've broken out to new all-time highs. Let's just, for like easy round numbers, we'll call it 4850 was the previous all-time high. We went above that, and everyone's trying to spot a pullback and a correction. And I posted the QQQ seasonal chart, which there's a lot more to it. When I personally do my models and exclusive, um, he does a lot of trend based, a lot of fib based, a lot of seasonals and cycles, and I do the same. And I include a presidential cycle pattern and stuff like that. But I want to see if we can just dumb all this down, just simplify everything, because I think there's genius in simplicity, right? So we all know with the presidential cycle patterns and this and that, that obviously it follows campaigns, right? As someone is going to start to get closer to campaigning, they usually don't want to have a recession or the stock market doing crappy as they're about to go into their campaign, for obvious reasons. So, with that said, the simple thing is the market has been pretty well in the dance steps or cadence of the seasonal charts as far as the S&P, the Dow, and the QQQ, especially the QQQ, because why? This Magnificent Seven theme, which you guys know I'm not a big fan of, but it's obviously taken the oxygen out of the room for financial media. So everyone's focused in on those biggest stocks. They're leading, and they're kind of uh, they're the dog wagging the tail versus the other way around. So the QQQ seasonals have dominated other seasonals for that obvious reason. So on the chart that I posted, basically spot on right around here. So this was the first weekend after mid-month, after the 16th and the 17th. And literally right around here, you start to have weakness in the Qs kind of back into March. And then after you get out of March, usually there's some kind of bottom. And that even happened to us last year, which is why I'm bringing up this example. And we started to make a decent bottom out of March and had a decent rally as well. So is it going to be different this time? It already is showing us that it isn't. But there's a lot of cross streams, which is why it's difficult, and I said tricky right off the bat. Um, One of the companies exclusive tracks well, which I'll let him chat about in a second, is Walmart, which reported good earnings. It's up about 2.5%. He can get into that, but a point there is that's another example of the cross stream, is that there's things that have recently been in their own corrective stance while other stocks have been performing. Maybe they've given their pound of flesh, or maybe there's a reason that they've been acting well and they're going to give out some final flush if there's going to be weakness. That's why it's tricky. And if anybody knows exactly what's going to happen, I can give you some ideas and inclinations, which is what we're going to get into. But I want to reiterate, it's a tricky spot because at any moment we could have a 5 to 10% correction, or we could have a little bit of a small kind of route, a mini correction, 3 to 5%, and the right things go down enough and other things have fundamentals or earnings reports that starts to kind of drag things up a little bit. China's adding stimulus again too. If you start to see K-Web and you start to see Chinese names acting well, that sometimes has a little bit of effect. Maybe it could be rotational, maybe it outperforms. So it's a tricky spot. And the VIX is in this area where it can kind of, it has a look to me where it can kind of break out to some degree to kind of follow this upcoming pullback if we get it or not. And then it kind of has the look like it's just consolidating this range. Sometimes people get a little bit lost in the weeds with the VIX, thinking it's a stock. And I look at the daily and weekly charts of it too, but I always have to take it with a grain of salt because it's not a stock. It's an oscillator. So it oscillates up and down and it creates divergences, and it's giving you some type of sense of what's happening in the derivatives market. But there's a lot of skewed data there. Okay, so that's that. So let's kind of use that as a backdrop, knowing that we're in a tricky spot and things can kind of go either way at this moment. There's times where it's a little bit more apparent, where the momentum's a little bit, you know, I'll get into kind of a little bit more thought and detail later, but just to on that backdrop in the back of my head, what kind of makes sense to me is the market will present itself kind of in this weak scenario. I think people will overtly rush to short and try to bring the market down. It'll come back up, maybe get to, I don't know, 510 5. I see this, there's this very long trend line, and one of the followers brought it up to me. It's something I've been watching too, and they did a really nice job on the chart. Maybe I can repost it or highlight it later. But there's like a 30-year trend line, and it coincides with around 510, a little bit higher on the SPY. So for it to not tag that, I agree with the comment that he sent me. um, I would be surprised for that not to happen as well too. So usually what kind of happens is like at the bottoms and intermediate bottoms and intermediate tops, you get this kind of retest bottom, whether it's more shallow or lower volume. If it's a successful retest, then you go up. Same thing kind of shorts, or the market looks for intermediate top. We had a recent kind of high. We retested it, kind of failed, and maybe that's it. We start to kind of correct from here. And that's what the market's presenting. But I just have this gut feeling that, you know, just the kind of theory, fools rush in usually happens type of thing with the stock market. Then it kind of punishes that. Then it kind of eventually gets back onto track to following its seasonals or things like that, or shaking out some weak hands. With that said, though, since we're in a bullish trend and trending higher, one thing to make note of, which is just kind of good, like Fibonacci note, what when and if the market starts pulling back, and if it's from here. So you'd be able to do like a fib retracement level from recent highs. Exclusive's very good at doing this. Maybe he can do a chart for us later, and I'll just kind of repost his. But the point I want to make is more broad than just exact like line and to the cent. And again, Exclusive's really good with to the line and to the cent. So hopefully we'll get that out of him later. But broadly speaking, really good bull trends usually kind of retrace and don't go too far past the 0.38 retracement in fibs. And if it's kind of almost pretty strong bull trend, if that makes any sense, that phrase, um, I think you get the drift. You'll get a 0.50. So, and if you start to go past that, that kind of shows weakness in the trend to begin with. So those are things to keep an eye on, broadly speaking, if and when we pull back, and how much, and having your eyes on those fib levels are quite important. So that's why I wanted to bring it up. All right. So with that broader pick and some details as far as what retracements could look like, and if or not we're going to start one exactly, and you see some of my thoughts there. Let's turn it back to the economic calendar. So we brought up the LEIs, which will be again in a little bit under an hour, and then there's a lot of Fed speak, and that's why I wanted to give you my my vomit emoji out loud on Fed speak. So this is a good week to kind of start the pullback if they want to use Fed speak and stuff like that. But it might be very convoluted, and we're going to get that in the minutes tomorrow. And the minutes, people often make a big deal of it. The market will gyrate. It's just because, traders want to find some catalyst to jerk around. So you'll see the market get herky jerky tomorrow in and around the minutes. But it's not really a big deal per se. It's not really going to set the stage for where destiny's going to lead the market up and down right now. It might look like it for a second. You'd be like, oh, the minute, but really the minutes, again, you'll hear me say this in spaces or in posts. It's kind of like a banana 3 quote, but the market doesn't really care about those types of things, because that's what's called a book report. And the market doesn't care about book reports, because book reports is material of what was. The market's forward looking. It cares about what's going to happen. So keep that in the back of your heads as well. So with that, I'll just kind of read it off. Wednesday, tomorrow. So today, leading economic indicators. Then tomorrow, Atlanta Fed Raphael Bostic, who's back to being a voting member. He wasn't last year and now is again. Then Fed Governor Michelle Bowman speaks. Bostic has been pretty even keeled. Um, I wouldn't say he's hawkish or dovish. He's kind of come off the hawkish stage towards dovish, so directionally going that way. He's been there's my cough. He's been making comments, um, kind of in line with like there's two-way risk, and that's really where we want all the Fed members to really be. The market kind of got a little bit of ahead of itself with pricing in too many rate cuts. Um, I think I've done a decent job kind of describing it. And Mike Santoli on CNBC, who's probably the smartest person there, he's absolutely brilliant. And I love listening to him. You don't ever hear me using words like that about economists and strategists and pundits on television, but you have to call balls and strikes. And he's a brilliant, brilliant, brilliant guy. And he's done a very good job of outlining the following case much better than I have, which is he stated that he doesn't think that the market needed the 6 rate cuts it started to price in. When you guys are listening to me out there, you're like, what do you mean the market priced in? There's a way that the market uses by the CBOE, the Chicago Board of Exchange. Um, they keep track of a lot of the derivatives markets, and they have a Fed funds tracker tool, which is basically used from the bond market, and it tracks the percentage uh, of of the Fed funds rate, telling you in the Fed funds meetings and the FOMC meetings the percentage that's attributed to the Fed's raising, cutting, uh, interest rates going up or down. So the market started to price in like almost a very strong percentage for the March cut, and then obviously subsequently the May cut and June. They just had like a cut every meeting, and the Fed wanted to kind of get that out of the markets privy, out of its thought process. The Fed wanted to have more optionality than to be like you know lockstep stuck into this kind of like geared thing that the markets already decided for the Fed. The Fed wants to kind of have its power still, right? So the Fed speakers have come out and tried to get out this March cut thing, and then obviously with some of the hotter inflation reports that started to push along that, and that's important because these algorithms that are over 60% of our trading. And when you hear like the GME and the AMC stuff and all this stuff against Citadel and all that stuff, there where there's smoke there's fire. Most of the stuff you hear in the retail community on Wall Street bets and stuff, it's kind of conspiracy theory and very far-fetched, but there is truth. And I've been one of the first people before the GME and AMC thing ever started a decade ago, talking about that there's just too much conflict of interest within Citadel. A lot of people don't know that they run a hedge fund while being a market maker too. That's like um, running a poker table, being the dealer and being one of the players. So you get to see everybody's cards. That's kind of not fair. So that's one of the things that I brought up a long time ago. I don't want to get too deep in the weeds about that, but for the purpose of this little rant right here, is Citadel is like 60% of every single trade that you and I make. So that's a lot for any one institution. I also feel that's a little bit conflicting there, so for obvious reasons. But um, when people say the algos, there is truth to that. So there's some guy out there that tells another guy to program, IT guy to put the criteria of what they're going to rapidly hear news driven things and sell and not. So that's why it's important to talk about this Fed speak and stuff, because you'll hear as each one comes out little reiterations of certain comments, and the market's going to go up, and you're like, oh, why is the market? Oh, because Waller said this, or somebody said that, or Daly said this, or Bostic said that, or it's back up because of this and that. And that's just algos moving around. And I want us to be very careful with that, because
weeks like this is where you can get chopped up really, really well as an option trader in short-term options. And something I'm going to exclusive and I for the season finale today, which today is, and we'll talk about that later. We're going to go through the whole day today, so we're going to be here to close. So there's going to be times where I can dive in, and I have a couple thoughts that I've laid out on how to like talk to you guys about like options trading and how to look for strikes and stuff like that, and really simplify this without like talking about Greeks and deltas, because when people do that, it really kind of like, it gets too finite, and people get lost in the math sometimes. I get it. So okay, back to the markets and that. So you get an idea. We got the Fed speaks. We got things are going to move around because the algorithms are 60% of the trading. Citadel's behind a lot of that. Shit's going to move around because one Fed's going to say this or that, and I don't want us to get too crazy about that, because at the end of the day, and so I'm connecting all the tissues. What Mike Santoli's been saying is correct, that the market really doesn't need all those rate cuts to be here. And I want to give you guys just kind of like a visualization, like a Joe Pesci visualization here. What the market really just wanted was for the Fed to stop beating it with a baseball bat over the legs. All right, because that relentless beating constantly is where the market just says, man, sooner or later, that's why we got Silicon Valley Bank. Sooner or later, something's going to break. Okay. If you keep beating it over and you keep beating it, something's going to break, and then it's going to be difficult to glue all those pieces back together. And that's why all those conversations, when you heard of hard landing or mild landing or soft landing, that's just different variations of the Fed beating us is going to make something break mildly or harder, or that's when you hear those types of comments, that's what that translates to. So that's that. So tomorrow again, Bostich, we'll have Bowman, and then we'll have the minutes. So we discussed all of that. Then Thursday we'll have initial jobless claims. The market's going to really look into that because it's still trying to figure out if the Fed um, would be responsive to the two following things. So this is important. This is maybe something you should actually even make a note of. And I think it's quite important. I made notes of it to talk about it with you guys later. So I kind of make notes, but I don't ever like read off the script with you guys. It's just in my head. So um, the Fed is stuck between a rock and a hard place with this, and this is what you should note. If the Fed cuts rates because there's economic weakness, historically speaking, if you actually dig into the charts, and people bring this up to me, and it's a smart question, and this is not anything people like, oh, sorry if it's a dumb question. There's never a dumb question. So it's a smart question, and this is the question that I often get. Hey, Banana, I've looked into this. I've done some hashtag more homework, and in my research, when the Fed starts cutting rates, the market actually goes down, and a lot of people don't know that. And should they be careful what they wish for, type of thing? And that's a smart question, because that person, and many people have said this to me, is correct in that research. There's a gigantic caveat, and that's where I wanted us to make a note. If the Fed has to cut rates because of economic weakness, so you start to get job unemployment starting to tick up. You start to get softer leading economic reports. You start to get PMIs coming down. You start to get these sense. Now, there's a big difference between, and I want you guys to note this too as a little side note. There's a big difference between what's called slowing growth and what immediately people will jump into by seeing any weakness in those things that criteria. They'll be like, oh, recession, the R word. And that's a huge, huge difference. And the Fed themselves is saying, we're expecting some moderation of growth. That's their exact verbiage. So they want some kind of, like, let's say the GDP is flying, 3%. They're saying, like, 2.8, 2%, just some slow. That's a big difference between a recession is zero GDP or to negative. So that's a huge, range right there. So people quick to jump there. But the thing the broader thing that we're making note of, that's the side category note. The broader thing we're making a note of is that question, and that correct research that the person and many people have said to me that yes, if the Fed starts cutting rates because of those reasons, quite often, yes, the market actually has a pretty decent pullback slash correction, et cetera, et cetera. Now, here's the caveat. If the market sniffs out that the Fed can cut rates because inflation's coming down, and you see the consumer hanging in and you see economic indicators more or less hanging in, then that I believe is the reason that we've come this far and can continue to go farther. That's been my theory, a working theory for quite some time. I've laid it out in great detail. And it's important, not because I'm special or anything. It was a very different theory than the Fed itself had stated. And I wanted to kind of create that roadmap so that we could see along the way if it was right or wrong, we can adjust to that. That's very important. It's not about being like an oracle or having some type of crystal ball or being a fortune teller. Some of you guys cutely will send me like bananas and oracle. I get things wrong all the time. So it's about just kind of probable statistics and generalizations and kind of figuring out the landscape, right? So with all that said, Thursday, we got those jobless claims as I just went over. Then we'll have S&P flash U.S. services PMI. That's why I brought that up. Manufacturing PMI, existing home sales. Then you'll have another Fed speaker, Vice Chair Philip Jefferson is going to speak. Philadelphia Fed President Patrick Harker is going to speak. Fed Governor Lisa Cook's going to speak. Minneapolis Fed President Neil Kashkari. So you get the drift. A lot of those last speakers, Kashkari, Lisa Cook, and Waller, they're after the market on Thursday. So that's going to affect things kind of Friday morning. So that's something to keep track of and watch too. So exclusive, as he mentioned earlier, he did a really nice job kind of laying it out in a tweetable form that everybody can see, and then you can go to marketwatch.com and look at the economic data for everything we just went over right now. Exclusive, I'm going to pass the mic to you for just a minute. I'll look at some other things, but maybe you can touch upon Walmart and some of the stuff that we've been talking about.
Yeah, sure. And guys, it's really important to understand what some of these economic data points and the relevance to market sentiment. And I want you to focus on that word, because sentiment is not what drives price. Sentiment is what makes price volatile. And when we have this sentiment that's skewed because of, the data that comes out today, or the bond auction bill data, or mortgage rates, all of these we've gone over this for a past few spaces. This data can affect specific sectors and specific sub-industries because of the reaction that the market has from the data that's released. So today, just to recap, we have at 10 and 11:30, and the 52-week bill auction isn't until 1, so we'll address that a little bit later. Why the bill and bond auctions we'll go into why they're different timeframes, but this reflects the government's borrowing activity, and the demand in these auctions is what gives I don't want to say every investor, but the bigger, like the huge investor money, that's what gives them confidence in the US economy. And oftentimes when you see these bond auctions, you see safe haven names, Walmart, Home Depot, more Dow heavy stocks, because they're safe haven names. So safe money that's looking for safe investments typically flock to those when the data from the bond and bill auctions aren't as favorable. And when there's low demand for those safe haven stocks, that's when the sentiment shifts to more neutral and bearish. And that's why you see downturns, because that lower demand raises concern about fiscal health. So I want people to understand why the volatility changes around these bill auctions, and understand. And I mean, you can go to investopedia.com or MarkWatch. There's a bunch of different websites, or even FINRA. You can find all this data. It's free. You don't have to pay for it. Just Google it and take 30 minutes once a week to just kind of polish your knowledge on why it does what it does, what it means, what the 3, 6, 52 week, 17 week, 2 year, 20 year, 30 year, why they matter and what they influence directly or indirectly, because there's coin-graded and correlated moves around these. Okay, so it's really important to understand what they are and what they're doing. Now
those are good points, by the way, and I would reiterate what Exclusive said there, because you'll often see the market be quite reactive to these auctions, so that's why it's important to keep track of. And it's telling you, like Exclusive said, the demand for the paper. If the demand's weak, you're going to see kind of a reaction to that, because, like Exclusive said, it's going to maybe portray weakness or strength in the government's borrowing ability, and how sovereigns and other market participant, the bond market, is reacting to that.
Yeah, absolutely. So real quick, I guess individual tickers. I mean, everyone's going to be looking at Walmart, Eli Lilly. It's really easy to kind of see what's working right now, because again, we have data coming out at 10, so there's going to be lower volume. When there's lower volume, moves are more pronounced, so it's easier for us to kind of detect where the money is rotating in and out of based on volume, not time. So once the market opens, that can all change. But right now, we're looking at a little bit of a theme here into healthcare and some retail. A couple of these bigger wholesale stores, Walmart, Costco, TJX.
Yeah,
markets open.
Dollar General even catching a little bit of pin action off Walmart too. That was a good play off of one of our last spaces too.
Yeah, there was it's an interesting open. So right now things are obviously extremely flat from the open. A little bit of red. Things are starting to look a little bit more red than green currently, but again, 5-10 minutes, let the dust settle, see where things go. Really interesting open.
On the tech stocks and larger tech caps, I'm watching Apple on outperformance. I'm actually gonna take the 82.5 calls. I have them. I'm just gonna add a couple cons, nothing too crazy here, as it just ran over 182. I just grabbed a couple that was very fast, but it's about 170, something like that. I got filled. They're almost 180 now. So again, you guys know I try to come prepared. I say that sarcastically. I do a lot of homework. So Apple is something I had highlighted over. I could be wrong. The market's kind of in a negative phase, and Apple's usually not doing well. So this would be kind of an interesting call for me to say that. But I'm looking for Apple to slightly maybe outperform, just because it's given its pound of flesh, and some of the kind of like hourly charts and
Walmart's ribbon.
Yep, smaller time frames are hanging in there. Dollar General too is another one I'm watching. Exclusive is all over Walmart for us. Costco is doing well off that, as Exclusive mentioned. My healthcare ETF's catching a bid. Cure. Dollar General hanging in nice. So you guys know I posted a chart on that. I'm looking for this to get to 150, 160. It might need a little time to do it, but it's kind of breaking out of some weekly downtrends and stuff like that. Well, just rip the buck as I'm scoping options on it. For those that know, I'm already in the 140s. I've been posting those. I'm still hanging on to those for now because I just have a stop raised above 50% above break even, so I'll let it do what it wants to do until it takes me out of that particular trade. But I like the 145s, but just shot up a buck. I hate not getting that buck. I knew it was about to happen, but I still like it. 145s this week on Dollar General. Wish I got that dollar for us. Happened within 30 seconds, but they're about $1.80 right now. So I'm going to grab a couple 145s in Dollar General. Nice relative strength out of Google. So on some of these techs, this is just thinking out loud in the back of my head. Google, Apple, and Tesla, they've underperformed and have given a little bit of their pound of flesh watching all these other guys have a nice party. So I'm kind of thinking about them as trades: Tesla, Google, Apple, for those reasons. I've charted Tesla and Apple out. We talked about it this morning in pre-market before Spaces. Those who've seen my charts, just go to my post on that. Watch the crypto names. Obviously, Bitcoin got back over 52K. I'm not a crypto specialist. I just read a lot, but I like to defer to people who I think have a good level of expertise in that field. I'll give out some names to follow later. One is a good friend of ours, Crypto. I forget his exact handle, but we'll bring that up later. But something to watch. It's become a little bit important for the market again because, contrary to a lot of the very extreme believers of crypto, and I get it, fuck the dollar, pardon my French, and we're the last man standing type of thing. I'm not that deep in the weeds with that type of stuff. What I am good at is understanding markets. And again, I'm not a crypto specialist, but I do know the stock market and the Nasdaq specifically. And the Nasdaq and at least Bitcoin and the larger crypto, we'll call it, part of crypto, the larger market cap of crypto, is quite correlated to the Nasdaq. So that's something I watch. Plus, I trade some names like we all do: Master, Mara, Riot, a couple other names. Exclusive is good at watching those too and trading those names. So I'm watching to see if Master breaks out as well. Watching Mara over 29.30 area. I'm going to do a little risky here, but I'm going to do, see if it's breaking. Been in this downtrend, healthcare. I think this stock's ready for a little bit of a bounce. It's gotten punished from some recent news, and it's Amgen, and it's because it's excuse me, its drug wasn't up to snuff with like Eli Lilly, and that's a hard compare. So it got smoked up from like 315 all the way down here to 280. I see it starting to curl a little bit. I'm thinking about what Exclusive said with a little bit of the rotation in some of the healthcare names and things like that. So I'm going to do a trade here on Amgen. It's a little bit riskier, but I can see a little turn. It's called a fish hook pattern. You can Google that in stock market terminology. All right. Amgen, 285 calls right here. Looks like I'm going to get filled at about $2.90 a con. Grab a couple cons. And Amgen. Let's see if we can get a little bounce there.
I'm going to do some meta 480 calls here.
Nice. I'm going to do Tesla also. I'm going to add a couple contracts to this week's 200s in Tesla. See if we can get this sustain over this little mini head and shoulders break above the neckline. I posted a chart on it. It's on my profile. If it starts to break below that, that would concern me and stay there. But got to take a risk. And I'm going to take my chart and take the 200s right here at $2.75. I already had some, so I'm adding cons. So SMCI, it's something good to bring up. It's obviously taken a lot of oxygen out of the room. I know Exclusive and I wanted to talk about it at some point, but we're watching a lot of things, and it's, I know it's on your guys' mind. I see the DMs. SMCI just hit your target of 760 banana, and it just jumped through that target of another $6. This thing moves dollars like other stocks move cents, right? So yeah, I called for it to go around the 760 level. We just got that. What I'm going to do, I got to do something for my account, so just bear with me here. I'm going to close my hedges. It went below my target. I treat hedges kind of like the way we treat. I'll take a screenshot of this so maybe I could use it educationally real quick. Everything's happening fast here. 1 second. Okay. I'm just going to close out these couple puts I had here because they're up like 200%, obviously with SMCI dropping so hard. And I had like 3 puts. I should have had 5 because I have 400 shares and change. I usually like to have kind of the amount of puts for my shares just kind of out of the money. Is a little bit of protection, especially something this volatile. But they were so expensive and kind of difficult to catch, so I just grabbed a couple. On that note, though, SMCI. So this thing's super volatile, and it's going to run around, and people are going to have different targets and stuff like that. And I think there's a more interesting way to think about this thing. Obviously, there's what's called spaghetti to the wall trading. If you're a professional and very nimble trader, you can actually buy a put or call, quickly assess if it's going your way. If you caught a good entry of that, if it's green, you're just holding it and da 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 da. That's just called spaghetti to the wall trading. If you're very nimble, people can do that. It's not something I ever suggest, and none of this is financial advice to begin with. But always just thinking of my little brother out there who listens to me and is a trader here and there as well too. He's actually an attorney, but just became one. But he loves the markets as well. So the better way to think about this stock, because this thing's going to make everybody crazy, is it's actually got a fundamental backdrop. This is not GameStop that ran to the 500 people like, it's going to go to 1,000. We're going to take the hedge funds down, baby. And the hedge funds just came up with more money because the fundamentals of GameStop aren't there. Okay. The fundamentals of this company are, and before everybody gets a hype and short this thing as the next GME for me to short and blah, 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 blah. I want to pull back the curtain here for a second. Okay. And if Exclusive has a trade or anything else, it'll jump all over my toes. But on SMCI, okay, and I'm sure other rooms like, oh, just get $600 puts and stuff like that, or bank and stuff. It's going to be like Friday. I'd be very careful about that. Friday was a kind of a very obvious, what's called an exhaustive gap up. Okay. And pros jumped all over that. Plus, there was a technical thing that I want you guys to understand. And this is like market mechanics, and it's a little deeper in the weeds stuff. I don't want to spend too much time on it. But one of the reasons for the drop on Friday, besides it just obviously being parabolic, and I talked about that in my own charting over at Outside Spaces, and I sold a lot of shares at 800 saying it was parabolic, so obviously at 1,000. I did a bad job trading it around that level, except hedging puts and stuff. Okay, but SMCI has fundamentals behind it that are shadowing NVIDIA. It's become very apparent to the market that the actual products, the hardware that SMCI makes, is going to be used in a lot of NVIDIA chip and server stacks, and if that company is going to follow NVIDIA around, fundamentally speaking, then it is extremely cheap for the intrinsic prospect, for the intrinsic value at its market cap. So that's why the stock doubled so fast. People are like, oh, the thing is just shorted. It's up 200% for the year. Is there fundamental reason for that? And then there's actual metrics, and Exclusive and I think are one of the few spaces that has spent so much time, okay, breaking down, giving you guys the ability to then do hashtag more homework and then go research each subject, and then giving you a wealth of education just within the spaces. It's like a YouTube tutorial, right? And we talked about price to book, price to sales, price to earnings, right? Right, X?
Yep.
We did a good job of doing that for people, I think. So that's for other people to decide, but that's my opinion there. And SMCI has the ability for you to do that. It's wacky tobacky on price to sales, and you get a little crazy, but it's starting to make money. So you can go back to what I believe is important for when companies have this some explosive growth fundamentally, okay? And they weren't profitable because they had invested in something, and now it's taken root, right? Like AI has, like the H100 has, like SMCI's server racks have. So what I want us to think about here is forward PE. And I've heard some people say, don't use it, da, 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 da. What's important is to see what the market's using, okay? And I've proven that to us with Nvidia and with other companies and stuff like that. And I think if we continue to use the model that's worked for us this far, I think it will continue to work for us after the fact and smooth out some volatility when the charts are going buck wild. Yeah, again, there's what spaghetti to the wall. You see something breaking 15-minute structure, we'll get a put or go up. Okay, but broadly speaking, SMCI, all right, if it's below, I think this is my opinion, below a 30 forward PE, it's a buy. Even at these, even being up 200%, and that, you just have to figure out how to do it, right? If you get into this thing and it goes down 100 points because it's just so volatile, but then it's up, 300 points later, how you played that in the short run is all the difference, right? So there's a lot of times where I can see a stock maybe be in some kind of short term or intermediate term downdraft or weakness, but the longer term structure and picture is still important. And that's important because that's how we participate. That's how we can create, I think, some of the best wealth as far as trading is concerned. All right, because scalping exclusive is one of the best. I do it constantly. I've proven it. I've done trades outside of spaces recently. Just like here's things I grabbed right now, and we're gonna manage the trade. Okay, again, that's called spaghetti to the wall trading. But some of the biggest wealth in trading is made by swinging and position trading, and I think exclusive would agree to that, and that's why I spend the time with you guys to not only look at, hey, yeah, we're in a seasonal weakness period. Exclusive and I had done a good job. When Tesla was under weakness, we actually got puts and had downside targets. And again, this market's in a tricky moment right here. And I want us to a little bit think about the forest through the trees. And this was a similar conversation I had in last spaces, and it fell on deaf ears. I'm an honest person, okay? It's just a certain type of spaces that was more hyper scaled for scalping and stuff like that, which we do here too. But again, we're just kind of a more of an all of the above mix, which is different and rare than other things. And that's what separates what Exclusive and I are doing here. That's important. And I want to set the stage for, if things, as the market's pulling back right now, that there's opportunity, that you see the forest through the trees. And similar conversation I had in September and October, because if you look again, hashtag more homework, at the stuff I I barely slept, and I don't care. I wanted to do that on the season. That's another thing on the season finale today, is show you the work ethic. All right. So going back to that, on the seasonal chart, you see there's a little bit of weakness right now, and it's right on cue. But look at what is to come. All right. And that's where I don't want us to get too lost in overtly trying to scalp or catch the right put or things like that. Today, there might be good trades, and we'll keep track of them. But there could be some good developments, and I want you guys to keep that in the back of your head and in your notes, because today is the season finale, and we're going to take a little bit of a, and I won't be there every week. I'll be there posting and doing all sorts of stuff, But if you start to see things unfold the way we're discussing, you're kind of prepared, like, oh, okay, this is happening right now. I'm going to be more opportunistic than kind of scared or feared. And if I can leave you well prepared after today, as you see things kind of after today's spaces in the downtime between our for season 2, and we'll talk about that later, then I would have done my job today. And that's where my passion is with you guys, is to give, and that you receive. And then I'll know that it's been received, obviously, from the commentary, but I'll just get a sense of the way things go today. I'll have a feeling from you guys in the community that you're not only just thinking about a trade per se, like how I just all I want to do is just turn $100 into 150 today. But you're thinking that you're becoming a better market participant. You're becoming more observant. You're becoming more educated. You're becoming more confident in your ability to understand the market as it's coming at you at a fast pace. And then you'll scalp trades and figure things out, or maybe listen to somebody's Discord if you're in there. You know how I feel about some of those. 90% of them suck, but there are a couple good people out there. So I don't want to throw rocks at glass houses and stuff like that. But what I think is going to be important is that you get a feel after all of these spaces, and especially today's, that you're confident about at least looking at the market differently than you ever have. And if I can leave that with you, then my job here is done, in a good way. Not like completely, finally, forever, but in a good way to keep going forward. All right, I'm gonna start scanning some things here, so I could be a little quiet.
I go for it. I've been doing it while you've been talking.
Yeah, thank
So
you.
we've seen a little bit of relative weakness in the IT sector and healthcare. Energy is not far behind, but it's really important to pay attention to what's moving and what isn't. And at the open, we saw a little bit of volume in healthcare, and as it turned out, that was more downside. So we saw a little bit of upside in LLY, Eli Lilly, and then it went right back down. And I'm looking at some things like Qualcomm, DoorDash, DraftKings hitting lows of day, and it's a little bit daunting. But now we see the Dow's down only 26 points, so it's still relatively flat. The Nasdaq Composite's down about 1.25%. SPX, S&P 500 index is down 30.5 points. So this is about the time, where we start to see what moves start to be a little bit more pronounced. And when I mean pronounced, I'm talking about things that are up 3, 4, 5%, and things that are down 3, 4, 5%. So
Sorry, X.
that.
Quick trade update.
Mhm.
Dollar General is about to those 145 is about to go in the money. We're 20 minutes into the market. Those contracts went from $1.70 to $2.50 right now. That's $70 a contract. Now, usually, I kind of let this go a little bit more and stuff like that. But when the market's herky jerky, and Josh, my buddy, not well, is making fun of me for that comment, so I thought I'd say that. Well, there you go. The 145s are in the money. Those cons are 260. So what I want to do is I already want to raise stops here, and I actually want to take a trim. I want to follow my brother Exclusive's advice a little bit here too. He's good if he gets 10 cons, he's quickly peeling a couple off. So if you did a round number, 10 cons or 2 cons or whatever, for my little brother out there, take a little trim here and then kind of raise stops, all right? Because this is trade. It's a difficult day. So on a difficult day, got something going immediately our way. We want to take a little bit of money, so kind of wet the beak and feel good about today. And then we're like, oh, we got something going against the grain. That's great. And then we're going to raise stops 50% above break even. Sorry, X.
No, you're fine. All right, let's see. It's a quick update. So the Meta 480s, they went to about 460, 18%. Now they're back below entry on the Rust. Walmart's still kind of chopping around. I see They're hitting Broadcom, obviously, with its market cap now. They're hitting that in Tesla pretty hard with Lilly.
Honeywell is
Nvidia's
acting pretty well too.
yeah. A lot of there was a lot of bullish sentiment in Nvidia, and I was gonna post a freebie, but then the last post I did didn't get 500 likes, so I didn't. I was gonna be short Nvidia heading into earnings, but bull long term. So it's really interesting to see Nvidia down 37 points or 5%. But now I gotta go study the SMH real quick, see where that's at.
Just on kind of my account overall, it's not a trade I'm shouting out, but just in transparency, I'm adding a contract to my NVIDIA June 21st 800 call. I had a couple placeholders already. It's something I'm probably going to try to get up to 30 cons. So I had 8, now I got 9. So just adding to that, similar to what Exclusive just said. So this allows me to kind of like DCA into a longer dated option that I believe has more room after some corrective process. But yeah, on that note that Exclusive was saying. Yeah, so Tesla got smacked on my 200s. I still like the name here. So it's difficult. It's a short option trade. I size for 0. I'm going to let that be. I don't want to average down and chase on that trade, but I still like it here. I still see something here. So what I'm going to do is set up another swing I have here. I have it, so I'm going to add to it on this dip. I'm already profitable on it, so that's important to take out with a grain of salt that I'm able to manage this trade differently than someone like my little brother who might just enter it. But I still like it, and that's May 17th, 200 call. It's expensive. It's $17 a contract, but you get what you pay for in the option world as well. And that's something I am going to discuss with you guys later, which is going to be a fun segment in a debtor spot. And Exclusive and I are going to close today, so we're going to be. It's like double the spaces today. It's like like when they do in those season finales. It's like a 2-hour season finale special, but in this case, it's going to be like 6 hours. So at some point, I'm like coughing and my voice is going to get tired and all that, but. I do have some stuff to talk to you guys about later with options trading that I think you'll find interesting. So on that note, I mistimed the entry on the Tesla for this week. Still might work out, but we'll see how this market reacts to some of this Fed speak and minutes and stuff like that. I think Tesla even down $6 is outperforming. I know that's hard to believe, but this thing could be down 10, $15 on a NASDAQ down almost 200 points easily. So there's that in the back of my head as well. I'm leaving those 200s alone. I don't want to average down for the reasons I just laid out. That's its own trade right now, but separate, even though that one's going wrong, we'll put that away. I'm reanalyzing unbiasedly to that trade, not trying to chase a revenge trade or make my money back that I lost there. I'm adding to my swing on the discount on the May 17th 200 strikes. All right, that's that. UNH, for those that know, I posted a trade a couple days ago highlighting UNH. You can search. I know I tweet a lot, so it's like if you scroll, a lot of people don't know this, but in the search bar of Twitter, you can jump to people's tweets without having to scroll if you put in the right keywords. For this search, if you just put in Banana 3 Stocks UNH, it'll take you to the last couple of UNH posts, and one of them is what I'm talking about, which is I took one of my things, because Exclusive and I are only doing this once a week, so a couple times a week, not scheduled, so I can do it at my leisure. which is why it might be a good idea to have notifications on for me or not. I do live trading, but post. So I'm not on Spaces. It's just I post it, which is easy for people to read. That's the moment I did it, and sometimes my little brother follows me along that way as well. And I had posted the UNH March 28th, 5:30 calls. Those are up 25%. So I'm gonna probably trim. It just hasn't done anything for me to do that yet. But I'll trim a con or two, and then I'm gonna let that go. Since I got to March 28th for that to work out to 5:30, it could get there this week even, and then I'll have to readjust. I gave it breathing room and time. I'd like the contract. I could see this maybe even getting to something like 5:40. So I'll try to leave a couple runners, something like that. But that's that trade.
I'm scalping some Walmart 180 calls again. I've already taken them before, but they moved a little bit quick for the spaces. But if we can break high of day, we might get another leg up to like 181.3-ish. Obviously, the setup I posted earlier on my feed is printing quite nicely from 168.38, so it's a good trade if anyone took that.
Apple went against me.
Plenty of week left.
Off entry. I have time as exclusive, just said, but it's succumb a little bit. Is that can succumb be used that way? Is succumb a word? I don't think that's what, I think I just made up a word, but it succumbed to
it succumbed, but you can coin that.
Yeah, thanks. Yeah, I lost my head. It's succumbed. I'm gonna stay with succumbed. No, I'm joking. It succumbed to the Nasdaq. It's a big pull. Now it's outperforming though still. The way to tell, Nasdaq's down about 1.2%, and Apple's down 0.8%. So, but it's just such a heavy weighting. It is slightly outperforming, but it gave in. I know a lot of you have asked me about Adobe and stuff regarding its quick decline from its from the investors in Adobe's fear of what is it, Sora or Sonora? I forget. I have it written down somewhere. One of those two. The release of a new app out of OpenAI, the makers of ChatGPT, that's basically a feature where it allows you to text or use verbiage, and then it'll illustrate something for you. So the thought is, oh no, who's going to ever want to actually use the skill set of painting and being creative when you can just blurt something and it'll just illustrate it for you right there? Well, I'll tell you guys something. I might be an interesting case study because Wifey Banana is an incredible artist. I wouldn't bring it up if she wasn't. I just wouldn't say it. But she is, and she's good at Photoshop, and she's good at oil painting or just painting, and like incredible stuff. And if I thought about what I would text to that Sora or Sonora, whatever it's called again, and Sora, do something cool with Bruno, my dog, in the snow, blah blah blah. It's going to be completely different than what Wifey Banana can do. And what I believe is being missed there is the ability that Adobe is going to do with all of its AI strategies and things, it's going to be where people in the creative space, illustrators, graphics designers, artists, are going to be super powered. It's like putting on an Iron Man suit, and they're going to be able to like spit out more stuff and work through where they were able to only do 10 projects a month. They'll do 20. They'll be able to spit out better work and stuff like that. And then there'll be stuff like this. There'll be a market for it where you just text stuff and someone spits out something, but everyone's going to know that Exclusive could just text something and spit it out, and Josh could just text something 10 minutes later and spit it out. But what Wifey Banana will be able to do with AI on Adobe will be completely different than what the three of us text to that thing and it spits it out. And that might be good enough. Like, let's say Exclusive and I want to do some graphic for season 2, and we like, hey, Sora, Sonori, sorry if I'm stepping on the name. I don't think it's been around long enough for any of us to be emotional about it. But and it spits something out, and we're like, okay, cool, that works. And you're like, okay, cool. We didn't have to pay somebody $50 or $100 or $200 to do it on Adobe, and that's good enough for that. Well, everyone will know that's what we did. That's good enough for that. That's that. And then people who want to separate themselves from what will be that'll be the baseline. Get it? There'll be no change to the status quo. To sell Adobe's such a good buy in my mind for that reason. For people who are thinking more opportunistically, like a lot of us do in this space, is for the future. It's setting up very interesting in that regard. It's giving its pound of flesh. Maybe it's the first one to correct, as others will later. That's something to watch, and it's using this as a reason to kind of do what they were all going to do to begin with. But Adobe is this thing, like again, just think about it the way I'm laying it out here. It's gonna this thing of like, if we're all able to text that graphic, that's just the baseline status quo. That's not something anybody can use to make a commercial and put it on an NFL programming, or on some kind of side thing on Call of Duty or your other favorite video game, or some kind of serious marketing presentation for a brand or a company. They're going to be like, imagine that Exclusive, imagine that boardroom with like 16 people sitting around a big conference table, and a big marketing company that's like does hundreds of millions of dollars a year in rev, some big company out there hired to do some big campaign for a brand. And there's this presentation, and everyone's sitting there waiting for this presentation, and like, here it is, here's all the money we spent, and here's the way our brand's going to look and be featured. And then they present a text to Sora or text to Sonora thing, and people be like, what the fuck did you just show us? That's not going to work. So that's going to be that's just going to be the new status quo. That's just the baseline. We just sold off Adobe 50-60 points for a continuation of the status quo, raised up some tiny bar. That's not going to change anything. If we all can do that, the people who have to make money and separate themselves from the rest of the pack and market to consumers can't use text to Sora. That's something we could use on Twitter, or something you could send to your friend or to your grandma or stuff like that. It just makes it cool. Like, oh, now I'm a graphics art designer because I told it to do 5 things, and it spat out something that's close to what's in my brain. Awesome. So that's that. So Adobe is a huge opportunity if you look at it that way, and if you agree with what I'm saying. It like changes nothing. It's just hilarious to me. Google has a couple issues by possibly losing share in search if it doesn't get its act together. I think they are. Google is very cautious about being safe with AI. This is not conspiracy theory, but I just want to give you guys, I'm very open, so just give you what's in my head. And I've been doing some deep research. And a lot of like a journalist, I can't give my resources, but if you've been doing this for 25 years like me, and you ever become successful and you make $1 million, it might be worth it to take some of that money and hire a consultant or an attorney and figure out, like, I'll give you a good example. I had a lot to lose when there was the beginning starts of big cap tech being under all this antitrust, under all this monopoly. We're going to break you up. So I hired an attorney who specialized in that and spent the money. You see you see the level of what I'm doing. That's different than somebody like, oh, what put is exciting. I hired an attorney who specialized in that type of law to explain to me what this might mean for my portfolio. And then I researched it some more, and then dug in some more, and then created my own theories and analysis. Similar to what I do in the IT space, after doing this for so long, I've found people that actually do this for a living, and in a major way. And there's things sometimes that they can tell me, and that they can't. And there's things that I just pick apart from seeing how they interact and things that they do in their lives as well. And one of the things that I've been talking to somebody who used to work at one of these big companies, doesn't anymore. So I'm not giving any type of insider trading and stuff like that. It's not what I do. But Google had an AI team that was probably some of the best in the entire business. And that's why people find it quite interesting, to say the least, as to why they're quote unquote so behind. Or are they? And it's very possible, from speaking to some of these people, that some of them have gotten spooked as far as the capabilities, as far as hallucinations and AI goes. And it's understandable when you really understand the technology on the level that like these MIT engineers do. And I think, from speaking to a few people, that Google's just being more cautious and taking their sweet time, which the stock market just loves. We don't care, right? The stock market likes to break things and move fast, as Mark Zuckerberg famously quoted, because it just wants, rush to market, rush to money, figure out if it hurts somebody or does something wrong later. Make money now, worry about the outcomes later. I think Google's being more cautious about that exact type of scenario there. So I just wanted to throw that out there. And another thing is, Google's green while everything else is taking a big fade. I was going to use another word, but but that's something to watch. As Exclusive said, lower volume day after the holidays and stuff like that. You get to see, as the tide goes out, who's swimming naked. And Google definitely, it's been kind of along the school of thought why some of these rants are important or not to you. Earlier, when we were talking about some of the stocks that have given a little bit of their pound of flesh recently, right? We talked about Apple, Google specifically, Tesla being one of them. Google's kind of showing that, hey, I've already kind of been beaten up a little bit recently. Now you guys take your turn, and maybe I'm an interesting play because I'm a low valuation again. Everyone's already priced in all this great stuff for everybody else and thinks that I'm out of the game as far as AI. So similar to what Exclusive was saying while he was coming into the market short NVIDIA a little bit. Opposite, where, okay, maybe a lot of the AI has been positioned already, has been priced in to some degree, et cetera, et cetera. They have only to say something that can take away from this perfect story of everything's great, where Google has more of a negative story where they could say something that actually turns it to a positive thing. So they're positioned a little bit differently, NVIDIA and Google. So maybe, to Exclusive's earlier point as well, maybe portfolio manager out there is thinking what we've been discussing here in Spaces along the lines of exclusives mentality and my mentality, and they're managing, let's say, 800,000 shares of NVIDIA and 5 million shares of Google, and they go, my NVIDIA weighting has gone from 3% to 8.5%, and I'm usually not comfortable having any single stock above 5 or 6%, but it's NVIDIA, it's special. So where I usually keep things at 3-4%, like the way I did Google, now this thing, the way I started with NVIDIA at 3.5%, now it being 8 and 9. Again, my comfortability is around 5 or 6, but it's NVIDIA, so maybe I'll keep it more on the higher range of 6, when usually I start allocations at 2 and 3% or 3.5. I'm giving you guys, I'm not just kind of making shit up here. I'm wink, wink. This is how portfolio managers talk and think. And they say, okay, well, in that case, I'm not bearish on NVIDIA like Exclusive was saying, or me. I'm quite bullish longer term, but I'm going to just trim it. It's NVIDIA, so it's special. I ain't going to trim this thing from 9 back to 3.5 and realize a lot of profits and pay an exorbitant amount of, that's another word I think I messed, exorbitant or exorbitant. I forgot words today. So an exorbitant, one of those two, amount of taxes. So I'm just going to trim and get this weighting from 8 or 9% because it's grown so much, just down to 6. So I'm super bullish still. And you're seeing that guy trim that weighting down, and now they're like, okay, well, Google, as it's been pulling back, I started at 3.5, it's gone down to 3 or 2.8. So now I'm going to get it back up to weighting, because now if it says anything good out there, that's that, and I can take some of this NVIDIA trim and put it to the Google weighting, and that's what you guys are seeing on the screen, minus some algos and all the retail traders. But for the most part, the decision makers who have the whales, as we call them, are doing something like that, and that's what you're seeing. You're seeing that, and then the front running and other people who kind of know that's happening, so they're jumping on the coattails of that, so that's exacerbating the moves here and there, plus algos, and the market as a whole. All of that is the price action. Some growth portfolio manager out there trimming a little NVIDIA, adding to Google. You're seeing some of that on your screen. You're seeing the whole market come down from the seasonals from this point of February, just in general. You're seeing NVIDIA pull back because maybe you just run up a little bit into earnings too much. All of that's coming together on your screen collectively. And then the interest rates, and then the Fed speak, and then the Fed speak, and the minutes, and people being worried about that, and that lining up with the seasonals. You see how it all kind of comes together. And then how some things can outperform. Even a big cap tech against the grain of the NASDAQ being down 200 points. And I talked about that in the last spaces and kind of off spaces, and in this spaces today, and Exclusive's done a good job about talking about it. You'll see things that can outperform, even though they're in the sectors that are getting smacked around today. So that's something to make note of. And we've talked about this on other spaces, where this is a good time to make watch lists on bad days, right? This is a great day to do that. And the things that are kind of standing out, simply put, they're green today or outperforming in relative strength, not down as much, or they usually would be down $15 on a day like this. They're only down a couple. All those little things are kind of relative strength tells, clues to you on the watch list that when the market does turn back up, those will probably do pretty well. That's generally the case. Not always, but generally the case. All right. Dollar General did go to 145.38. I was busy ranting with you guys. I took a trim at that 144.70 area. I missed the trim at 145.38. Ranting with you guys. You see, sometimes I don't make as much money or lose money by sacrificing my time and effort for all of you. I hope it goes appreciated to some degree, but that's the status there. So I'm sure some of you have actually done better on my own trade than I have for those reasons. I'm okay with that as long as you guys are happy. Man, Amazon. I was hoping that a little bit like Google, even though it's run up a lot, it's giving a little bit back, that it was going to hang in stronger, be an outperformer today. I didn't bring it up as a trade. It's just something I was hoping for in the back of my head. Didn't play out that way. Why? Because I was hoping that a little bit of read through and pin action on Walmart having one of the reasons Walmart did well was it had very strong e-commerce sales. And it could be a piece of the market or some investors saying, oh, Walmart's, making a strong effort here, good push on e-com and having traction. Maybe it's taken a little share from Amazon. Couldn't be further from the truth. The last earnings, they're both firing on all cylinders. In fact, Walmart's just trying to catch up to Amazon to some degree. But and that's where people think that's where market share often taking does come from the people coming up from the back. But it's just that e-commerce in general from Adobe Analytics, it itself has been up more of late, especially since the holidays. Like I forget the numbers, but e-commerce had its entire record in all of history. I believe in December was the largest e-commerce number in the history of the market. So e-com is just coming back in general and growing, but Amazon getting smacked for it today. Hence an opportunity. It down $3. I don't see a shout out for an option this second for this week, but I am adding to longer dated strikes in my other account, so that you're aware.
Keep an eye on coin. We saw a really big rejection on Bitcoin when it rejected last week's high. So a lot of people were piling in at the open. I just waited for an opportunity to get a better price. But I'm in the 180 calls on coin for the week. Let's see.
Honeywell. I see a couple messages, people asking me about it because they off spaces. I've charted it and traded it here and there, and I've brought it up on some spaces. I think 3 spaces ago, something like that. The good thing is Exclusive records all our spaces, and he's going to do a nice little kind of packaging of all of it, for lack of better terms, when we're all done. So it'll be buttoned up nicely where we'll have a link that'll have like all the recorded spaces in one spot. So it's just easy for people, because sometimes people ask, is it recorded or how do I go back? It is, and you can do it through the search bar. I repost it often, but you can do it through the search bar on Exclusive's search history. X on Meta, do you remember where the underlying was on your entry originally?
Let me see.
The 469?
It was, let me look at the timestamp. 472.78.
Okay. Because I want people to keep track of something. This is like a side note. The market's pulling back today. There's technical things happening, things breaking, opening range structures or this or that, et cetera, et cetera. And we'll keep track of that stuff. But Let me see something here before 1 second. Yeah, I thought so. Okay. So it's kind of like this. Let's see if I can articulate this. So Meta ran real hard from honestly about 360 to about 410, 415, kind of unabated. And then, usually speaking, and it's kind of, you can see it by the action in NVIDIA today. Usually speaking, as a stock runs too hard into earnings, position wise, even on good news, sometimes it can give some of that back, or a lot of it back, or some of it back again. And then what did Meta do? Meta ran up hard. Even myself, I had like a pipeline of options. I had something shorter dated, medium, and longer term. And I took off the shorter dated, and then I took off a lot of the medium dated because of that same kind of structure. I'm like, shit, it ran up a lot, earnings for the the dance steps that we just laid out. Now it reports earnings, and the stock, what happened? We all know it ran up another $50, and then it's held those gains since. Why? Why did it break what's just generally speaking like, oh, it didn't do it that time? But again, you see something, it doesn't mean that somebody's wrong. There's no guarantees in this business. When you hear people talk, it's just probable statistics and generalities. Okay, when I post the bull flag, I've seen hundreds of bull flags fail. It's just generally speaking, that structure tends to do A, B, C, D, right? So generally speaking here, when a stock runs up a lot like that, it does that, and then it did something different. Why? Because the earnings was even more than what was expected. The story was even bigger than what was expected. And then something very quickly happened mathematically, because if you think it's a bunch of investors that very quickly figured all that out on the flash and then bid the stock up like and then put zillions of dollars to work to bid up a company of that size to make it move even in an after hours lower volume type of thing, most likely probably not. Meaning the algorithms were so fast to quickly calculate that the stock had just become cheaper again. And the way I'm trying to articulate this, and the image that keeps popping up in the back of my head, and maybe this will be a good or bad analogy, we'll find out in just a second, is a typewriter. Excuse me. And what happened was, if we think of, let's put a round number like a 30 forward PE, okay? Just for the purpose of this analogy. Doesn't mean it's exact. It's kind of near what I'm thinking and talking about, but just a round number, and it'll help us visualize this in our brains, okay? So Facebook goes into this earnings thing. I don't know exactly. I'll look back and maybe I'll do a little mini case study and presentation over the weekend or something like that. But just don't hold me to the exact thing. It's the idea and the structure that's important here. So let's say Facebook went into that earnings over a 30 forward PE. So I was pounding the table when Facebook was a 23, 22 PE and saying it's too cheap. And it didn't have its earnings report yet, right? And it ran up to 3, and then ran more from, as we just said, from 350 to 410. All right. And if you watched in real time, that PE, because they hadn't reported earnings yet, obviously that PE multiple was going up against a conservative, against the better valuation, against the more premium valuation, against the more priced in valuation, right? So it was going from, let's call it again, not exact, let's say 22, 23 times where I was pounding the table, and it went to, let's say, 32 times as it got up to 410 or 420, just around earnings. And then it reports this earnings, and it went up more. Why? because some math, and that's why Exclusive and I are big on this 4-letter word, right? Not always bad words like you hear me saying, but math is a 4-letter word to a lot of you, and to me, it's the best 4-letter word. I love math. My mom instilled that to me in a young age. I love math. So very quickly, some algorithm out there, like a typewriter, why I use that analogy, all of a sudden, right? Let's say a Facebook Meta was that 23 PE, and the typewriter went all the way to the right, slowly typing, moving slowly, all the way to, it got to the end, to that 30. Is like, okay, we priced it in. And then what happened was the typewriter just reset to the left. You guys are still seeing a high price. You're like, oh shit, I got a short Meta, or it's got to come down and pull back. There is profit taking, there is positional thing. But you got to picture a river running one direction, and sometimes the salmon can swim against the stream, and how much the river's going and how fast the salmon's swimming against that is called cross streams, and you are going to deal with that all the time in the stock market. Welcome aboard. That is the price of admission, literally. Okay. You will never have the river running 100% this way and the salmon swimming 100%. And you're like, oh, this is a obviously perfect 100% easy breezy trade this way. And now I know this fish is going to. No, that's not. It's always a tug of war. And one side's just ever so slightly pulling and you're trying to figure out, is it 60-40? Is it 51-49? Is it 55-45? That's your job. That's what if you're here listening to me, that's what you're about to embark. If you're like, I want to get into trading, I want to become successful, I want to supplement my income, I want to do this. I've been supplementing, I want to be a pro like Banana. Any version of that, this is the educational process and the price of admission and cross streams and tug of war and analogies and these things, these multiple balls in the air, all these different quotes I just said, you're going to have to keep track of. That's going to be your job. And it's not going to be easy. So somewhere, going back to the typewriter analogy, somewhere in there, yes, there's been profit taking. Some institutions said, yeah, even this thing's a 22 PE. My job still as a risk manager, first and foremost, is the thing also, like the Nvidia example, has gone up from a 5% weighting to a 7% weighting. I feel the valuation is still attractive. So I'm not going to trim it back to like 3 or 4, which is like the starting point where growth portfolio managers usually like to start, or even around 2.5. But they'll say it's special because of all these drivers right now, and the valuation basically just reset itself because it's got more money. Okay, so it's no longer a 35p, it's back down. That's why I pulled it up. It's at a 22.90 forward PE right now in real time. I have my brokerage in App allows me to track that. Not everybody does, but sometimes it's after it's tabulated after that day or that night. Everybody's thing is different, but I'm seeing it in real time, and it's back to 22 times forward earnings, forward PE. Okay, that's too cheap for what is at least the guidance for the next 4 to 6 quarters from the company on its full year guidance and the outlook. Okay. And then if you're just following digital advertising trends and understand that deeper part, which I've done a job on kind of talking about in the markets, then you understand that tailwind as well too, right? Because at the end of the day, it's a digital advertiser, and understanding digital advertising trends will allow you to know if there's headwinds or tailwinds, which directly affect companies like the Trade Desk, Snapchat, Pins, Meta, and Google as a few examples. And Amazon's digital advertising business is the largest growing digital advertising business, I believe, in the world, for sure in our American public markets. It's growing faster than Google and Facebook. That's a fact. That's not my opinion. So, market's getting dunkier here. I see it. I know you guys are probably worried. if you're wondering if I'm losing or making money, let me help you real quick. I'm losing a ton of money right now. Okay. I got a couple of trades working. We focused on this. I always want to find something that's going against the grain for my little brother who day trades or scalps and stuff like that. And I'm making a little money in Dollar General, blah, 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 blah. But I'm losing a lot more than I'm making. If I went to cash every single day and then 100% cash, which I don't do, and then traded just that every day, then I probably would be up right now or stuff like that. I'm happy to admit I'm taking it on the chin very hard. All of you know I got big positions in Amazon, big positions in Nvidia. You've seen me take a lot of profits recently. That's why you see me clean up a lot of shorter dated contracts unless I'm like in an active trade for that moment, like a UNH or something that I just posted about then. But on my portfolio as a whole, everything that started to have like February expirations, March, and things like that, you saw me. You saw me post it. You saw I had NVIDIA call 700 strikes that I sold at the 735 to 740 range that were very deep in the money that I've had for quite some time. Some of them expiring even last week, what would have been this week, and a couple weeks into March. I what's called cleaned all that up. I made money there. I took it down. I didn't know if I was going to exactly perfectly time it. Then I started a couple placeholders with those 800 strikes in June. I knew not to go all in. I didn't take, let's say I made 200 grand and put 200 grand into those June contracts because that would have been stupid. I put in to start, let me pull it up. I'm down 15 grand on that. So it's 40 now. So it's about 55K initial investment. So you see, I didn't put all 200. I put 55K, and then I'm down 15K. Then you heard me say I added another contract. They're expensive ones. They're $4,600. So I added one. I didn't add 10. Put another 45 Gs. So I kind of like gonna feel it out a little bit, and then I'm gonna lay into it at some point or add more to it, and then that'll just be that for that thing. And then if I see the setups in the shorter time frames reset themselves, then you'll start to hear me discuss like I did with Nvidia from 500 to 700. I think I did a pretty decent job trading that here. There's times I messed it up too, even as Nvidia had that run. I remember I had like a week where I had options go a little bit worthless on some, and some just broke even when Nvidia within the last 2 months had this run. So even within 2 months, but when I look at week to week to week, let's say like out of 4 weeks, let's say I made 10 grand. Each week, 1 week I gave up 10 grand, right? So out of 40 I could have made, I gave up 10 and then lost some along the way. So maybe I made 20 or 25, something like that, you know? So it's just round numbers. So no one's perfect, and I don't claim to be. And I'm taking a huge loss right now on a lot of names, knowing very well that this is the charting it, discussing it with you guys. So, well, banana, if you knew that right after February, why didn't you do? Because no one knows exactly. So there are traders, maybe you're in their Discord or maybe you listen to them or they're out there that they just go to cash 100%. That's not me. Okay. I wear all different hats in this market. This is my life. I don't have another job. This is all that I do. I used to have multiple businesses and a real estate development company and bars and restaurants and a nightclub, et cetera, et cetera. And it all started from scratch. Aquarium businesses. I've discussed a lot of this with you guys. For new listeners, it's all new. But the point is, I like to create different businesses like I used to have in my life now within the market. So like day trading is like one type of business, swing trading is another thing, investing is another thing, scalping or options trading is another thing. And in one of my accounts, I do covered calls, so that's a option selling strategy or income strategy. So I have a couple different hats that I wear in this game, and I try to at least portray that to you guys as best as I can, so you can see along the way that there's ways to short-term trade, even the things that we like, and then create an ability to use that as a structure, a vehicle to set yourself up for long-term investments. You've seen me in front of your faces live do successful and unsuccessful, this is important, short-term option trades. But when I put the two together, it was profit more than there was loss, right? And I took that profit and I found a portion of that, like Exclusive does, to get into another trade, short term, and take a piece of that and say the following. And this is something I try to analytically and philosophically explain to you guys is, let's pretend we got lucky. We used hashtag more homework, but at the end of the day, anything can happen in this game, and options are risky and they can go worthless. So you need hashtag more homework. You need to develop strategies that can give you the probable statistics to succeed, but you need a little bit of luck. You need a little bit of that on your side. And so then I say to myself, I did the right work. I put it in. I got rewarded, but I also got lucky a little bit. So let me take the work money and put it back into the business, the banana business of the different hats I wear, and find some other way to make money out of this thing. But let me also remind myself that I got a little bit lucky and take a little bit of that lucky money and put it into something that isn't lucky money. And that's a little bit oxymoronic, but just trying to create mental visualization. And what that means to me is, yeah, we all can get high when we're geniuses. We're like, oh, I'm the best chartist. I'm a great technician. I'm perfect. Everything's going my way. I knew it. I charted it. It went exactly along the charts. You know, so be it. But if you could, it we all human beings, we do that enough times. We get caught up in our own hype, and you have to catch you. It's a mental. You see, oh, I'm getting a little too excited. You catch yourself, and you said you humble yourself, and you say, I got lucky a little bit too. What can I do about that? You take that lucky money, and now I say to myself, okay, let's say I traded a weekly option, okay, and I put $1,000 at risk, and it doubled, or made 50%. I made $500 or $1,000 in this situation. Let's say it's $1,000 just for the purpose of the round number, right? We like to take trims at 20, 30, 50%, but sometimes these options, they're highly levered. They have a chance to work out to 100%. And we take it down. Now we made $1,000. Sometimes, and I do this still to this day, I try to do it less. That's what separates me from my earlier days. But in my earlier days, I would just give it all back. And one of you out there, and a lot of you out there listening, be like, that's me. And it's me too, sometimes. Okay. Again, I just try to do it less nowadays, but I still make mistakes. If you think professionals are perfect, we're not. And so, anyways, I made this $1,000 now, and the old me, or the some of you out there, will be like, well, now I have the $1,000 I originally invested, and now this new $1,000. I'm not only going to just put the $1,000 of just profits, I'm going to put 2,000 on the next trade, the original 1,000 and the new 1,000. Let's see if I can turn this into $4,000, like I just did with the 1,000. And then what happens is that option goes worthless. And now the original 1,000 and the new 1,000 are both gone. Okay. And Exclusive and I have done a very, okay, I call balls and strikes. I'm very hard on myself. You guys know my biggest weakness that I pointed out is being a perfectionist. It's my Achilles heel. But we have done a very good job in this spaces particularly. And it's different from other spaces sometimes. of being very careful about risk management and moving our trades through the trade structure, having a profit to use that profit to create intrinsic value and new trades to take on, and allowing a short-term trade to give us the ability to facilitate another short-term trade, an intermediate term trade, longer dated slightly, and a longer term dated trade, plus the start of a share. That's what we've done in this spaces, actively live in front of you, to prove to you it could be done, to prove to you could do it along the way, as we have done it. Like my brother has followed some trades. I ask you not to follow our trades for obvious reasons, because when sometimes you get into it, it's different, the speed of it, your reaction function and stuff like this. Every person's different. All right. But for the most part, we've done a real good job on what I just laid out. And that's why I wanted to tie that back to the lucky and unlucky little comment. And now here's a better way that we've done it here actively in front of you guys. And it's just a reminder of why I wanted to talk about it on today's spaces, and talk about maybe the way I look at options and the types of strikes I go to make what I just said happen. But on what we're just talking about, let's say now let's redo that model, right? And the way that Exclusive and I have done it on the spaces. And now we got that lucky double, right? We got that $1,000 we invested and we made 1,000. We got $2,000. And now what I'm gonna do is that $1,000 in principal, it's gonna stay there. All right. And now I have $1,000 to quote unquote play with. Okay. But here's the thing, and this is important. If you're going to embark on this journey to be better, to maybe at the hope of becoming a professional trader or an active trader or supplementing income, a part-time trader, excuse me, then you want to not only look at it what the way I just said, and I'll make it all make sense in just a second. So we have that $1,000 we invested and the $1,000 we just made, and we call the original 1,000 principal. Well, we want to grow here. We want to become a professional trader or part-time trader, or at least supplement our income. You wouldn't be listening to me otherwise. So we want a piece of that $1,000 to now become permanent principal. We want to grow, okay, cautiously and with the right amount of risk, because without taking that risk, we won't grow. So I want to take $200 of that 1,000, 20%. Write this down, all right, and make that permanent principal, so that now when I look at my account, it's up by that much more permanently, at least until the next time I decide to fully invest that principal. But I have made principal grow. Now I don't have $1,000 to play with. I have 800 to play with, because now I'm adding to my principal. And sometimes I've done it in certain trades, and I say I made that $1,000. I go, that's what I got to play with, and that was smart of me. And I'm going to put my principal away. I have the house's money. Well, if we want our own house to grow, we have to make some of that money to play with that we made now. Some of it has to go to permanent principal. Again, I'm being honest with you. I make this mistake all the time. I do it every week because I just have so many trades and positions. Just over the majority of them, I've gotten better at adding principal to money to quote unquote play with, and have grown my account. And then there's times where I fuck it up and I'm like, God damn it. I thought I was done with this mistake. And I say this to myself every single week. But I say this to myself every single week. I will not say this to I remind myself constantly. Okay? So that's that rant. Now to tie a couple of things together here. On that thousand, let's stay with that $1,000. So $200 now is permanent principal. So now I only got $800 to quote unquote play with. I don't want to immediately use that $800, and I make this mistake all the time, right into that week option if it's a specific stock, because specific stocks don't have ODTE, they have weeklies, or an ODTE on an index. All right. And then saying to myself, okay, if I go $800 now on IWM ODTE or QQQ ODTE, I can maybe make this $800 really fly. And I've done the right thing so far, Banana. I put $1,000 back. I even took your note and added $200 to permanent principal. Just let me at it with this 800. Come on, let me at it. Well, sure, if you like, but probably the better thing is going to be the next thing you should write down. And what I would like to do with that $800 is now, again, I just made this $1,000 off an ODTE or that week's thing. All right. And I knew how to do it. I can just repeat it. But for the win, right? $200 went to permanent principal, 800 is left to quote unquote play with. I don't want to put all 800 short dated. I just had the market and my trading acumen give me the ability to set up a pipeline for once or to continue a process I've developed. If it's the first time you won that $1,000, you have the chance to set so many interesting things up for yourself. You now have the $200 permanent principal model. And now instead of the $800, let me at it. I did it conservative. Let me at it on another ODTE or another thing. Not the whole 800. Sure. Let at it. You did good on this one. Why not see if like an NBA jam, if the jumper's hot? Okay? It's called the heat check in the world of NBA. They'll pass you the ball one more time to lob up another three-pointer in two guys' face just to see if the heat checks their shirt. All right. But you don't want to do it when your team's behind 10 points in the end of the third quarter. There's times to press on the gas and there's times to press on the brake. Right? So in this situation, I'm letting you at it. Go full bore. Have fun. Go full ODTE, out the money, gnarly trade. Okay? $200 is allowed. Now, you've only got 600 to quote unquote left to play with. Now the other $200 should be a better short dated structure because you went balls to the wall, ODTE, or that weekly. Short dated is still 3 weeks out, 4 weeks out, 2 weeks out. Still short dated. All right. Very short dated. You start to have money moving around. You start to get nervous about stuff 3 weeks out. And I notice a lot of you traders, and it's always new. This is like how people can tell, professionals can tell. Like when I go snowboarding, I've been doing it for 35 years. I can see where somebody belongs or doesn't, and I act like as a professional now. I helped two people get out of a tree wall yesterday because I'm like, you don't belong over here. Let me help you. Let me help you get to a spot where it's safer. They're like, thank you so much. That's the job of the professional, to help the other person next door. Right? That's what we do here. We give a fuck here. We care. So now that $200, I want you to think, because the novice trader is like, oh, yeah, I usually take contracts a day out. I learned to take contracts like 3 days out a week, so it's like much more longer dated or like better structured. Like, no, it's not. That's like some falsification you're telling yourself. Fucking 3 week dated contract will turn on you on a dime and you'll be trapped and stuck in that fucking thing, not knowing what to do with it for the next week or two until it finally goes worthless in your face. That's the reality. I want to talk real here. Cursing, the ill nana. of the stock market that you're dealing with. Okay, that's why this structure I'm talking about, it's important. It saved my life, literally. I used to do the same shit you guys all do out there. I made that $2,000. I'm like, well, how do I turn this into 8? How do I turn the 8 into 16? How do I turn 16 into 32 real quick? And I promise you the following 2 things. There is a way to get rich quick, but it's by not getting rich quick. I'm 45 years old. I'm a multimillionaire. People tell you to get rich slowly so that you save up for retirement, so that you have $1 million or 600,000 or 700,000 bucks, or maybe 2 million, so you could call yourself a multimillionaire saved up at the time of 65 and 70, so you can allocate a percentage of that for till you die to live off of, so you don't have to work anymore. Okay? And you're telling me that a 3-week or 2-week dated contract is like an investment or cool or a good structure, or I've changed up my habit from going to 2-day contracts to a week out. You understand you're playing with from like fire to like fire, like whatever. I'm out of analogies. All right. That's gonna screw you up forever and ever and ever. It's actually not going to make you rich quick. I promise you there's a way to get rich quick, and it's by creating the right process. You'll start to compound and it'll get rich quick. So it goes kind of like this. And this is not an exact theme, but just to drill it into your brains. Okay. It should be where it's like, let's say, like kind of slow for 2 years. Okay. All right. And then it starts to pick up pace. 3rd year. And then the 4th year, you're seeing you there's something that happens, and I'll talk about this on another spaces one time, but you see an excitement. Okay, I'm actually going to bring up this person's name because I love him to death. Okay, Casey has become a great trader. He's starting to rake in dough left and right. All right, but I'm a little bit worried, and I hope one of his good friends says this to him, and I hope he has a chance to maybe listen to this recorded spaces, because I love him like a brother. You got to catch yourself when you get excited, because what often happens, and he's about, I think, in that area of like the third year, 4th year, it all starts to make sense, and you get a little high on yourself, and you got to catch yourself, because what will happen is you start to kind of develop this thing where you're omnipotent. I think that's maybe the right word, but you can't be broke, you can't be phased, and you have to constantly believe that even though you've developed a good process, that something's coming around the corner to whack you. And the way I've developed that process is by getting whacked a bunch, thinking like, oh, I'm on a streak. I was on streaks for like years, and then like something happened and like it humbled me. All right. And you got to do that. And the way to do that is by setting up investment structures that are very long. Okay. And the way to do that is with shares, something that cannot expire worthless on you. And that's where I talk about the lucky money to unlucky. It's kind of the wrong word because it doesn't mean unlucky, but taking something, if I buy 1 share of Apple, no one can ever take that away from me. It goes down $20, fine. It goes up $20, fine. No one can take that from me. Okay. Not my own stupidness from getting high on myself as I'm in my 3rd or 4th year and I'm now hitting my stride. And something's going to happen to if I have the ability. That's why I brought up, because he's such a good trader that I want him. I beg of him, one of his friends, Josh, tell him to start putting some of that money. He's making good money now into something that isn't an option, something that's a share, something that is like a portfolio book, very conservative, blue chip companies, dividend. I'm worried that, the $5,000 made on options goes to another option thing. I know he's smart in not doing that, but I just want to make sure, because I love the kid to death, because he's a nice kid, and that's that. All right. And he quit a job that's a difficult job, being a cop, to risk his life on this. So it's mad respect for the guy. Like, I love the guy to death. And I want to spend a second to I usually don't like to bring up a person by name, but he's such a great person, and he's doing well right now, that I really, really want that to be set up, that that he doesn't go through the same pain that maybe I went through, something like that, because he's in a different level than a lot of other traders. He's becoming more advanced, etc. So that's just that. And a lot of you are on that level. A lot of you are super professional traders, do better than me. Again, exclusive spaces and I, sometimes it sounds like we're talking to the novice trader, because a lot of you are. But our spaces is so different, unique, right? I mean,
Yeah.
you guys don't see the DMs. Him and I go back and forth a lot. We're very close friends outside of here, but we have literally, I don't want to say it because they kind of, like, some people ask to really be, but like wealth managers, I could say, like hedge fund, like people who manage money are in this spaces with you right now, who's maybe just learning to trade. Why? You think they don't have something better to do? You think they haven't learned all of this? You think they don't know what I know? You think I'm smarter than them or something like that? I'm not. They just find it uplifting, refreshing. Sometimes when you educate or hear other people educate that are on your level, it reminds you of something. Like when you, like, teachers are really smart because they're constantly, teaching a fifth grader this stuff, and as they're teaching it, they're learning it or relearning it or rememorizing it. So honestly, I thank you guys, the audience, because these rants, I know they mean something to you, because exclusive and I see you guys' feedback. But even more importantly, I know that it fulfills me, and it fulfills exclusive. I'm speaking for him because we've agreed on this outside of we're on the same page as far as that goes. We could talk, we can speak for each other when it comes to things like this. The guy's a genius, my partner in crime here, exclusive, and a lot of times figures out things and fills in my weaknesses and stuff like that. But on this, I can confidently speak for him, because we're fulfilled when we have that gambit of that professional money manager, okay, to professional full-time profitable traders, to traders just becoming profitable, to a bunch of you still losing your ass and being honest about it. The whole spectrum we have here. Why? Why? Something we're doing here speaks to all of you, okay? Because this guy is this day trader scalper. This guy is a swing. I'm talking about exclusive. See, he wears all the same hats that I do. We spoke months to see if we were the right mix for each other for this spaces, because in getting to know all these different characters of FinTwit, there's people that are incredible at their niches. There's people who wear the multiple hats, like exclusive, like a Mikey, like myself, like many others. There's people who are just dedicated to technicians. And this brings me to another subject that I just want to also touch upon, which is important. Very, very, very important. Okay. I want to overhang it here. X, just jump on my toes whenever. I want to overhang it here. And I'm just going to kind of take a break because I can tell my throat's already getting raspy, et cetera, et cetera. But here's an overhang right now. All right. Forecasting, charting, trading are all different things. You become a master when you can put all those different things together. Okay. Like doctors that have to become a specialty in the feet or the hands or the brain or the stomach or the heart, etc. And doctors that are emergency surgeons that have to know a little bit of it all. Okay. The stock market, I feel is just like that, where you can be an expert surgeon at a particular thing and make a crazy living like that specific surgeon that does nose jobs can. Or you can also wear many hats and know a little bit of each surgery. It depends on what you want to do. But I believe in my heart, and this is why I believe it's important, this overhang, that you have to at the least attempt, like those doctors have to learn all the different things to be able to recommend if you need to go see a stomach specialist or this type of surgeon or that. I believe that you will give yourself the best possible chance if you at least, before only being a scalper or this, understand or give yourself the opportunity to understand all these different things I'm talking about. And then you choose to say, hey, I'm a surgeon of the nose. Okay. I'm a day trading scalp, but I know to develop my invests. That's where I'm going to make my millions. But I'm going to put some of those millions away in a blue chip, in a cover call, in a longer dated, in something that can't be taken away from me, in a treasury, maybe even. So you don't have to worry about trading as you get older. So those things are very, very important overhangs. Is like, who do you want to be in this game, right? And the way to understand who you're going to be in this game is if you at least try to understand all these different hats that Exclusive and I wear or talk about in these spaces. And I believe, and why I wanted to tie it all together, the connective tissue to it, believe that is why we have that spectrum, that gambit of the professional money manager to the new trader. Because Exclusive and I wear all the hats, that the nose surgeon finds room for himself in our spaces, that the scalper finds room for themselves in our spaces, for the person learning education about the stock market finds room for themselves in our spaces. And then for the professional out there who deals in size, who finds it refreshing to hear another person talking about size or weightings or somebody trimming 7 million shares down, how the market's reacting to that, big macro concepts, big trade concepts. We try to at least give you all of our hearts, all of our education, and all of our mind. And I think that's why we have such a range and such an interesting feedback. I'll leave it at that for a second, X. I need to drink some water, but I'm going to start scanning. I'll start ranting again, but I'm going to take a break for just a minute here.
Yeah, sure, man. I've just been drinking water, looking at stocks, updating trades, etc. So I'm pretty sure I'll find my rant here in a few sentences anyway, so it's all good. And I mean that's it's really true. At the end of the day, everyone has the wherewithal, everyone does something similar. We're all here to make money, we're all here to learn, we're all here to grow. But what I kind of want to address here is some of the questions and some of the concerns and some of the experiences that aren't necessarily good or bad, but they're just experiences that the listeners have had over the past, month and a half we've been doing these spaces. And I've noticed a trend, and I've spoken to this before, but kind of briefly. Every single space I make a point to go over crafting a plan, figuring out what strategy works for you, and going over your time horizon on it, whichever trade you take. And for today specifically, I'll talk about coin because the 180 calls, and then I'll go over Meta and Walmart. So at the beginning of the day, we were talking about things that were moving pre-market. If we're talking about a specific stock or crypto, bond, whatever, commodity, who cares what it is? If we're talking about something specifically and you choose to either one, take it with a grain of salt, or set a plan into motion, or even formulate a plan. Let's go a step back and formulate a plan. That means you're taking what we say to heart and at least implementing it into devising some form of strategy or plan. Bitcoin and Walmart were the only two things that I talked about pre-market, other than, I think maybe it might have been pre-market where I talked about Nvidia. Correct me if I'm wrong, Banana. But there was only two things that I was looking at even into the open. So of course, trading Walmart for me personally wasn't shouted out here or anything like that. But Walmart exploded at the open and then sold off. I mentioned on the spaces here, I would take a scalp back into 180 calls. Using profit from previous trades or other trades, like, because I'm trading SPX all day, every day, as well as swings that are, 3, 6, 8, 10 months out. You have to understand that you can't put all your eggs in a day trade. You can't put all your eggs in one basket. And we talked about this the last two spaces about diversifying. And one of the recurring themes of whether it's a DM or a comment on the spaces or a reply somewhere else and I'm tagged in, the same stuff is consistently repeated no matter how many times we go over the space. And that is, if you're in a trade and you have not defined your risk, you are trading blind and you have no idea what you're doing, that is going to cost you money. Every single time, it is going to cost you money. And when I say that, it's not to be cruel. It's to say that you have to be willing to admit to yourself that, okay, you know what? Let me take a step back. I am rushing instead of taking the time to learn and formulate. I am not taking the time and I'm jumping in blind. So, in the case that ties into today's space is where coin, the 180 calls went into profit and then they went red and now they're kind of stumbling around entry. Meta went into profit, good profit, close to 20%, and now it's back below entry on the rest of the contracts if you still have any. Or if you have a small account, you're not taking a loss more than 5%. That's what we've gone about a few times now. Sizing for zero is a privilege. And I think that that's something that we don't really address enough. You can define your risk using options because it's an investment vehicle that has an expiration, meaning you can understand 100% of what you're going to lose before you ever make a trade. And you know when you can lose that money by because there's an expiration date. If you're not defining your risk before you enter a trade, no matter what it is, how can you possibly expect to know when to exit? Because if you can't define your risk, you can't define your profitability. Because you're not thinking clearly, not because you can't do math or read a chart or understand how a stock moves. It is psychologically tormenting. It is torture to be in a position that you don't understand and watch it stay red before it goes green. Or even worse, go green and then go red because you were too greedy to take profit. Or you didn't understand that it was time to take some off the table or close the position entirely. The person that consistently compounds 2.5, 5, 10% returns is always going to do better than the person who puts 10% of their account into one or two trades, and then one of those two trades go red, and they get into a psychological state that is torture. Because the market, whether you want it to or not, whether you admit it to yourself or not, I didn't admit it to myself when I first started. I thought I knew everything, and the market humbled me really quickly. And a recurring theme that I see in comments and DMs is I was doing really good for a week or two, and then I got clapped on SMCI. I got clapped on XYZ. And those mistakes happen because you're not admitting to yourself that you're not taking profit, especially if it's on a position that was in profit. If you went and got a Powerball ticket today and next week you won the lottery, would you go back to the gas station and say, can I get another ticket and then I'm just going to leave these 2 on the counter here, and I'll come back in a day or two, and I'll see I'll make sure I'm still winning the Powerball. That's what you're doing with these positions. You're paying more money to lose more money. If you're in a position that was green, that is now red. Because being risk-free on a position is a privilege. And if you haven't done the compounding on your account to get into a position where you can, or not a position, get to a point in your account where you can hold positions risk-free from the get-go, you have to do the work to get there. And consistent compounding is the only way to get there. There is no quick shortcut. There can be a very short-term shortcut to profitability, but it's not sustainable. There's about 245 trading days in a year, and I see it across FinTwit. People are talking about compounding, but they're not talking about true compounding. You can't make 5% every day, otherwise you'd be a trillionaire. You'd make more money than the entire country can make. Consistent compounding consists of making a profit, taking some off the table, and taking some out of your account, or moving it to a different investment vehicle. If I make a simple goal of 2.5% for my entire account, which is a huge day, that's a crazy good day. If I start with 10,000 and I'm only targeting a 2.5% gain, that's $250 on a return. Regardless of what the amount it took you to get there, it should only be 1 to 3% of your account. The 1 to 3% rule is designed by the best traders of all time. It is practiced by the best traders of all time, and it will die with the best traders of all time, because someone like me, I will take it to the grave, because as soon as you outsize and you trade too much, that's when you lose more than you make, and instead of consistent profitability, now you have consistent unprofitability, and that is not what we want to do. We want to change our way of thinking. We want to get in the habit of taking profit in small doses and keeping profit in small doses. How do you do that? If I made 2.5% on my account, and I have a $10,000 account, which means I'm up $10,250. So I have $250 in profit. I'm going to take $225 of that profit, write it down. I'm going to take 90% of my profit and keep it in my account. But I'm going to take $25 out and I'm going to put it in my savings account. I'm going to open a separate savings account and I'm going to put it in there. I'm going to open a dividend sleeve and set it aside for when I'm ready to purchase some dividend stocks and get rewarded for saving money. Putting it in savings gets rewarded in the form of interest. Putting it in your IRA, you get rewarded in the form of interest and future retirement, tax-deferred gains, right? We're looking for the future of our investments. We're trying to reap the benefits more than just today, more than just this year. We're looking for long-term sustainable profit. That is the reason why you should be trading, not to get rich quick, to buy a Lambo or a nice watch or eat a fancy dinner, or, you know what I mean? That stuff comes naturally if you do the right things and you put the right habits in your brain and you do what's consistently maintainable.
Exactly. Well said. I just preach.
And thank you. And it is going to take time. It is going to take a long time to build the habits, to learn the consistent habits of taking profit, cashing out, and reinvesting. Meaning, day one, if you're aiming for $250 on your 10,000 account, 2.5%, the next day, we're targeting a $255 gain. The day after that, we're targeting a $261 day. But now, if I've made my 2.5%, my size is slowly growing, my profitability is slowly growing. And if I have a small trade, I'm only losing 1 to 3% of the profit that I've made previously. So one trade is not going to ruin my week. 10 trades is not going to ruin my month. 100 trades isn't going to ruin my year. Over sizing, over trading is what's going to ruin your profitability. So if you're trying to grow your account quicker than it's capable of doing so, for instance, I'm looking at a comment right now on the spaces. What's going on with Meta? Okay, that's a perfect example. And if you know I'm talking about you, I'm sorry, I'm not calling you out, but it's a good teachable moment.
Yeah. Yes.
If something's at $390 a contract, first of all, your account should be over 14 grand if you're taking a trade of that size. Because if you're not trading with more than that in size allocation for the day, you're oversized. You're over leveraged. One trade that's down after being up 18, 20%, if it's down 20, 30%, you're going to freak out. You're going to panic. You might sell at a loss only to watch it come right back up.
Which is exactly what happened.
Keep in mind, defining your risk isn't always sexy at the beginning of the trade. A good trade works instantly, right, but a great trade requires conviction without deviation.
That's a great line right there, X.
And I've been doing spaces now for almost 3 years, and I've remained consistent in my thesis and how to manage things properly, because it doesn't change. It can't change. It's simple math. But what I want to get in more depth is the compounding portion of it, because that's the kind of portion of it that gets a little bit misconstrued, because I see multiple ways of it being discussed. The way you consistently compound is invest, reinvest while taking profit out. So does it take a year, 2 years to make a lot of money? Absolutely. Is the first 2, 3, 4 months going to take longer than the last 2, 3, 4 months? Absolutely. It is a lot easier to make 100 grand with $1 million than it is to make 100 grand with 100 grand, right? One of those is a 10% return. The other is 100% return. But if you don't do the things that requires math to get there, how can you possibly expect it to get easier? If you're not willing to do the things that take determination, consistency, discipline, patience, how do you think you'll get to the point to where it's easy? Easy isn't the right word, but I'm just saying easy in the form of the math is a little bit easier to comprehend. But week over week, you shouldn't be looking for a huge return. Let me use the 10,000 because that's an easy number to remember. If I'm trading a $10,000 account, I'm looking for maybe a $700 week. Okay, that is a phenomenal return. If you can make 7% on an account in a week, and I see it every day. I see it on trades where people, make 7, 10, 100,000, 10,000, 100,000% ROI on options, because it's designed that way to where you can have low risk and high reward. But people are trading options that are high risk with over leveraging. And that's why one trade blows you up, or one trade mentally defeats you. I would be only looking for a $700 gain week 1. Week 2, if I can increase my size, my percent gain isn't changing, but my balance is going to grow a little bit more rapidly, because now in my second week of trading, my earnings are going to be elevated to about maybe 85 to 90% of what it was the week before. So instead of making $767 in week, let me do the math real quick. So instead of making $767 in week 1, now because I've got $690 in profit and I've cashed out $76, it may seem like a small number, but bear with me. At the end of week number 2, now I've earned about $1,400. I'm going to reinvest $1,260 roughly, but now I've cashed out $140. So now my trade account is up $2,000 or 20%. But now I've got money outside of my account that's slowly building. And that's using the 90-10 rule. the 90-10 rule. I'm reinvesting 90% of my earnings, but I'm keeping 10% of it. If you want to do your taxes automatically, just do the 60-40. Depending on your tax bracket, I'm used to paying close to 40%, but depending on your tax bracket, it'll be lower. But just use simple math. Okay, I made $100. I'm going to take 40 of it out. I'm going to keep 60 in my account. Boom, move on. Out of sight, out of mind, right? Within the first month, right? We're talking business days. We're not talking about calendar days. We're talking about trading days. Your first month, you'll only see about a 17% return at the end of the day. In month 2, you might be close to 86% on your account if you're doing the right things. And obviously, this is if you're only winning, right? If you sprinkle in some losses, it might be a smaller number, but the point is to make more than you lose and you don't stop your forward progress. So now 3 months have gone by. If you've done the things correctly, and obviously I'm talking about winning only, but if you've done the consistent 90-10 rule, your account's now worth $30,000 and you've cashed out $1,300. Every month preceding that, it gets a little bit bigger. The 4th month, your account's at $50,000. The 5th month, your account's at $79,000. Then $132,000, and then it ramps up because now you have more money to allocate. You can take out more and you can reinvest the remainder profits. Now you're at $215,000. By September this year, I'm using real months now for this year. If you consistently did your job the right way and reinvested 90 and took out 10%, now your account's at $343,000. By October, it's $573,000. And these are incomprehensible returns, but they're based on the 90-10 rule. It's not going to be you make 5% every day and you reinvest 100% every single day and you build, 5 turns into 10, turns into 20, 20 turns into 40. That's not realistic. How are you going to pay for your taxes? You've never taken money out, right? You can use a 50-50 rule if it's easier to make sense of it. The point is that you have to do it consistently. You can't go in one day and be like, I'm going to go ahead and size up 20%. And I'm not going to take money out for my taxes. I'm not going to pay myself. I'm just going to put my profit, all of my profit, into the next trade. Now you have a red trade that goes against you. Now you're down 30%. Oh, shoot. I just ruined 2 weeks of progress because I deviated one time. And that's what happens with traders every single day. I have the conversations with you guys every single day. Well, I was down 40%, so I cut it. Okay. Did you cut it because you were not willing to admit to yourself that the trade was working against you? Did you cut it because you didn't have another trade to cover your investment while it's still red? Or did you just bag hold it and over leverage, and now you can't sell it because now if you do, the realized loss is detrimental to your account? Compounding is the secret sauce. Everybody wants to know the secret. Compounding is the secret. It takes a while, but eventually your account can tolerate more losses. Your account can tolerate bigger losses. The point of it is to get to the point to where you can afford it, not doing it before your account's ready, because that is how people blow up their accounts. That is how people get out of trades before it's had time to perform. Because if a trade's red and it's 30% of your account, of course you're going to freak out. Of course you're going to cut it because it's too big of a loss. Why wouldn't you? That's the way the market is designed, to take away the money from the impatient and give it to the patient people. But how you manage your account moving forward is what will define you, not what you used to do. Instilling the right habits, the right disciplines, and moving forward, you apply them to your day-to-day. And if even one person can send me a DM in a month and be like, you know what, ever since that last season finale conversation you had with, I've taken really small losses, but I've won more than I've lost because I started managing my account like a pro. and not like a gambling degenerate. If you want to gamble, go to a casino and put it all on red or black. You know what I mean? That's your odds.
Exactly.
Your odds are.
Come over here. I live next door to one.
Here's a fun fact. I've never lost money at the casino because I play roulette and because it's a game of statistics. And if you leverage your bet the correct way on roulette, you can't lose money, which is interesting, but don't tell anybody. But that's why I like roulette, because it's really similar to options. You have a defined risk. You know what your probability is. You can see a trend, right? But it is a little bit of luck. But you can still hedge your bet. You can still define your risk. I mean, it's really not as complicated of a game as people make it out in their heads. It's just a matter of doing something. But like when you learn how to ride a bike, when you're a kid, do you automatically hop on a bike and just start biking? No. You put on training wheels, you're nervous, you're freaking out, but your parents are there to, kind of push you down the driveway or the sidewalk, and then eventually you take the training wheels off. Everyone that blows up accounts, just like I did my first account, you want to ride a bike without the training wheels and then you fall. But are you willing to pick the bike up and put the training wheels on and admit to yourself that you might not be ready to ride the bicycle without them? Or are you going to keep falling and keep pretending like you know what you're doing? You can know what you're doing if you take the time to learn. We've been giving some tidbits here and there for the past month and a half, almost 2 months now. And some people have learned, but I'm still seeing some of the same things that people were mentioning at the beginning of the year. They're still doing them. And you owe it to yourself. You don't know it to me. You don't know it to Banana. You don't know it to the market. But you owe it to yourself to admit that you're unwilling to do the things that'll make you better. And the sooner you admit it to yourself, if that's you, you can take a break and come back. I took a break and came back years later. Some of you guys take a week or two and you come back. I took years and came back, and that's just history. I've never looked back. But you have to do the work. You have to be willing and you have to be receptive, because there's things that I still learn. I'm assuming there's things still that Banana's learning. There's things that everyone on Wall Street is still learning, because it is an organism. It is always changing. It is ever evolving. And the point is to learn and adapt, not be arrogant and refute. Because when you do that, I promise you're going to keep losing money. I promise you will keep losing money if you don't take the time to learn. It's just, it breaks my heart seeing people that had the same issues in January still have the same issues, simply because you didn't want to take a break and learn. And it's as easy as logging out of your broker account and just watching and observing. Because as a retail trader, I'm sure everyone knows this, but just in case there's someone listening that may not realize this, as a retail trader, you have the privilege of being patient and waiting. You don't have any quotas to make. You don't have any investors to please. You don't have any, obviously we've all got bills, we've all got lives, we've all got people to support. But if you're doing this for a living, but you're working a 9 to 5, you're doing it the wrong way. It's either all in or finding the strategies that don't require you to be all in. Because there's a day trader, scalper, there's a swing trader, and then there's an investor. The investor is the type of person that can have 9 to 5, and they buy and sell and hold for 2, 3, 5, 10 years. Those are the types of people that have defined their risk by saying, what, I'm still working a 9 to 5. I still have a career. I'm not going to try day trading options or what. A lot of people are just trying to do what they're not ready to do, whether it's mentally, physically, emotionally, because this is an emotional game. If you do it before you're not ready, it's just going to take longer to work. But the compounding method can protect you at least. That's your training wheel. That's your more homework assignment until the next spaces. From me, at least, learn how to calculate the math to compound correctly so that you can build your account to a point where you can take one or two trades, and even if you lose 100% of your investment, it won't ruin your account. It won't ruin your day or week. But in order to do that, you have to keep compounding consistently and effectively. And it all boils down to having a plan at the beginning of the day and having just as much as a plan of an entry, you have to have a plan of exiting and executing. You can take it or leave it. I'm telling you how I've done it. I'm telling you how I do it. And the answer is simple compounding, simple risk management, simple disciplines. Make a spreadsheet. At the end of the day, journal you should already be journaling your trades, but make a spreadsheet. Write in a notebook. There's so many ways and so many applications and so many pieces of software that you can use, but people don't use them, and I don't know why.
It's all really, I hope a lot of you were writing it down, or if you're listening to the recording at a later time and you hear my voice, I would almost re-listen to some of that last segment. I like that you put a lot of the actual numbers behind it, and I'm hoping a lot of people get a lot out of the spaces today in that regard. That's why I also wanted to talk about that type of math where you and I are on the same page, was finding some type of structure from that gain. See, like going back to my specific model, and both things exclusive and I talked about, when you listen to the recording later, it's basically the same thing, just a difference, little bit of flavor salad. That's really all, and that's the beauty of it, is that you can have this type of philosophy and thinking, but you can apply it in a couple different ways. And going back to that, because I see some, while exclusive was able to talk, I was able to look at a couple DMs and a couple messages and stuff like that. There's a lot, so I apologize if I don't get back to everybody. But broadly speaking, just going back, I see a lot of you really like that $1,000 example because it's good to visualize. And exclusive just basically did the same thing with a couple of his bells and whistles, which were really, really key. So again, I would almost just, it's like like if you're studying for a class, not the word like important professors, but I think it's important information. I would re-listen to, so the comprehension really becomes fluent versus having to think about it. But going back to the $1,000 example, it was just a nice round number. So, you'll when you trade, for the most part, any one of us, even those who've blown accounts, and this is the great and interesting part about trading, at some point or another, you'll have green on the screen. Everyone will have even if it's 10 trades and unfortunately 8 went bad, even a blind squirrel will find a nut, right? So but the trick and I wanted to dovetail off what exclusive said and tie it to what I said too, was when that happens, you have an opportunity immediately, and you have a choice to make, and maybe today in this spaces will help with that moment. And if it does, then I think, again, exclusive and I will feel very fulfilled. And here's that choice in that moment. So you got green on your screen, like every blind squirrel will at some point. What do you do? Do you do what I talked about in the $1,000 example? Do you do what Exclusive talked about? Because here's the more important philosophical thing. When you got that, you will. You will. Even if every other trade works out terribly, I'm sorry. But you will have a bagger. You'll have 100% trade. You'll have one good you'll have a trade work out. And that choice at that moment is going to be to set up everything Exclusive and I said, and to not let God or whatever your beliefs are down, the belief in yourself down at that moment. And here's how it should, I think, go. Let's tie it back to that round number. You made that $1,000 trade, finally one hit, okay? And let's say double just for the round numbers. Obviously, you would just change the percentage in the ratio. If it was 50%, you made 500. Instead of doing something for 200, you would do something for 100. So that math is obvious. But let's just do the round number, $1,000. You made it, and you now have that choice, right? Do you do what Exclusive said? Do you do what Banana said in both those mathematical examples? You put $200 in your permanent principal, or like he said, a savings account, one or two kind of the same permanent principal, permanent savings, okay? And you have that choice. Or do you say to yourself, hey, they're right. My subconscious knows they're right, Exclusive and Banana, that is. But if I could just one last time, right? Just one last time, I got this win. If I could just do it one last time, it's $2,000. I'll get to 4,000, and then I promise Exclusive and Banana, they won't know it, but I promise to their souls that I will do it then on. I'm telling you, if you do that, you're still not ready. And I did that not even that long ago, years ago, where I, for those that know, had a huge hit, real big mistake after the time that I thought I was done making them, at least on that level. And I've been honest with you guys. Very painful, huge loss, years of time taken back. That's probably the bigger part of the loss than the money. So you have to you have to be honest with yourself, which what Exclusive was just saying that made me just kind of dovetail this current rant or this thought, because I've been there. And what the important thing to do is to appease the gods for whatever that means to you. Okay. Back then they used to throw a virgin into a burning volcano. You can do something less, but almost as meaningful to your mind. Okay. Because that trade's going to happen. You're going to say to yourself, just one more to get a little bit back to where I was. And then I could set this thing up, because I won't feel even like I can do anything until I'm a little bit more whole. And I've been there. I've been that feeling of not being whole. It's debilitating. It's paralyzing. All right. But here's the thing, going back to what Exclusive and I said. This process has some kind of natural time thing. You can speed up elements of it, stay on tracks, or even make it more conservative if that's your pace. But there's some kind of natural order to this thing that no matter what, if you keep going against it, like Greek gods did in their various stories, you could be punished for it. If you please the gods once by creating the right process, you could be rewarded for it. Let's take it back to that $1,000 example. All right. So we made that $1,000 and we put $200 towards permanent principal or towards the savings account, like Exclusive's example. Now we have that $800. All right. And we also talked about that we're going to take $200. All right. And we're going to put it into something that was lucky, like Exclusive said, at the roulette table, with the right bit of know-how and combination of luck. Okay. And we're going to put it to something unlucky. At the roulette table, that doesn't exist. but in the stock market, it does. And that's where Exclusive was talking about investing and dividend and stuff like that. One share of something that pays a dividend that's conservative, like an Apple, it's not going anywhere. All right. You can go down $20 because they don't grow anymore, or this or that. That's fine. That's okay. Okay. This process, you'll find something that's different or like Apple, or it'll be Apple, and then it'll be Microsoft, and you'll add and you all of a sudden have 10 names. Okay. We're going to take 200, right? Apple's basically $200. So it's good for this example. We're going to buy one share of Apple. You're going to get rich from nothing. Apple goes up $10, you're going to make $10. Nothing's going to change in your life. Goes down $10, also nothing's going to change in your life. All right. But we're going to start to develop, and this is key, and this is the trick. You got to write this down. We're going to start to develop, okay, the foot, the toe, okay, just the tip. All right, just to visualize this. Sorry. All right. We're going to get our toe in the door, is the right term. All right. Of building a book. And this is what this means. Remember how earlier I said Exclusive and I wear different hats in this market? And you could just be like someone who just listens to shout out and scalps, but to really develop a sense of this market, to be a part-time trader, a full-time trader, et cetera, you're going to have to experiment or have some kind of beginner level of various hats that him and I already wear. All right. And what you're going to be able to do with that one share is start to develop a book. And this is where this is where I want to tie other spaces. And that's why there's this connective tissue that goes through our entire season. You're going to be able to add shares to that, because the dopamine in your brain, once you start to get to 10 shares, because just on this one trade, you finally set up one share. Okay. It's just one trade. You're going to have dozens of trades a month or whatever. Okay. On this one trade, just set yourself up right for once. You're like, I'll get that Apple share later. No. Tell you, this is why it's so important, because process is key. You know, and when I'm at home and dealing with my kids, and that process is very important for me, right? Because if you're unorganized, the house becomes a mess. It's much more timely to clean it. Takes it gets even more mess. It's just difficult to rein it all in. There's a saying in Russian and Ukrainian, which I speak. For those that don't know, I'm Ukrainian. It translates: when the horse doesn't leave the stable correctly in a race, it stumbles the whole race. Okay, so that's why you got to set this horse up from the beginning of this race correctly. You got to set up that share, that one share. All right. You're still going to have $600 to play with in this thing. And we're going to have $200 go back to balls to the wall. But you got to set up this share, because we're going to develop this dopamine. And I'm going to explain to you how it goes. You'll have 10 shares before you know it. Okay. When you get to 20, 30 shares, you're going to be, it's like the retina is going to open up. A light bulb is going to go off in your head. You're going to say, wait a second, I'm close to 50 shares here. And as you get to 50 shares, that means your education and your know-how has gotten a little bit better. And two other things are going to connect. And you'll be like, wait a second, I've learned a little bit. I'm no expert yet because I don't have it yet. But I learned that when I have 100 shares, an entire new thing opens up to the market for me. An income strategy, covered calls, covered puts. You have to own a round lot. A round lot is called 100 shares. One option contract represents 100 lot share. You have to be able to get to that place to be able to sell that covered call, to make that income strategy. You may not want to do that, because there's times to do that and not to do that. You can get called away. You'll learn that. But you don't even have an ability. You don't even get to participate. You don't even get to play in that building. You don't even get to open up that ice cream stand and sell one cone or one lemonade cup at your new lemonade stand if you don't set up this one share from that one trade, that one lucky option trade that was that ODTE or that week trade, can set you up for life just by setting up this structure that I'm talking about, and if an Exclusive is talking about it in various ways. All right. So we do that. We set up that one share of Apple. We got $600 left to play with. All right. Our permanent principal went up. We have that one share to play with. We got $600. I give permission to my little brother to take $200 of that. Write this down. The $200 of that, and do whatever it is that led to this trade. The same thing that he was going to say a second ago. I'm going to take this 2,000 and then make it 4,000 and then do everything Banana and Exclusive said. Do that with the 200, whatever that was. So if you lose that, at least you didn't lose the 4,000. That's a good fucking start. All right. But I allow you to do the same stupidity that led to this $1,000 trade to repeat it. Okay. Now what? That's that. You've defined your risk as Exclusive had said. So now that $200 is going to be up or down. We'll come back to that. Okay. I want to give you some kind of thing that you're going to make a note right now on the page that you're writing down. That $200 is 10% of that $2,000 trade you were going to put back to work. That just means a couple more times of doing that. You already got that. So if you thought it was going to work out so perfectly, you're like, listen, I need to get whole again. All right. This fucking Exclusive guy, this Mikey guy, this Banana guy, man, they're pretty fucking consistent with their trades. Please, God, just let it be the one time I full port on one of their fucking recommendations that it isn't the one that doesn't go down. Please. I see that one won 100%. That one 200. The one I'm going to do, let it also go to 200%. I'm telling you, the gods, for whatever you believe in, okay? But those Greek mythologies, for the purpose of this option conversation, Greeks, right? Those gods will fucking take that lightning bolt and shove it right up your fucking ass for doing that. Strangely enough, though, this is just the way it works. It's called Murphy's Law. Because a long time ago, that shit happened enough times to Murphy that they made a fucking law. Okay? And it goes like this. When that $200 doesn't matter, like we set up in this trade, we put it to the side. We have other things to focus on. We had $200 permanent principal. We bought a share of Apple, $200 back to the balls to the wall on an exclusive recommendation. Fine. No problemo. What just happened? Well, I'll tell you what just happened. The gods are going to, strangely enough, often reward you. That $200, now that it doesn't matter, is going to fucking triple. Or it doesn't. But I'm just telling you, from doing this long enough, when it doesn't matter, it goes nuts. When you full port, it's going to kill you. It's going to take you and mangle you. You can get that $2,000 you were about to full port. This is what Exclusive and I are trying to drill into your heads. I get it. The market's down. There's Google's doing well. We talked about that. Outperforming. We made our watch list. Could have been another 3 trades I could have shouted out. Dollar General went well, whatever. This is more important. Trust me. This is 10 times more important. Okay? When it doesn't matter, that thing's going to start going, you're going to catch that 300, 400% trade. That's why Mikey and Exclusive always say, you think we're doing this with our full account? No. That wouldn't work well. Okay, so now we know that because we didn't make everything on it, that thing might work out or not. We'll come back to it. We still have $400 to quote unquote play with. What do we do with that? Well, here's what I do with that. Because I can't give you financial advice. I got this disclaimer. It's not just to protect me and Exclusive. It's to protect you. Because that's what I know. I'm going to full port one of these trades that we shout out. Because you're like, they got a decent hit ratio. And the one you do that on is going to be the one that we lose. Is going to be one of the ones that we chalk up to our losses. It's going to devastate you. And to us, it's just going to be a side thing. All right. So that's really important to drill that into your brain. Drill it. Okay. Now we got $400 to play with. All right. Here's what I do. All right. I immediately look for something within that name that made me money if I can find something now not shorter dated, because we just had that $200 was allowed to go balls to the wall again. So that was ODT or that week's expiration. Okay. But now I do want to do something intermediate with the same name. I want to create some type of pipeline. Okay. And now I'm looking for something, and this is just me. Okay. And it depends what's happening within the market too. But generally speaking, I'm looking for something 30 to 90 days out. So you can write that down if you're wanting to get opinions and ideas of the way a guy who's been doing this for over 2 decades conceptualizes. Then I'm looking for something 30 to 60 days out. And this is where I don't want you to get too lost in the weeds with find the delta that's the point A. And get, I can tell you the Greeks with the best of them. I promise you that. All right. But here's what's kind of more important. Options, it's like a living, breathing guy or girl. It's like a thing. It's an animal. Okay. It's got thoughts. And when you think of it that way, it's better than all of the math in the Greeks. I promise you that. And that guy or gal, okay, it thinks, and it's like, okay, yeah, this guy's kind of near the price of where we're gonna expire, and there's a couple months of time. I feel pretty good about myself. I feel like this is an achievable goal. If that same guy or gal says, you know, I'm gonna really make this thing have to stretch, have to go for a 27-mile run marathon to get to my spot. I'm gonna really stretch it out, and then I'm gonna make it sprint. You see, that's why these analogies are important. You think of this when you think of those Greeks, those they'll fuck you up sometimes. Okay, you're like, all right, after a 28-mile sprint, that thing's gonna be fucking exhausted. It might not even make it to the finish line. Maybe what this banana guy is saying kind of makes a little sense now. These Greeks were kind of messing me up. If you want to do Greek math one time, I'll do a whole fucking webinar on it. But I'm telling you, these options, they got an opinion, they got a thought, they got an emotion. They're living, breathing entities. All right. And when you think of them that way, they're gonna say to you, they're gonna be like, hey, you know, you chose Apple that's trading at $100 for the purpose of this analogy. Okay. You bought $105 contracts, or you bought $110 contracts. The 110 one, you're asking it to start to get to that marathon. Okay. But you're asking it to run a marathon in 30 to 60 days, 30 to 90 days. Okay. It's a professional runner. It thinks it can do that. 30 is a little harder, 90 is a little better. The light bulb's starting to go off in your head as I'm talking. Now, if you're asking Apple to be $110 within 30 days, you're asking it to now run maybe the pace of a 7-minute mile for 27 fucking miles. And when you think of it that way, that's a little bit more difficult to do. So when people ask me, hey, Banana, how do you pick strikes? Can you tell me the Greeks? Can you tell me the process you go through? I could tell you the math, and if you look at my, again, the search bar, you'll find it. I'll repost it later. But this is more important, this type of philosophy of thinking about this. All right. You know, hey, but how do you pick your strikes? And that's why I always tell people it's a mixture of art and science, math and creativity. Okay. Because mathematically, I glance at the deltas, I glance at this, my expirations, how much time, the percentage of probabilities, et cetera, et cetera. But where I really have become a successful option trader is by thinking of it of the way I'm trying to make it analogous to you guys. And what I'll do is I try to see where the stock has also been in the last 60 days. Okay. And that's important too. If the stock is up more than 20% in the last 60 days, there's no chance in hell that I'm getting out of the money contracts that are the same amount out of the money or by half. That's kind of my formula. So if you want to write that down, feel free. So if the stock's been up 20% in the last 60 to 90 days, especially 60 days, I'm not buying out of the money contracts 20% up higher for the next 60 days. Now we all know there's momentum and that depending like a meta, it's coming back far from where it was. It's cheaper now. There's so much other balls, right? Cross streams, tug of war, the salmon, the stream, different speeds, nothing's linear, nothing's 100%. Okay. You have to keep track of these multiple balls in the air and these multiple cross streams. All right. But generally speaking, I would not want to do that. Even if there's momentum in the name and I see more upside, okay, I'm going to start to choke what I call choke the name in different ways. Here's a couple ideas for you guys. If I look at, let's say, again, this Apple round number $100 a share, okay, and now we said it's been up 20%, so it's 120 now, okay. But I see they did something. There's some fundamental catalyst. There's some technical catalyst or continued momentum that I'm like, it's going to 140. All right. I'm not going to buy a 140 call 2 months out. Okay. I'm going to buy a $125 call 2 weeks out. And then I'm going to buy a 130 call 90 to 120 days out. And this is how I choke the name. This is important. And I don't know if I'm going to articulate this perfectly, but I'm going to give it a shot. So since the stock just ran up, we're dealing with a lot of stocks in this type of example. A lot of stocks have just run 10, 15, 20%, et cetera. Okay. You're like, oh, is it going higher, banana? Is it this, that? Well, I don't know. But the way I'll do it is if I have a ton of gains, I'll actually spread it out in an opposite way than the way that I got there. Because we talked about the way I got there with that $1,000. I got a couple shares, so I developed. So now I got shares that have helped me get there. I had medium term trades, so 30 to 120 days out, and then I had short term trades work out. And now I've restructured everything, right? And now I'm looking and things went my way, right? I got a couple shares accumulated of Apple. I got that $1,000 to go to 2,000. I put $200 into permanent principal, into savings, like Exclusive said, et cetera, et cetera. All right. Now I look at it like this. If there's so much continued momentum, by all means, let it do its thing, and I'll allow just a small portion of that to still be turbocharged in a shorter dated thing. So let's say I made that $1,000, okay, and it wants to continue running. Well, we just talked about, and I want to tie this all together. That I allowed $200 Exclusive, and I allowed $200 to still be balls to the wall because you set up the process like X said. All right, that's where that $200 ball to the wall goes. That's where it goes to. That shorter dated thing. So in the Apple analogy, if it being 120 now, I'm doing 125 for that for the new week it's in contract. And now I have things set up 120 days out, right? Because it ran so much. It could continue that momentum, or let's now say it screwed me. Okay. It wants to take back it put a lot of money on the board. It wants to go to 115. So you all have seen continued momentum. You're like, oh, the stock went 120, should go back to 115, but then it goes to 125, or you've seen it go back to 115. This thing's got all sorts of examples. This thing called the stock market. All right. In this example, though, now it wants to go back to 115. All right. We lost our $200 on this one. All right. That's okay, because we just made that 1,000, right? We set ourselves up well. And now if Apple wants to retrace a little bit and then it ends up going to 130, 140, we have all of that participation still, but we don't have it with the full 1,000. We have it. How much is left? 400, right? That's all that's left, because we made $1,000, right? We bought a share. We were allowed $200 to go back to balls to the wall, whether it made it or lost it. And that left us that $600. And that's what's in that 120 days out. Or maybe 200 of it's, 90 days, and 400 of it's 160. But you start to get the idea of the right combination of what? Math and creativity. The Greeks won't teach you that. There's no YouTube video that will explain or teach that in the way that I just did, or that really puts that together. Because not that they don't, they might even have 100 other models. Maybe it's even a better video. It's just that the way that analogy comes together, I'm pretty sure in your minds, is not going to be laid out in a couple minutes to understanding how all options trade. Okay. It's impossible for me to even do that in a couple minutes. But just in a couple minutes, from what Exclusive did and what I did, you get a sense of the way I trade options, the way I go out of the money, the way I go into the money. All right. A lot of times I like to get something that's not too far out of the money before it's made that move, right? Before that last 20%, or we have that continued momentum. And we just talked about the structure of that type of model. But I'm trying to get that 20%, right? We're trying to find that spot or that entry. We all are. Sometimes successfully, sometimes not. Like Exclusive said, a lot of my trades, I get that $100 on Apple for it to go to 120, but it goes to 95 or 94 to then only end up going to 120. All right. But it didn't just go up to, as far as this specific model and concept of the trade, for the criteria that we just mentioned, right? I'm kind of looking for this start of the run. All right. And then when something's run, there's certain ways to treat that. And we just talked about that too. And in another spaces, I'll talk about rolling up and out, rolling down and in. But I basically just kind of did, but I gave you guys like a brief narrative over it. So I wanted to talk about that today because we had some more time today, but it's a question I get a lot. And I know Exclusive does too. It's like, hey, how do you find your strikes? What's the way you do it? How many contracts and stuff like that? It's all a little bit of an art and science. Okay. But for the most part, most of us pros, okay, we don't just, if all we had to do was get 10 contracts or 100 contracts, we usually don't buy 10 contracts or 100 contracts in one shot, knowing that our entry might be unperfect or something else or it was perfect to what the technical analysis told us. That was X marks the spot to take the risk. And then something else happened along the way, right? So, and like I said, sometimes those have been some of my best trades too, for it to slightly be a loss and then work out into a great gain. So now you have a couple of different ways that the way I look at strikes, the way I treat money when I make it, the way I treat some options, the way I start to use options to form shares, the way I try to accumulate shares. And sometimes shares can be traded or invested upon too. A volatile stock, like I accumulated shares from trading SMCI and from trading NVIDIA and other sister companies within the sector. And then I was, transparent and honest with the way I was trading with you guys, had some gains there and turned it into shares of SMCI. All of a sudden, when the stock was $400 or $500, I had 200-300 shares. And then this thing ran up some more. I posted like, I think on an exact example, forgive me for the exact numbers if they're off, but like, for example, there was a time where I had like 400 shares run in SMCI to like a extended fib level or some extended level that I had charted out, and it hit a target and I trimmed even the shares, even though I was like, well, that's no one can take that away from me. I don't have to sell those. But there was so much profit there that I felt that at some point there could be some even some give back or pull back there too, that I traded around my core position. I didn't want to take the shares down to zero. Be like, oh, I used to have that problem. I told you guys my Achilles heel and my weakness and perfection. Be like, hey, if the guy's such a good trader, such a professional, the best trader in the world, why doesn't he sell 430 shares when it went to 525 and that was the top tick, and then bought 430 shares, exactly his entire share count at the bottom exact tick that was 376, let's say, because that doesn't exist. Because if you think that person exists, or you think that that's or I'm that person, then you're sadly mistaken. Let me clarify that for you. I am not. I am not anything special. I just been doing this long enough that I have a process that sometimes it makes me more money than I lose. That's really the fucking end of the game. All right. And I'm just sharing with you how I've gotten to this point. All right. Today, I'm getting smacked. All right. In this account, which I hate to take losses this size, should have done a little bit of a better job hedging and de-risking, but I turned so much of this account into like shares and big things that it's like sizable, that seeing a $200,000 loss on my screen right now, it's discerning. An older me would have been like, fuck, I gotta fucking call my mom or a friend or somebody and fucking cry a river and see if I can get some heartfelt consolation. Nobody gives a shit. Nobody cares about your fucking trades in your stock market. And I'm kind of talking to like the medium person out there, like that. You know who I'm talking. I'm talking to you. You know who you are. You know how you get into fights with your friends or your girlfriend or your parents or someone because the stock market had a bad day. I've been there. I've done it 1,000 fucking times. All right. An older version of me would take today and be like, oh, fuck. Why didn't I this? Why didn't I that? What am I going to do now? It's a pretty big loss, depending on the size of the account, too. This is a pretty sizable loss, actually, even for this size account. And I've been hedging and taking profits. Okay. This is a whack. They're going after the good stuff. They're going after. I can tell they're trying to take my money back. Good thing I took some profits, right? They're coming for me. They're coming for us. They're coming for where we've made money lately. Okay, that's the name of this game. I'm okay with that today. I'm not okay with it per se. But you know how many times this has happened for me to get to this part of this account? You know how many times I had to restart this account? Do you know how many times I had to I made a mistake where I had promised to all of you, the community, certain things, and then still made a mistake 25 years later that I'm telling you guys right now that, like trying to teach you not to make, I still made in front of Josh, who's listening in right now, in front of Not Whale from our other spaces. I took this account. The goal for those that have been listening long enough, for new listeners, it'll make sense in the end of it all, more or less. But a $30,000 account was the goal is to take to $1 million. It gets to 980, and I'm still like gassing it. And I know that like things are about to get like hectic. And I put a hard stop on the account. Very quickly, the account went from 600 to 980. I remember that period well. Josh does too. And I put a hard stop, and I remember shouting it out. I'm like, hard stop, 750. Well, I went from 980 to 750 in a flash. And there's no button. It's a mental hard because I got fucking 50 positions. So I had to like, it takes time to sell everything even, So by the time I kind of even like realized I was up shit's creek and in a corrective process already, by the time I sold everything, I think I just broke 700. So I failed my hard stop. I failed the community. Like I like did all these things that were like wrong. Left a lot of short dated contracts out, unturned, unhedged. Just like mistakes I made like 15, 20 years ago. I made When was that, Josh? What, 7 months ago? Something like that? Text me, remind me, but whatever. You guys get the point, you know? The point is, none of us are perfect. We continue to make mistakes. We got to catch ourselves when we do. We got to try to just make less of them. We got to not beat ourselves up too badly, but just enough to keep reminding ourselves. We got to thread that needle too. This game's difficult. And people go like, oh, I scalped this, I did this candle, went to that candle, trading's easy, cool. It's not. It's cool to make it sound like that. But as you grow, eventually, even if you do that, you're going to have to invest somewhere. This game in general is just not easy. Knots, my good friend Knots, he's got a brilliant comment. He posts it every now and again, and I always like it when I see it. It's just a brilliant comment. And it's I believe it's solely his quote, whether it is or isn't. It's still a brilliant comment. But it goes something like this: the stock market is the most difficult place to make easy money. So everyone's seeing that, yeah, this is an option contract and go crazy. This is a place that big money can be made. Also, big loss can be made, right? And that's what Exclusive and I drive home, because we've been there. We've blown up accounts, me more than him. Me making mistakes not that long ago. If I was running $1 million account, and I ran your money, and you're like, dude, Banana's fucking the shit, I would love for him to manage my $1,000,000. And I lost 30% of it in a week. You'd be like, what the fuck? I thought this guy was good. Well, I did that to myself. Now, I'm being hard on myself purposefully for your guys' education. I have to remind myself that the percentage of 30,000 to 700K was still pretty freaking good. But if I had $1 million account, to just lose 30% in a week wasn't a great thing to do. I'll have you know I'm not doing that today. All right. But in full transparency, I have to be fully transparent about the following. I'm a little bit under strict orders because of the size of this account. Let's say over 2 million since that 30,000. So we've done good. I can't for tax purpose, because someone might misconstrue my other side of my ledger, my liabilities or my losses or my costs or this and that. So now that this thing's gotten big, I got to kind of be careful with what I say. But that's not important to you guys, to the point of this conversation. Okay. The point is that anything's possible, and we were able to grow a $30,000 account, let's say, to over $2 million. Okay. So $200,000 loss would be 10% of that account. It's not. This account's bigger than that, so that percentage is lower. I just can't give you the exact number, but that's just food for thought. And I consider that already a little bit of a mistake on my end, okay? Because I kind of knew this was coming. Now we could rip up tomorrow, and like I said, then maybe the pullbacks put on halt a little bit. Got early people thinking it's the guaranteed pullback. This is the one. People jump into that. It's this tricky. This area is tricky. Okay, I can find better times where it's like spaghetti to the wall. Like, hey, I put this thing on. If this thing catches green right away, I'll start to manage the trade. If it goes against me, I'll go out quick. To be quite honest, okay, some of my friends in other spaces that are like really good scalpers and stuff like that, this is the right moment in time. This is the time where, like, let's say I have like $100,000 leap that like I just made recently. It's actually time to take most of that off, or half of that off, or some of that off, and then play super short term. And then if it goes again, you're very quickly out. Or to sidestep all of this and go very long dated and have a ton of cash to then add to that as it comes down. A couple of different ways to peel that onion, but the philosophy, I think, is starting to have light bulbs go off in your head. I can feel it. All right. So right now, me having that type of loss, I'm a little bit like, I'm fucking up. This is kind of old mistakes ringing true. The stuff I'm telling and educating everybody on Spaces today, I'm making some of those mistakes. So you know what you should do? You should be honest and tell them that in the background, the stuff you're telling them to do is some of the mistakes you're actively making right now. And that's what I'm doing right now. I'm telling you that I'm making some of those mistakes that I'm trying to teach you not to do currently at the moment. So later today, it's just my days dedicated to you guys, maybe in a couple of minutes here and there in some dead time as I finish ranting and Exclusive picks up the slack shortly. Maybe I can make some more hedges, realize I've made some mistakes, raise some cash, or do some things. Also, honestly, and not being too hard on myself, which we said was still important, right? Threading the right balance, the needle. I've done a good job of taking profits, posting those, raising some cash along the way, taking some of my shorter dated contracts, moving them out to April, May, June, and even if farther dated than that. But there's still option contracts. There's still levered bets. Fucking Nvidia's down 40 bucks. This that I'm getting smoked up even on something longer dated. But boy, if I didn't do all of that, if I didn't do some of the stuff at least that I'm educating you on, and then being honest with you.
Might have lost audio on Banana for a minute. All right, so while we're waiting for his audio to come back, just a quick update. Looks like S&P 500 index bears might be targeting the gap. That's
right? So we can make corrections because we'll make those mistakes again, but we'll adjust. And if you don't write that down or memorize it down or do something down, you won't be able to learn from that. You won't be able to have that comprehension. So in the Nvidia thing, I did a good job of selling the short-term contracts and rolling out to that June 800. All right. Where I went wrong was not hedging enough shorter dated under my shares. I had started to accumulate so much Nvidia that 700 shares moving down 40 bucks is almost $40,000 down day just there. Okay. And when I knew that it's going into this this sticky part, okay, I had to either reduce some share count, even though that's a longer term investment. I can reduce that and come back to that. Okay. There's 30-day wash rules and things like that. We could talk about that in other spaces. But I could have done something there or hedged a little bit more using derivatives or sold some upside calls, done a couple more things that I'm beating myself up about on the share side. So that's something that would go down in my journal. So if we're making an example here and you're following along and writing this down, that's a place that goes into a line item in the journal on this trade. And I would do that for every position. And it's a lot of work for 50 positions to do a paragraph on each one. That's a lot of writing or journaling or thinking. That's hashtag more homework. That's the level of the game. If you get to the point where you can manage 5 positions, 10 positions, et cetera, and Exclusive and I have done again jobs in other spaces explaining you how come him and I have so many positions, how we're able to earn the right, as Exclusive says, to get to more positions by managing the trade and the process correctly, gives you the ability to play with the house's money after we put it in permanent principle, after we had all the different things we talked about in the structures that we wrote down just a little while ago, right? We're able to put all of that together and journal it and see where along our trading career, again, part-time or full-time, depending on what this means to you, you're able to start journaling 5 positions, 10 positions, what went wrong. And I got a lot of, imagine I got so much homework to do tonight because I made a lot of mistakes. And I want to make sure that I memorize till this day. To me, it's fluid. Like I know in my brain, I'm still going to write it down or type it out or really think it through and go through an exercise on myself this evening. And I'm going to dedicate a certain amount of time, an hour, 2 hours, and like I'll tell uh, Alexa to time me or whatever, and I'll do it. I'm pretty. You guys see my work ethic. Is the one thing I'll leave you guys. Whether I show this account to hit my goals or not. I feel like with what Exclusive said, if I can just have one person be more educated, if I can leave you with just a little bit of these rants that they touch you emotionally, they help you journal, they help you create this process that we talk about, then my job is done. And I'm even willing to lose $200,000 today, which I probably could have done a better job. I didn't even get SPX puts when I saw Breaking Structure because I've been so busy with you guys. And I'm sure you would have appreciated that as an actual day trade today, as a live trade. Maybe in the other spaces, somebody did that. Hats off to them. So that's great. But I'm okay with the loss philosophically from where I've come from. I'm not okay with some of the mistakes I made that I need to journal. I've been extremely transparent with you guys actively up until here and what's happening to me right now. And then I need to tell myself, hey, you done pretty good too. And you need to clean up a couple things. You can't make mistakes from 15 years ago at this age and this time, especially when you're teaching people. So let's clean that up a little bit. Even if I make less money and I show people less percentage gains or this, that, we'll do it the right way on some stuff. And I'll find some other place to press the gas and look all dope in front of people again, yada, yada, yada. So that's my heart. That's my honesty with you guys. That's what I set out to do with this space as an exclusive. A difficult day like today, be honest, that I'm taking it up, taking it in the chin from a lot of other trades. Had some trades go against the grain today. Mentioned a trade I probably should have taken, got busy with the rant and Google strength. Went well for a second, but it would have been all the way back now at entry as the market's dealing with this seasonal weakness underway. Right? So I feel good about this loss as much as it sucks. It's a condo in Florida I'm losing right now. But that's the name of this game. We'll be better for it. I'll try to restructure. I'll try to get some of this game back, but the right way with the process. And I have a couple short-term contracts that like were chokeouts, like the model example I gave that where I was like willing to lose that because I made so much. And now that I'm watching it go away, I'm like, was I so willing to lose that? Should I have maybe had instead of I was willing to have $5,000 just because I made 80 grand. So it's like if $5,000 just gets washed out this week, I was like, oh well, maybe $5,000 should have went to the starter of a leap. So there's a lot for me to reflect on a difficult day, no doubt. I know a lot of you are going to be doing the same thing, but at least we're doing it together. At least I taught you a way that I do it, a way that you could start to write down and create. You're not naked. You're like, it's a difficult day. What do I do? Well, you know what? Exclusive just taught me. He gave the math, and if I re-listen, to the recording, I can create some process there. Banana gave some good examples and some models of some different ways in an example stock and in a couple of different ways I could do that. And I can look and see, do I have any good trades or am I all red? Then that's going to get set up on the next time. I'm going to set myself up correctly to win from now on. I know that on the next trade that does go my way, I'm going to try to set myself up like Exclusive and Banana said. Or I'm going to go against the grain one more time. I'm going to spit in the face of the gods. But then I promise to do it the right way after. You now know the probabilities and the percentages and the way the gods act when someone spits in their face. You now know a different way to look at Greeks besides just gamma, delta, theta, vana. You now know what to do when you will and have had a trade finally go your way. You trade long enough or anything, something will go green. You now know what to do when that happens. All right. We talked about the market and the pre-market and the market as a whole where it is. Because I'm going to do a little wrap up here and I'm going to do I got to go check on the baby because wifey took the kid to school and is running a couple errands. So I'm babysitting a little bit. So I'm going to go check on the baby and I'm going to excuse myself for a little bit of a longer break, 10, 15 minutes. Exclusive will pick up the slack because we would have ended the spaces by now. And we're going to market close today. Today's the season finale of 8 episodes of our hearts and souls poured out to you guys. All right. To tie up some last couple thoughts here, we went over the market. Exclusive did a really good job talking about some inner rotations and the weaknesses right off the jump. I've done a pretty good job talking about the seasonals and this area and time of the market and what generally is to be expected. We know that stocks and sectors or things can go against the grain. We've given examples of those and we've talked about that as well. I feel like even though it's a difficult day for me per se, and I know for many other traders and for you listening, to have this be such a good, to have so much, so much feel come out of this on a day that there aren't that many great active trades, on a day that it's not easy, like I said, on a day that we're seeing our favorite names get handed to us. But that's the opportunity. We talked about that. We talked about watching the forest through the trees. Okay. There's ways to scalp out. There's some put side things. There's things breaking that exclusive mentioned. It was too fast, but we with the season finale, we wanted to make sure it was very educational and that it tied so many things that we've been talking about. So I'm sorry if it's not like the perfect spaces for SPX put today. All right. But I think it's so much more important than that because today will come and pass, and this week's expiration will come and pass. And now we're going to go on a little bit of a hiatus. So I had to leave you more. We did SPX put, we did Tesla puts, we've had that amongst the different episodes here. Okay. And I'm sorry we didn't perfectly scalp that today. But I had to make sure that as we go on a hiatus, that you are left with more than today's expiration. I love you guys. All right. I'm going to take a 10, 15-minute break, X. Pick up the slack from me. I'm going to check on the baby, and then we'll pick it up from there.
Yeah, go for it, man. All right, so give me 1 second. Let me. All right, so I just had to make sure that my headphone was working. All right, so far, obviously NVIDIA's still sitting near the lows. One of the only stocks mentioned pre-market that I was short. IWM and Bitcoin from pre-market. Some setups over the weekend as well, or yesterday, I should say. It really doesn't feel like a Tuesday, but here we are. So on days like today, what I kind of do around lunchtime, as I start to go back to charts, look at outsized movers, look at things like Nvidia, AMD, Adobe, Netflix, things that are down like 10, 20, 30, 40 points. And I rechart them for intraday setups and just kind of see where they're at compared to their peers and their competitors. And you may have seen me tweet about it last week. Just like we look for the relative strength, we need to look at the relative weakness, right? That's kind of where you find the opportunities for reversals potentially, and you can find some really good moves. Currently, let's see, if I had to make a choice, and I'm not going to include. So for me personally, I like to look at stocks that are typically 2, maybe 10 billion and higher, just because of liquidity reasons. But I like to look at those kind of stocks and see where they're at. And I'm looking at these right now, and obviously we're seeing SMCI down to what, 727. Big move there. I know a lot of you were DMing me over the weekend saying they're going to see you trimmed. Not that I give financial advice, but that was extremely, extremely overbought. And sure, it went a little bit higher and then it tanked, but still the point is to control greed. So when you have a stock that's run up 500%, 1,000%, 2,000% even, you have to either, one, be risk-free, or two, have a trailing stop. Because if you're just trading it, completely naked, you don't want to put yourself in a position where if it tanks $100, $200, $300 a share, to where, you're like this person on Reddit that lost all this money on options. You don't want to be that person in that situation. And how you do that is with trailing stops. And then right now I'm talking about equity, but for options, I mean, you can listen to the previous spaces, but that 1 to 3% rule is really going to protect you in the sense of capital. And it's really important. Like, we're not just saying this stuff to, blow steam. It's stuff that can really save your account, so keep that in mind. Other than SMCI, Trade Desk, another really big loser today. That one's down about 8.5%. And DraftKings, ARM Holdings, Okta, Roku. A lot of these names are, these have all had big run-up moves. You have to think of where stocks were in, let's say, November, before the holiday season, or the beginning of November, and to where they were before today. How many of these stocks were at 52-week highs? How many of them were at all-time highs? How many of them were leading their sectors and leading their industries? It's really important to not chase. And if you're going to chase, at least trade in a manner that's manageable, not by, getting into positions that you can't manage if there's a little bit of a downturn. What I mean by that is, if you're trading options, going into the weekend with open trades that aren't paid for with other profits, trading something that is outside the risk, the trade allocation for your account. Like, if you've got $1,000 account, you're holding a contract that's $200 each, and you've got two of them, you're trading with 40% of your account. A red day is gonna blow your account. You'll lose almost half of your value in one trade. I mean, we got to be smart with our money, guys. We got to be very disciplined, especially on red days. I'm a bull trader, and even when I'm looking at short setups, I invert my charts so that I'm still looking for a bull setup. My charts are just upside down. But in a sense, like, for instance, IWM, even with a long-term bullish setup, if we can break higher, was a good short setup. And I mean, I was pretty much short on everything coming into the week, but the the point of talking about this data and the cycle and seasonality and the economic calendar and all these things that we're talking about pre-market is to kind of set up the expectation of volatile moves with low volume are easier for market makers to take your money. So, days like today is where I'm not going to get into 20 trades. If anything, I'm just going to, I don't want to say sit on my hands because I'm still trading, but, whereas normally I'd probably have 10, 20, 30 trades by now, I've only taken maybe 10. And, that's a way to manage risk is to just not trade. Earlier on in the space, I was talking about having the privilege to be patient. You can walk away before you ever get started and just come back when the conditions are better. This is a shortened week, right? We're just coming off of the OPEX. So all the people that got liquidated on their swings that they were trapped in last week, some of the people that by design had spreads, some of the people by design that executed their contracts can still survive by having shares longer term. But if you're trading options naked, you can lose all your money. It's just not worth it. It's better to just stay away and live to trade another day. Other things that you can do instead of trading a bunch of different stocks, because I know a lot of people that are tech heavy, or they're in the Magnificent Seven, or they're in the OEX or the top S&P 100 holdings. A lot of those stocks are down, but instead of having all these different stocks that you're invested in, why not just invest in one thing or two things, two ETFs? Just own SPY or own the Qs or own IWM, and versus having to manage 20, 50, 100 different positions in stocks that are hard to manage if you're not experienced. Just by not being able to manage your trades and executing them quickly and efficiently can cost you money, just that alone. So, reduce the likelihood of losing money like that simply by having less positions, by owning something that has them all in their holdings. So, there's always going to be ways to mitigate risk. And, obviously SPY is still down, almost 1% or, almost 5 points, but that's still 1% versus being down, 6% here, 7% there, 2% here, 20% here, etc. Psychologically, it's just easier to manage that type of trade. Also, in addition to executing on brokers, 20 positions versus one or two. So, there's so many different ways to manage your risk. To say that, options are the only solution is really naive, and I won't be the person to tell you that. Sure, you can make a lot of money, you can make life-changing money trading options, but you can make consistent and more easily managed money by trading stocks, by trading ETFs, by trading bonds, yields. Even if you're going to trade options, you can trade spreads. You've got calendars, you've got condors, you got butterflies. There's so many different ways to trade just one way directionally on options. And there's so many other alternatives, right? And it gets a little bit complex, which is why I stick to just, calling out or doing TA on simple things. Some of the more intricate technicals and more intricate fundamentals and option trading strategies are, they create more overload. And this space in general is meant to educate, not overload. And I know we talk about a lot of different things, but we try to split them up into different spaces so that you can kind of go into each one and understand what the theme is. But I think for this one, it's more about understanding how to define your risk understanding how to set up a strategy that works for you, not me, not for Banana, but for you, and not over trading or oversizing, because those are the easiest ways to lose money. To not have a plan, not knowing what your strategy is, not knowing how to define your risk, not knowing the math of your account. Like if you're trading blind, if you're buying too many contracts, the math doesn't work. You have to understand this stuff before you start the day. Set a goal, set your trade allocation, do all these things before the market opens. Because if you do it after the market's open and you're trying to actively day trade or swing trade, whatever you want to say, it's just going to make it more difficult to manage psychologically and financially. Because, if you've got too many things to pay attention to, things get lost in the weeds and things fall through the cracks just because of sheer being overwhelmed. So, you know, just take a step back and really hone in on what your purpose of trading is. What's your horizon on your time of your trades? What are you actively trying to accomplish? What are you trading, like what are you trading for? The sooner you can answer those questions quickly, it just gets a little bit easier for you. And then the math and stuff, that's all stuff you can do afterwards. But how can we make our trading day a little bit easier? We talked about the economic calendar. That's one thing, to know what the data is and how it can affect the market. That falls under the umbrella of, the first two or three spaces where we're talking about continuous learning and education. You have to stay updated with market news, the economic calendar, historical trends, and utilize the resources that you have at your disposal. Brokers have news, brokers have calculators for options, for profit. You have all these different tools to make watch lists and all these scanners and algos and scripts and whatever. There's all this information that you can track, but it's really important to understand, if you don't know what your strategy is and you don't know what your time horizon is, all that stuff is going to overwhelm you and you're not going to know what to do. I don't know what data to watch. I don't know what technical to focus on. I don't know what fundamental to focus on. I don't know what ticker to focus on, what sector, what industry. It's going to be overwhelming. And I feel like the more information that's driven down retail traders' throats, it gets more difficult for retail traders to make money, because there's an overwhelming amount of knowledge that's publicly free, that it just overwhelms people. And, you know, knowledge is power, but too much knowledge being absorbed at one time is crippling. And don't put yourself in a position where you're trying to learn just too much at one time. This is a marathon. It's a marathon, not a sprint. Like everyone says that, and it's true. And you have to understand that you can take a step back. You can take the time to learn, and you can take the time, take the time, take the time. And I'm trying to drill that in your heads, because everyone's in a rush. Everyone's in a rush to make money. Everyone's in a rush to be the best. Everyone's in a rush to show off to their friends, like, hey, look what I did in the market. I get it. We all want
I was
gratification.
just walking by the phone. I heard what you said. I still need a couple more minute break here. I gotta do a diaper change. Maybe that's TMI. But I wanted. I heard what you were saying as I heard a lot of it, but specifically, and so that's why I want to just put a point when I think like I was acting like as a listener, and I think that was a key point. And what Exclusive just said, all of us, including myself, and again, I was one of you guys, one of the listeners right now. All right. Including myself, I get obsessed with options, and you guys do too, right? I have to force myself to do the process that Exclusive and I talked about earlier to start setting up my shares. But that's a little bit convoluted for the following reason. Once my account starts getting big, I don't even care for, like let me see if I can rephrase this. I don't want to step on exclusive toes, and then I still need a couple minutes. It's just so important what he was saying. What he was saying, that not just using options, using shares, bonds, different way, an ETF. The people that I know that managed money that are like, worth 8-9 figures, all right, from this game, all right, they didn't they some of them are a credible options trader, one specifically, all right, but for the most part, when they get to size, not any of them, if any of them, including myself, use options. And I want you guys to know that, so like that level, like your goals and what you're trying to achieve. And like Exclusive said, there's a lot to take in. You can't learn too much in one place setting at all. And that's what we do. That's why these are recorded. All right. But what he said, that's why it's so important, because I'm telling you, to prove to myself. See, let's say your account gets up. You don't know what to do with those shares once you get to size and stuff like that, unless you do what Exclusive and I said and learn these different hats along the way. And why I wanted to put a fine point on what he's saying is, there was a moment in my life where I took 100 shares and I just traded with that. I remember it was Micron that was like $22 at the time, or other stocks. I only traded 100 shares up and down until I learned. I'm telling you, we all get excited with the rush of options and stuff like that. But I'm telling you, there's a beauty, a freedom, pluses and minuses, lots of pluses on the shares. Imagine, right? You don't have to, you see your stock's up $20. By the time the market opens, it might be gone or half gone or stuff like that. Well, you could do something about it when you have shares. Can't do shit about it when you have options. There's countless examples. That's just one. It's countless examples like that. But when I get to size, like, my favorite thing to do between all of us here, this close knit family that we are, I like to get like 10,000 shares of something, like a nice big fat juicy round number, so I can feel that thing. How do I get to that? How do I get to a point where I can buy that? You're seeing me do it in front of your face. You don't see what my other account is, but you see me get 1,600 shares of, let's say, Amazon. All right, couple hundred shares of Nvidia. Shit adds up. This happened in less than a year. I told you I started with 20. I posted it. I think it was like 30 shares of Master. That's a lot, right? When it was $400 still for anybody out there, but it wasn't a lot for this account or for me. But it was the place that I started. Thing's 400 shares now. The thing's 400 shares primarily with trading it and other things within it or crypto. That's kind of the way I work, as you guys have seen my process unfold before your very eyes. But the thing Exclusive just said, it's so important. You guys all, and including myself as a listener, when I walked by and heard it, I was like, I couldn't get rid of the dirty diaper fast enough to run over to the phone. Pardon for the visualization there. But I was like, exclusive. I was like, people need to know this more. He's gonna pick up the slack as I mute myself again for a couple of minutes and finish some stuff around the house. But it's really, really important. And I wanted you guys to hear it from another pro that, like, to me, getting to shares, that's the spot to be. Because then I can do delta hedging. I get to earnings, right? The thing goes up $20. I can do something. I can sell those shares against, if I have option contracts, or just participate, do something about it. You can't do shit when you don't have that. And I'm telling you, not dealing with expirations, not dealing with theta, not dealing with implied volatility, knowing if you're going to go dollar for dollar or not, or what's happening, not knowing how the VIX, how the market's implied volatility affects your options implied volatility, nothing to do with the underlying stock. You don't have to deal with any of that when you have shares. There's a beauty and a huge plus to that. And I'm telling you, you can trade very successfully like that. It's something that needs to be added to everybody's game. If all you do is options and you don't have a share, it's a big mistake. When some of you have asked me, like, hey, sometimes I see you post your trades and I see you have one share. You see? That's where it all started. You see it now. I knew if I did it, And it would, months you would see it unfold. For new listeners, I'm sorry, but you kind of can go back and watch it unfold or see it unfold currently. But one share, a lot of these stocks start with one share. I wanted you guys to see what I say in front of your eyes. And I wanted to make a point. What Exclusive said there, it ran by it real quick because the guy's really smart. But it's so important. I know how you guys think. That's my gift. Because I've been such a fuck up. I've been through so much pain in this market. I've worn every hat and every screw up hat of every hat. I was a screw up scalper, a screw up day trader, a screw up swing trader, a screw up investor, a screw up everything. You get to learn from my mistakes. That's what I came here to do. Not only not charge people. This is my if one person doesn't make my mistake, it's worth it. That's what Exclusive keeps saying. Exclusive, please continue. I'm so sorry I took a long interruption, but you know it. You and I talk about it offline. All options, ODTE weekly. That's all they think. And you can be a millionaire actually not thinking like that, and you can lose the thousandaire that you are by constantly obsessing on options. I'll let you pick it up. Sorry it took so long to cut you off, but it's so important what you said.
No, I mean it's a fair point, and my only thing that I'll tag on that is, if you look at where the market was in 2019, bro. I mean, I know a lot of people weren't even trading then, but if you look at where the market was in 2019 after it recovered, and then what was being marketed to retail traders versus what is being marketed now, the difference is in higher risk investment vehicles and depositing cash into brokerages for interest. And there's a reason why it's being marketed that way now, because the newer generation of traders are coming into the market with a more I need it now, I need it quick, and I want to do less work type of trading. How do you get there? The allure of zero DTE options. I remember even, I mean, hell, even when I came to Twitter first, you know, I'm not originally from Twitter, so I mean, I was really late to it. I was like 2021, I think. You know, for the most part, I didn't really even see a lot of people trading zero DTE options. And that's just, or even SPX for that matter. But index strategies are primarily for hedging. And it's now been shifted to where it's one of the most talked about and most traded things now. And it is the most, it's one of the most risky investment vehicles that you can possibly have. And, that's just the way that it's marketed now. But there are so many other ways, especially with options, to mitigate risk. And, it costs more money, but you can buy time to avoid volatility, right? That's what future dated expirations are for. That's what, spreads are for. That's what there's so many things that you can do, and you don't have to buy options. You can sell the options and just play the opponent's hand versus your own, right? You can make less by risking less, essentially. And this is probably something for season 2, where we kind of go into more of the risk off strategies, because you know I don't really even talk about it on Twitter or in my community, but I am constantly hedged down the line. Everything that I day trade is already covered before I even start trading for the day, because you have to be hedged. If you're trading options, you have to be hedged. If you're trading stocks, you have to be hedged. And to come into a market where at any moment it can move higher from an all-time high break, or it can retrace back lower because people are starting to take profit, you see these moves, right? You see every year there's some new theme. Every year there's, first it was COVID, then it was recession fears, then it was the war, then it was, inflation and the Fed, and now it's the elections, and there's always going to be a theme for something new that can potentially shake the market in either direction. And whether you're a bear or bull, it doesn't matter. Both sides get their time in the sun. It's just, what side are you on, and are you hedged in the opposing direction? That's how you can, that's just another way to define your risk. I prefer the easiest way, and that's to trade with profit. And if I don't have profit to trade with, I stop and I take a break. And then I come back the next day, and then I do it all over again. But this is where that making a little bit of profit, keeping some off the table, putting some back in, trying to make a little bit more, keeping some, putting back in, you do it little by little, and eventually it adds up to a lot. But where we fall short is when we try to make it quick. When we try to, like Banana was just talking about, this is that one trade I know, Banana or Exclusive. One of them is going to call out their next shadow is going to pay 200%. I'm going to turn my $4,000 account into $8,000, and I'm going to laugh my way to the bank. It's never going to work that way. And especially with options, that's when it gets even more intolerable to watch, because it's just designed, the market by design, especially the option market by design, is for hedging, and people are using it to profit day trade wise. And it is just, it's so difficult to do it consistently. It's easy to do, but to do it consistently and remain profitable consistently, that is what the market is hoping that you fail at. That is what the market is designed to do. There's a reason why it's marketed on the news, it's marketed on social media, it's marketed as all these, these paid rooms. It's marketed that way because that's the theme now. How can we focus on higher risk asset classes and take it away from the retail traders, right? That's what we're talking about. How do we take them away from the safer investment vehicles? And that's why we're talking about all these things on the spaces, so that we can bring retail back to them. Even if it's a small amount of people, as long as we can try to influence it, then we're better for it. But you don't have to only trade directional on options. You don't have to just trade shares. There's so many different things that you can do. And hopefully throughout the course of these, 8 spaces, you've learned some new strategies, some new methodologies that you can apply to your trading, and hopefully you grow from that. That's the goal here, is to help people learn new habits, sharpen disciplines, or even if you're experienced, just a refresher, you know, fine tuning your skill set. Some things that we forget about, like the other day, I completely forgot that Lockheed Martin was a stock. Like, I don't know why. I had just forgotten about it for a few weeks, and I set an alert back in October. I think it was October, November, and I forgot about it until I saw an alert. So you can forget things simply from just not paying attention to them. And it's the same thing with your profit and loss. If you don't pay attention to it, and you don't pay attention to your plan, and you don't pay attention to your executions, how do you expect for it to be on the forefront of your mind? You can't set an alert for, your plan. You can only set one in place before the market opens and execute it accordingly and manage it from there on. But, it's our job as traders to understand why we do what we do and what we're doing and what the goal is. Because if you don't have a goal, and you're not setting a plan and executing your plan and managing your plan, you're just wishing. You might as well wait until it's nighttime, look up at a star and wish upon a star, and hope that you can make some profit without knowing what you're doing or understanding what you're doing, because that's what you're doing. If you're trading without a plan or not understanding what you're trading. But all those things that we have already discussed on this space and on the previous spaces, they all snowball effect into a strategy, a formula for success, because you can't do one without the other. You can, it might not be as effective. If you're a great technical trader and that's all you look at, then more power to you. If you're only a fundamental trader, more power to you. If you're only a market sentiment trader, more power to you. There's so many ways to trade that if you have your strategy that works for just you and just one specific thing, keep doing it if it works. Don't listen to me. Don't listen to anyone else. If you have a strategy that works for you and it's not what we're talking about, stick to it and don't deviate. But if there's things that you can pick up on and kind of fine tune a strategy a little bit, and your morning routine and some of the habits and disciplines that you already have or don't have, then it's worth adding, right? Because it doesn't really take much effort. It takes a little bit of time, but it doesn't take too much effort to apply something new. You know, it's just a matter of our egos. You know, are we willing to, you know, say that we don't know everything and be receptive to something new and maybe give it a try? Or are we just going to be like, no, they don't know what they're talking about. I know everything. I'm good. I'm going to keep doing what I do. And then, you know, you make money, you lose money, whatever the case is. But if you have your strategy that works, then, you know, take with what I say for a grain of salt. But I'm telling you, if you don't have the goals, if you don't have the plans, if you don't have the ability to execute, and you don't have the wherewithal to know when to take profit or exit, it's going to be a constant roller coaster, up, down, up, down, up, down, until eventually you hit down, down, down. Because that's the way the market's designed. It's designed to liquidate the impatient and the uneducated. And not that your people aren't smart or educated, but I'm saying uneducated in the sense of how the market works and how the math works in the stocks. You know, because these studies of time and, you know, the cyclical rotations, the seasonality, these things are somewhat predictable, but they're warning signs, right? If you know February is seasonally, for at least the past few years, February is typically a red month. You know, okay, maybe I need to take a step back in February. Maybe if I'm, instead of trading 5 days a week, why don't I try trading 2 or 3 days a week? Instead of, okay, I'm looking at my broker statement from last February. I took 500 trades. Why don't I, well, okay, 55 trades. Let me take one or two instead if I'm trading stocks. It's all about how you're looking at what you're doing and being willing to learn from your mistakes and learn from what you do correctly. And that's where journaling trades makes people better. You know, if you're coming in trading, you know, you trade for an hour or two, you come in, you leave, you make money, you lose money, whichever you do, and you never look at your trades, you never look at the chart, you never look at the time you entered and where you exited, where you trimmed, you're doing yourself a disservice because you're still trading blind. And that's why you might not have seen that consistent profitability. You might be up 10% a week, and then the next week you're down 4%, then you're up 20%, then you're down 30%, then you make money, lose money, make money. We want to get away from up, down, up, down. We want to get to a point to where we're consistently profitable. And if we win a couple and maybe lose one or two, but we're still profitable, that's what matters. That's sustainable. But when we make money, make money, lose all our money, that's what's not sustainable. And obviously, if you blow an account, you know, anybody that has blown an account, I've never 100% blown an account because, you know, I was ignorant when I first started trading, and I didn't want to admit to myself that I screwed up. You know, and I lost 60% of my money, at least I had some resemblance of, you know, a lowered ego to be like, okay, you know what, maybe I don't know everything. But to trade until your account's down 70, 80, 90%, that's craziness. That's just, that's just not being, that's just not you not willing to admit to yourself that you screwed up or that you were wrong or that you mismanaged something.
And I've done just that as I sit back down
We
here.
all have been there. Every single trader has been there.
It's
And
so
anyone who said
painful.
they haven't.
No, worse, because I tell people so that they can feel better about themselves. But I went beyond zero multiple times where I started to sell the cars that I bought from trading back to get my. I need to get 200 grand in my option account. I know I can get it back to $1 million. I know I can get it back to $1 million. Man, I did that so many times, 25, 28, 32. Thank God right now I haven't done that shit. But gosh, I feel for everybody out there that's been through it. And I've been through it. I'm doing a very miniature version of it today. but but it's because of the things that Exclusive talked about and I talked about earlier. For example, I just walked back in hearing him talking about he doesn't have anything unhedged. Same here. You guys see me posting the trades, okay? Not every person's going to do that, has the ability, wants to, or whatever, okay? But I'm doing it to help you. I'm not doing it to show off. I don't give you guys my real name. And probably one day I will. It's really just to protect my children, and I don't need the stature like to know that John Doe is fucking dope, right? But anyways, uh, I I sold cars like I said, so that's below zero to get to revenge trade, and that was the path to hell. And you see me now when I'm posting, you'll be like, hey, I see you have some puts under your shares. Is that because you're bearish or this and that? It's like, no, the majority it's still levered long because the shares are going to outweigh the delta on out of the money puts. But I'm going to constantly quote unquote waste the money and be happy to waste $1,000 or $1,500 for every 8, 9, or 10 grand I make, knowing that if things turn against me, like Exclusive said, because anything can happen on any given day, that I have something there. Even it's not like I'll lose 10 grand and the hedge is making me $1,500 or 2 grand, but better than just losing the 10 grand total. And the other thing that I taught you guys that we talked about in the last spaces was then that allows me optionality. Hence the term options. Where does that really come from? Is the optionality that we have as human beings to give ourselves not boxed in, not to be claustrophobic, right? So I've talked about this in the last spaces, and it's really key today is that I always have something. There's never, it's actually impossible for me to not have, like I said, I could be losing 200 grand and maybe only making 10 grand in my hedges, but at least 10 grand. I always have something green on my screen. Okay. Maybe if the market literally was donuts and like just a flat line for the day or something, maybe somehow, but still, there hasn't been in 20 years that I haven't seen something green on my screen for the most part. Maybe some kind of anomaly day I have to think of, but whatever. Then that allows me, even if I'm losing 10 times more than I'm gaining, okay, it allows my refocus. If I'm losing in things I'm still convicted, even it's a hard day, and even throwing my conviction off, but I'm like, hey, I know it's fucking NVIDIA. It's not going anywhere. All right, for the most part. As hard as it is, as painful as it is, as the loss is, I can at least the something green, that hedge, allows me to possibly, with mental discipline, and it's hard for me still to completely separate the events. Okay, so we're still taking it in the chin over there. That's still happening. All right, but let's pretend it's happening to someone else for just a second. Okay, and now the active trader in ourselves has to manage a trade that's going well. The hedge or something else. A sector rotation is exclusive, and I talk about constantly, right? So let's see if I can give an example in my portfolio through the day, because I'm going to talk about some really fun stuff in some of the upcoming segments in episode 8 of season 1 finale. I have something I teased last night, which is what I think is the next. I'm not doing this for followers or for money or anything. I really do a lot of homework and research. And I'm like, what's the next? I'm thinking the same thing you guys are. What's the next Tesla? What's the next SMCI? And it's a stock I've talked about a lot in the other spaces. It flies under the radar. It's not a well-known name. It's not speaked about a lot in financial media. It sometimes is. A couple of people have caught on to it. But it's kind of in a similar place. Remember, and I had posted the chart of it just again last night in the teaser of SMCI weekly chart. It had a had a big parabolic move, and then started to have a consolidated kind of look on the weekly chart to where I famously scoped out the big breakout. As far as I'm concerned, I'm sure a lot of other technicians and people have done the same thing, but exclusive is one of them as well. So this has a similar look to like the beginning of that. So I think it's about to consolidate a little bit. So that'll be our opportunity. But it's what Banana thinks is the next SMCI, long story short. Then I want to talk about NVIDIA, SMCI, and Meta. I think that'll be exciting to just discuss before we wrap it up today. But just where we are right now on talking about, for example, where I just was with the options and my screwing up and all that stuff. So I basically found a way where I can separate mentally. It took time. The horribleness that's going on right now. I know it's happening to a lot of your accounts because we all trade the same stuff, more or less. But that's why exclusive constantly shows other stocks. I show other stocks, other sectors, specifically discuss it, and hedges. So today, what do I got going? All right. I got my hedges going, obviously. And then I have a couple things, either relative strength, like a Google or sector rotation. There's a little bit of sector rotation. As you could see, the Dow is outperforming the other indexes. Okay. The Dow tends to be it's only 30 names. It's not really what professionals think of as the market as a whole. They look at the S&P 500, but it's just another litmus and explanation of the market giving us a message that, hey, things that are like the things in the Dow, because again, that's just 30 names, things that are industrial, maybe related, transport, conservative names, like a Honeywell. Some things are outperforming because the Dow is outperforming. It's only down 0.2%, barely flat, almost flat, where the Nasdaq's down 1.5%. Okay, so it's down 7 times more. The Nasdaq is than the Dow, right? So that is in and of itself called rotation. Okay, if they were all down 1.5% across the board, that's just a downdraft, a drawdown, the market pulling down, the baby out with the bathwater, everything coming down, et cetera, et cetera. So you have a little bit of rotation going on under the hood, as Exclusive pointed out off the jump. So I have Honeywell, I have these hedges. I need some water, and I have that's that. That's basically it, and a couple other things outperforming. So that gives me, where I started this segment, the ability to now, let's say, my NVIDIA hedge, or SMCI is even a better example because NVIDIA has earnings, so its IVs all juiced up both directions. SMCI is too, so maybe that's not the greatest example, but it's what we're dealing with. So those hedges right now, both, especially SMCI, are up to 300% at last look. Okay. One was over 300. So depending where they are right now, obviously, I can now do the following. I can continue my process the same way through my hedge. I can create a little creativity. I have optionality. Okay. And if I do the following, all right, and this is maybe hopefully where this is where I made a note to myself to do this analogy, and hopefully the light bulb goes off in everybody's head. In front of all of you, at least some of you out there, factually, and we can call me, if you call me a fraud, I'm actually okay with that. I would prefer you think that I paper trade and all my shit's bullshit so that you question it and do your own homework and don't follow my trades. Okay. But the reality of the situation is that I took $30,000 to over $2 million in front of all your faces. I want that to sink in for just a second. So now, if I have today down over it, it's probably over $300,000 minus the hedges, right? Minus me not taking it as bad on the chin with shares if I had those many shares represented in shorter dated contracts, right? So, like Exclusive and I have been saying all along throughout this entire season, and especially today, risk management, even though I'm really screwing up to my liking today, I have still exemplified and done as Exclusive has. And we both said, and me showing examples, so many things of different styles of risk management, moving out to longer dated, rolling up and out, choking the things by removing 100 contracts of things that are $6,000 contracts and buying a 20 contracts of things that are dollar contracts and letting that go to waste. So be it, after I made so many gains. So many different risk strategies we've discussed today, right? And those are key because I think they're not discussed quite enough. But we know that I'm taking it, as we all are, for those names that we like. But my hedges have now the ability to now not let me blow up. Because I proved to myself, most importantly, and to all of you who I love dearly, I do this for you, that I still got it. I still got it in me. And I can prove to you that you can get it. And if I can do that with $30,000, then this is where the light bulb goes off for all of you now. Then by always having that green on my screen, just change the proportions or the ratios of your, don't think of 200,000, think of 20,000 or 2,000. I'm just being honest with the numbers. I've got a lot more than 30,000 in hedges up today. So if I went into a coma and everything laid to waste that I've done so far, I can still start over. I still can live to fight another day. And that's the mistake that I've made in the past that a lot of you still make today. I see the DMs. We're open. We go back and forth. You're like, Banana Man, I fucking did it again. I wrote it down. I swear to listen to you. And, the old me got the best of the new me. And I get it because I've been there 1,000 times, literally. Exclusives just more. There's people who are more conservative, more disciplined, but he's honestly admitting to you he's screwed up horrifically. Not as bad as me, thank God, so many times. But we're all different. But nobody's infallible. Nobody. We all bleed. We all do. So I'm bleeding, but I have for sure, with all of everything Exclusive and I have said to you for 8 episodes, if you follow that, and can't give financial advice, if my little brother follows that, he always has a chance to fight another day. with what we do in this spaces, what we talk about here, you have a chance. You always have a chance. If you follow some of these very important risk managements. A lot of times when people hear that word or that phrase, it sounds so suity. And for the most part, we're trying to all get away from suits, right? Trying to supplement our income, trying to get out of our 9 to 5, trying to have freedom, trying to have that part of our life. So maybe there's a different word, okay? A different phrase. And I've been thinking about it because that thing's so corporate, that risk, it's like it's hard to be corporate-y disciplined. I get it. Just like Eminem said, if I'm stuck in the 9 to 5, that's the end for me, for my personality. I work 10 times harder. I got offered jobs to be an analyst, to work for big companies. Trust me. Probably make just as much, maybe less stress. Who knows? But this is the path that I chose. I've ended up working 10 times harder, but just the fact that I know that I have my own freedom unshackles me to work harder. Maybe that's how some of us are wired. When I was forced to play piano as a kid, I hid from my teacher. My parents try to spend money, these poor Ukrainian Russian parents that always force their kids to play violin or piano, right? I like despised it. I ended up becoming a concert pianist. I was accepted to Juilliard. I didn't go. My life took a lot of different turns and twists, but I can fairly say that about myself. I'm not on the level I used to be. I don't play like that, et cetera, whatever. The point is that when we find the right thing that unshackles us, that motivates us, I know how we all are. We're willing to work our ass off for it, sacrifice for it. We just got to be passionate. Well, the phrase I thought of, I just said to you sneakily, and I felt my heart beat out of my chest as I was saying it to you guys. And those are the moments I know that, like a knife, I get into you. And we're going to get out of that risk management word. And maybe Exclusive remembers it, and I'm going to remember it going forward. But we're going to live to fight another day. That's our word. That's our phrase here now. I want to make sure that when I leave today and go on a much needed breaky break, that I know in my heart that I left you guys with the ability to fight another day. Go listen to Josh. Go listen to Mikey. Go listen to Stock Talk. Go listen to TDSR. Go listen to Casey. Go listen to Exclusive's Discord. You'll scalp out great trades. These guys are beasts. Amazing people. That's not what I want to do. I'd be different. I want to make it so that you don't hear the tears that are in the back of my voice getting choked up right now. Because all I got to do is think about my kids and those days that I slept in my car. And if I would have done that when I had them. Thank God I figured out how to live to fight another day. I did it by figuring out the things that Exclusive figured out. Thank God he did it sooner. I want my pain to be your gain. I hate it when I cry on Twitter Spaces. It's happened quite a few times. One time when I lost my best friend, not that long ago. And probably at least 3 or 4 times when I think about my kids and losing everything. And I also think about it with, I'm not a social media person. I don't have an Instagram even. Maybe one of the few people that don't. So this is new to me. I don't even know how to educate the way Exclusive has the track record and the time that he spent in his private communities. I'm just doing my best to give, I know, a wealth of information because I work my ass off to you guys, and then just the experience and passion and pain. Because from the pain has come all the gain. The pain is what's made me. And I hope that you guys are formed differently. We all need some of it. We all have to stick our fingers in the electric socket once or twice. But I know the real bad side of this game. I've lost relationships, friends, family members for time. Because when millions of dollars fucking flies around for the shit that people are willing to like rob banks for, kill for, I know what it means. And I know the disservice that I've done to myself and the people that have come before me to be so disrespectful to money that people work so hard for, that I don't come from I come from immigrant parents that had nothing. I grew up poor in Brooklyn, in Brighton Beach, and Coney Island. Not that long ago, I made myself poor again. When we set out to do the Spaces, we had promised that it would be from the heart. That it wasn't promotional. That we want nothing from you. So here I am, pouring out my heart once again on freaking Spaces, crying in front of thousands of people. But I learned in my completely inexperienced social media way, as you see, that the connection, the draw that we have to each other is because of this. Because Exclusive and I are different. And I'm different. And this is my specialness. The specialness that you guys will find. You know, I've had so many people reach out to me. It's more rewarding than some net that I perfectly nailed an earnings report out of all the earnings reports. Trust me, it's a big deal. Like if I worked in the analyst community, nailing one amazing call would get me a bonus, and like dozens would be like unheard of. Exclusives like that. Mikey's like that. There's a lot of people like that. They're gifted. We have a talent. It comes from hard work. It's achievable for you, not just for us. We've proven it. But the more rewarding thing is when I have a single mom nurse tell me, I'm afraid to speak in front of people. And I hear you talk about it. I hear you fucking crying and pouring your heart out in front of strangers when you're scared to do so. And I've gotten more out of that banana than the amazing charts or calls, or not amazing charts or calls. That means so much more to me. It makes up for all the pain. It tells me that I have purpose and that what I'm doing here matters to you guys. I'm not looking for the next best trade that's unrepeatable because you just listen to me say it. And then you're hooked to that and to me. And if I'm not there, you desperately need to listen to someone else, another name like I've mentioned before. I don't want that. I want you to feel that you've learned about trading, about life. For the men listening out there, I want you to be exemplified by me. To not try to do the trades or grow a $30,000 account to $1 million. To be a good dad to your kids. To be a good boyfriend to your girlfriend. To be a good husband to your wife. If you're alone, even better. I'm with you. You're not alone. I was alone. So alone for a guy who had not friends, everything, that I wanted to give up on life. What do? I had two choices: give up on life or sacrifice for the life I wanted. I'm broke again. I poured everything into this business. I traded its profits in the stock market, and now I can't make payroll. I can't pay people's paychecks who depend on me. Well, I sold everything I had. Except one shitty car that was for deliveries, and I lived in it to make sure people got their checks for me being a fuck up. It was either give up or sacrifice everything for the life I wanted? How will I ever be a millionaire living in a truck? What woman will want me? How will I take care of another human being when I can't take care of myself? Downstairs is a beautiful 2-year-old in a beautiful room, in a beautiful house, on the lake of one of the most beautiful places in the country, Lake Tahoe, Nevada, California. She gets to go see ducks and swans every single day. My older daughter walks to school and walks by horses. I grew up in Brooklyn and cut my teeth in fucking Los Angeles. Anything is possible. Anything is possible. If I leave you guys here today, pouring my stupid heart out, embarrassing the shit out of myself, but one of you dudes are better to your kid, better to your wife, better to your girlfriend, to the girlfriends that I wasn't while I was a fucking crazy nutball fanatic and nightclub owner. If you're better to your friend or to your father or your mother, if you still have them, it's a blessing. If I leave you with that and the ability to fight another day in trading, then I've done so much more than a list of shout outs that may have gone 1,200 or 1,800 or 500%. I have done so much more than talking about investing strategies. I have done so much more than promoting some type of service. That it will fulfill if just one person feels like that after today. Everything that's gone wrong, you're my chance to make it up. That's why I don't want money. I can't. I know I could. But I had to explain to you, for new followers out there, I didn't know it was gonna be one of these. Josh is probably gonna text me in a minute like, oh fuck, here we go again. Or already did. This one feels different. It feels like the culmination of my journey on social media with you guys on Twitter. Finding my place in the world where I can give my gift and my craft, but my pain is so much more valuable. So forgive me. This wasn't planned. This wasn't a part of the segments or the next. This wasn't the next SMCI. If you're wondering out there, oh fuck. But I felt this this thing happening right now. And before I used to hide from it, and I used to be scared. I used to perform as a musician, and I started to deal with stage fright after the fact. And I learned that happens sometimes, that like we're naive enough to not care, and then we start caring what everybody thinks, and it can become physically debilitating, which it did for me. And I learned here with you guys and a couple coaches, life coaches, that have done for me what I'm trying to do for you. That the best thing to do is to face our fucking fears. To be open. If you're shy, say you're shy. I just learned that as difficult as it is, that instead of telling exclusive to please pick up this slack, this particular slack, while I go cry, is not who I am anymore. And not who I am with you guys. This is who I am. Take it or leave it. This is who I want to be. I don't want to be crying in public. I want to be a strong man who can get through any problem, which I do. But I am emotional and passionate, as you can see. Sometimes too much, sometimes not enough. But if I can make any person a better trader and a better human being, the latter is more important to me out of the two. Thanks for listening.
I'm trying to find the words to articulate. So
I'm trying to find a tissue.
you know, I got man. As soon as you started talking about your children, I already knew it was going to happen. And
that
you know,
that was the giveaway.
I was, while you were talking, I was doing two things other than watching the market. I was thinking of, things that have or are transpiring in my life that I can relate to, and I was reflecting on some of our past conversations.
Mm-hmm.
And for those who are listening still, this whole space is this whole theme and stuff. None of this was random, right? We said it every space, and Banana could have done this with anybody else. I could have done this with anybody else, but I've been truly moved by the depth of strength and resilience, I think is a good word, that Banana has shown to in a public format too, because it's not easy, especially on FinTwit, where you're ridiculed for everything. That's not what people want to hear.
Yeah.
And when your strength and resilience can be shown after facing or currently facing echoes of what's happened in your past, it's not easy to confront those memories, right? Much less grow from them, which most people don't. And yet, we're on a spaces talking about how you have grown from them, so that the listeners can hopefully and potentially benefit and grow. And that that reiterates the purpose of why we're doing what we're doing. And
Thanks, man.
you know and I don't mind saying any of this publicly, but your journey hasn't been without its trials, just like anybody else that's had trials in their lives. But it takes courage to display it, obviously publicly, but it also in private, it takes courage to, display stuff like that. And moving forward and growing publicly or privately, it's inspirational, right? And I want people to understand that, you know, opinions are just that, but it takes a special type of person to openly discuss, their personal lives or their issues or their pasts.
Yeah.
It's not just something that, it's not just a switch that you can flip on or off. I'm a pretty private person. I've told Banana some things in private that I haven't really shared, but I can't help but admire how you, Banana, have channeled those experiences. And I'm not just talking about challenges. I'm talking about the triumphs, because there is triumph here too that I'm getting to. I'm trying to find the words to articulate in real time, so you have to bear with me as I stumble through it. But you're finding a way to get through those challenges and triumphs, and through these spaces, I feel like it's also another way to present a vision to the future for
Mhm.
people that you and I both want to inspire and hopefully change for the better. Because it's not just for you, it's not just for me, it's also for your children, and it's also for our families and our listeners' families and people in their lives that they care about. And that's one of the things that's one of the beautiful things about the stock market, because there's a lot of negatives to it. I know there's a lot of negatives to it. But the stock market can also be a vehicle to secure that future and to actually grasp a hold of it is a testament, right? So the saying, practice what you preach, you know, reap what you sow. I'm happy to be a part of it. And I mean, when you talk about adversity, that's one of the better stories and experiences I've heard and been privy to. And I can tell, and correct me if I'm wrong, this is just my assumption, based on your approach to how you trade and invest, speaks to your triumphs based on your previous circumstance, because you're catering your style of trading to creating a stable and prosperous future, similarly to how that's correlated to your life, where you're building a prosperous future for your kids. And that speaks volumes about your depth and commitment to your children and what you're trying to share to other people. And that's one of the reasons why, you know, I wanted to do this with you. And I'm sure why other people appreciate these these spaces, or your feed in general, without even spaces. But people need to understand that it's not just the value of this endeavor, the spaces, isn't just financial security or promises of a profitable financial future. You know what I mean? Like that's never been, you know, the purpose or ideology behind this space. But it's about learning from your trading experiences, learning from your life experiences, and turning those into a tangible legacy. it's I think of that movie, The Pursuit of Happiness,
Mm-hmm.
and it translates to this kind of,
Great movie.
but it's the pursuit of growth,
Yeah.
and it's personal and financial.
Mm-hmm.
But, I know you mentioned, you know, at that point in your life, when you were going through your tribulations, you said that you were alone, but now you're continuing this path regardless of what happens. You're not walking it alone anymore. So, I mean,
Right.
I'm here to support you. I'm sure the community is here to support you too. And our success and our shared success. And, it's a step further than just, offering a listening ear or a word of advice when you need it. You know what I mean? Because anybody can do that, sure.
Yeah.
But when someone does it and means it and isn't afraid to say it publicly that they mean it, that's more valuable. That's just my opinion.
No,
But
it hits home, X, because what you're saying is where I believe myself and yourself wanted to steer the ship, right? Because we chart a path, and there's a bunch of ways this can go, and we even talked about that. There's going to be times where this has to be and should be an emotional, passionate spaces, because that experience, that trial and tribulation, as you eloquently put, they're the things that have formed me, and the things where, like you and I set out to do when we charted this path, as I just said, where we can maybe lay out some of the mines, right? Just a couple that people don't have to step on, right? I brought up the example. I'm getting some messages from some people. I appreciate it. TSDR just messaged me, said something nice. Josh just said something funny, trying to throw me off. But I see Casey hopped in,
as he always
and
does.
and that's yeah, and that's why I brought up Casey earlier, because you and I, it- it- we've talked about this with people we see, like, in our community. Not shit talking, quite the opposite. Like, we see people, like, at this spot where we used to be, and we're like, man, this is the mistake I used to make here or there. This guy's doing it better, or like, I hope that they don't do this or that. And I brought him up earlier because, for the point that we're talking about, here's a guy that has a difficult and respectful job. All right, and it's for him to discuss, not me. But and he's trying to find a way to provide for his family, like a lot of our listeners, and as you just said, we set out to do, and the goals and the trials and tribulations that we went through to get to this goal. And I see somebody like that is like a man after my own heart, that's doing that and taking that leap of faith. That's one aspect of it, right? And then we know how I feel about discords and stuff like that. But there's some people that have the right things to show other people that has value. It's just, I'm not a fan of the scammers, and this isn't that type of person. But the thing that I appreciate, and why I brought him up by name specifically, because I don't really like to do that, but I brought him up, was because of the whole rant that he missed, and maybe he'll have a chance to listen to the recording, is because what he exemplifies, and what him and I have talked about when him and I did our private spaces together and became friends, is what I pray everybody can get to as soon as he was able to, but took me a life to get to, which is, to me, what's more important than the fact that he nailed some futures trading is the way he takes care of his kids, the way he also wears his heart on his sleeve. The community's better for people like that. And when you say that the community's better for what I do, it warms my heart because I don't know what the fuck I'm doing. I literally don't. Some of these guys, Casey included, yourself included, you guys are like seasoned pros that dealing with private communities and social media a little bit. It's all kind of new to me. You know, I don't care that I have, like, I've never put like I'm at 10,000 followers, I'm at 20. I don't care. I care that I get more so I can have a better reach for only that reason. But the way Casey treats his kids, the way he treats his significant other, the way he still trades, knocks out a couple of good trades here and there, shares them with the community, but then takes good care of his kids. Right? The reason I told Josh to make sure that today's space has got in his ear, since he's listening, his ear's on me right now, is because, Case, I love you. You remind me so much of myself. And I made some mistakes right around the period that you're at that I need to make sure that you don't, which is as you're starting to get these juicy gains, I know you are, because of the stuff we've talked about, because our community's different. But it's just a reiteration. It's so that people hear it more so than you, obviously. We've talked about that exact type of ideology as well. But some of these juicy trades better be, promise me, DM me, show me now that they're going to longer term things for these kids, for these beautiful, beautiful kids. And that'll make my day as well. Because that's the thing. That's what this space is. We talked about it since the jump, right, X? We have the novice, we have hedge fund managers, we have wealth advisors. They DM, we share the DMs with each other. That we're not like making stuff up to you guys. We have CNBC and Bloomberg technicians DMing us and listening to us. We have Casey and Josh and people from the other spaces. They're busy doing other spaces and their stuff, but they still come over to support. Because that's what's different about me. That's what's different about X. That's what's different about this spaces. And I hope that they take a piece of that into their own lives, in their own spaces, in their own things, because everyone becomes better for it. Some people focus more on scalping, day trading, swing trading, or talking about this thing, or don't want to share their personal life. It's all gravy. This is who I am. This is who our spaces is. This is who Exclusive is. This is season 1, episode 8. And on that note, all right, let's pull back from the emotion. Let's swing it back to the market, and let's talk about a couple things here. Let's see. First and foremost, NVIDIA earnings. Let's not bury the lead. And then I want to talk about the episode, our structure, and when we can look forward to being back together again. Because I'm going to be sad to actually walk away from you guys briefly. But I'm having a baby soon. So let's go back to NVIDIA, the reports after tomorrow. After tomorrow, X? Yeah.
Mm-hmm.
Yeah, today's, these short weeks always
I keep
screw me
thinking
up.
today's Monday. That's why
Yeah, exactly. So, a couple things. I like, actually, that it's finally giving up the goods a little bit and the rest of the AI stack. And it's not just continuing flying close to the sun as it goes to report. There's a couple things I want to talk about and how I want to lay this all out. I don't exactly have in my head, but here it goes. We had a little segment earlier where I tried to take us off the charts because all of us are armchair technicians. It's what Exclusive and I educate on. Exclusive and I have a strong degree of education on technical analysis. I've dedicated most of my life to it. I'm not a CMT, but I am. I was going to be one. I know all the examinations, all those types of things. But that's neither here or there. Why I wanted to kind of say that Exclusive and I have that level of charting was exactly for the reason that sometimes the charts can fuck you up. Plain and simple. Okay. And in this case, besides our scalping and our swing trades, and again, spaghetti to the wall, seeing if things are holding our support. If they start sliding below, we're out. If they're holding, those are just our little mini technical mini things. All right. But broadly speaking, here, where the bigger money's made, all right, we need to understand this forward PE situation. And the spaces that Exclusive and I did, what was that, 2 spaces ago, I think, X, whatever. We have it recorded. Again, X is going to like really tidy this all up nicely for all of us after today. But I think it's about 2 spaces ago, X had a segment and I dovetailed it, and he did an incredible job on it. I really urge people to listen to it on talking about the different P's. And that's price to sales, price to book, price to earnings, with a couple other caveats. In this instance, it's not important what I think, right? It's important what the market thinks. But for me as a forecaster, again, we talked about that in another segment in this space today, that forecasting, charting, and trading are 3 different things. Okay. Always have to keep that in mind. But in my forecasts, all right, I had to lay out this roadmap to see if the market would be there. Then I would know if it's there. That's the model the market is assuming. Not because it's mine. That's just the one the market wants, right? And in this case, generally speaking, there's always little caveats. You're going to hear the bearish argument constantly on NVIDIA and SMCI that they're 20 times sales, however many sales times SMCI is based off of outstanding shares and its current reports and et cetera, et cetera. All right. Anybody can say what they want and just be like, oh, this thing's, 4 times book. It's like, but again, it's what the market wants. And so far, I could be wrong. And there's never a guaranteed exact formulaic conclusion, right? The cross streams, we talked about the river, the salmon, the multiple balls in the air, the tug of war constantly. All right. It's not linear. But for the most part, generally speaking, it seems that the market has taken the following, and maybe this is worth writing down. When a stock is unprofitable with a strong growth trajectory that's about to go from that inflection is the key, okay? That it's, they could be doing that for a decade, but it's about to happen, that they're about to go from unprofitability to huge profitability because some inflection is taking hold of scale and demand. Okay, make notes of all that stuff. It's like business class stuff. All right. So you have a company now, right? That its scale, its demand inflects, and now it goes from something in the market that Exclusive talked about to another thing that Exclusive talked about. And it makes that journey. It's never again stamped that I'm right, but it tends to make the journey of going from price to sales to price to earnings on a forward PE, because they're highly juiced growth companies, and you have to think of them more out into the future because of those discounted cash flow models are constantly computing what these companies look like 12 months out. Okay. So, and in the analyst community, it's called the out year. All right. So I laid out in front of all of you before it happened, not because I'm special. That's not the point of this segment. So that we saw if the market took the formula. And this is it. All right. We talked about kind of this abstract rule that companies that grow 40 to 50% consistently, right? And we talked about that difference, that if your growth is decelerating, staying at 30, 30, 30, 30, or growing 31, 32, 33, 34. That's important to analysts in Wall Street. Okay. But generally speaking, in a company that is growing, so that's going upwards in revs and earnings at 40%, okay, trades at a 35 to 40 multiple. All right. Something that grows at 30, 30 multiples. It goes at 20, 20 multiple. There's little twists and variations and different sauces of all that. But if you have that broader picture, it will undoubtedly help you. Okay. So the reason I wanted to go on this off the charts segment was because tying in, as we always have connective tissue in our spaces, what Exclusive said on the price to sales, because SMCI, and this is where I'm bringing back to the fun stuff, and NVIDIA have inflected that. They have gone through that turn. They have gone through this mechanical process. I'm pretty certain of it. It's unfolded in front of your eyes, laid it out before, and many other analysts did too. Okay. And NVIDIA is basically trading at a 35 multiple right now, okay, of about $20 of EPS. All right. The last guide, this is just off memory. So if somebody's, hey, this thing's off by 50 cents or a dollar, you're going to miss the forest through the trees here. All right. More or less, they had guided the last time it was like 16, $17. And then it went up to 20. All right. And the market had to do 35 times 20. Alexa, what's 35 times 20?
35 times 20 is 700.
Where did the stock go to? Now, I said this, Casey's my witness to this thing because him and I were actually really into this math when he was kind of like really getting into all the, this part of it, and really, really brilliant absorber on all of that. And we, right, Case, we remember how this all played out like we discussed. And here the market caught up to that multiple. Now, is AI overhyped? Is this that? Sure. It's because this stock is like if this stock split itself already and was like $40, it wouldn't make everybody's brains crazy. It's seeing something go 500, 600, 700. What's next? 1700, 2700. Come on, banana. How much of this AI hype already? Blah, 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 blah. Dude, I'm not, as much as everyone thinks so, would I have been wrong to not think NVIDIA went to where it went? Would I have been wrong to not think or portray all the things that I did? I would have been. Be like, oh, you're bullish. I would have been wrong to not be what I was up until this point. And I'm not anything that you may think that I am. I'm math. I'm math. All right. And if this company keeps fucking making so much money, then it needs to go up in the stock price. Is that sustainable? Is something else that's a longer conversation. Okay. But for the next 4 quarters, this thing's got a backlog. So give it its multiple. And this is where the other segment is also going to connect to this tissue. For those just jumping in, sorry, but listen to the recorded thing. The typewriter analogy is key here. And that's where it's going to tie to Meta, NVIDIA, and SMCI. And I think it's more important to trade off the charts for the bigger picture. Again, scalping, spaghetti to the wall. We know our 5-minute, 2-minute, 15-minute structures, et cetera, et cetera. Okay? But the millions, the hundreds of thousands, the thousands, depending on your size account, all right, could be made when you see the forest through the trees. All right. The forest here is a 35 multiple. Meta deserves it. NVIDIA fucking really deserves it. And guess who else does? SMCI. Sorry for those seeing this thing going up $100 a day. Hey, it's not your fault or mine. But this thing is going to, and I'm doing more research on it because I'm finding it quite unbelievable, but it's going to shadow a lot of those NVIDIA chips, meaning possibly a good majority, or if even a fucking fraction. I want you guys to understand the math. I'm not a hype man. I don't give a shit. I'm going to make money. I'll find if UNH is the thing that goes to $1,000, then I'll go to UNH $1,000. But that'll definitely be hype. Okay. These data centers that are fucking hundreds of billions of dollars, Google, Amazon, Apple, Meta, these cloud service providers have built out in this country. All right. They're all going to be rebuilt, top to bottom. And these companies are in the fucking smack middle of it. So how much does that get priced in and pulled forward? Okay, all right. That's the fair argument, but it's not hype. So then let's do the math. Let's just be fair to the math. If NVIDIA guides up and it's 22, 23, and then some people are, this is starting to become, this is a whisper. So just careful, but this is a whisper. All right, we'll talk maybe if we have time today or another spaces about expectations, sell side, buy side, and whispers. But the whisper is that they're gonna maybe adjust the full year of the out year up. So that's 2025 adjusted full year up. If they do that, and then they guide the quarter up, basically people like me and professional analysts will very quickly be able to plug into their fucking Excel spreadsheets and their criteria models already made out. And be like, oh shit, this thing's going to do $25 of EPS when you plug in the outstanding shares and all the other things. That part's pretty simple. That's rudimentary. All right. Figuring out this creative part where the earnings are going, the guide and what that means. That's kind of a little bit of the art. But again, we talked, this game is a combination of art and math, but very quickly the street's going to figure out $25 of EPS. And then the art's like, what do you attribute to that? Well, if we have seen the typewriter analogy, right, that the market bidded the stock to that 35 multiple, and that's where it stopped. Okay. If the fundamental of the company, like the typewriter analogy, resets because they have an extra guide up and more earnings, that means that the split second after they announce those numbers, that forward PE, which currently, I just froze out at the screen. Again, my memory should be good enough for this, just to follow along here. Like NVIDIA got back up to a third. I was pounding the table, right? 23P, 23.4P, should be 35. And it got up to a 35. And that's where it paused, literally like almost around there. And what is it wants now to understand what the math is going to be. That all is dealing with the tug of war, the cross streams, the river going one way, and the salmon of, yes, the stocks run up a ton. There's somebody who has 7 million shares. We discussed this in another earlier segment today. The professional growth portfolio managers, professional hedge fund managers talk, like how I explained earlier. I can't go into all those details, but their weighting started at a 3, 4, 5% mark, depending on how special they think the freaking thing is. But then let's say even it started at 3, this thing's gone up to 7 or 8, 9% weighting. And if it's a big shop, their risk manager literally like gets on line one, is like, you got to do something here, and they got to adjust something. All right, and then they bring it down to a 5% weighting. They're still as bullish as fuck, but that guy going from 7 million shares down to 6 million is maybe why it's down $40, or mixtures of it. It's not, nobody knows. Okay, so banana, you said, if they report and then it stays here. This happened in the last time, okay, guys, when it was $400 and $450, and you're like, hey, you said it's going to be sick. You're mad. It caught up to itself. It could go through a period like that, or it could put it right on it. And I want to give you guys, this is why it's difficult. And you got to juggle the balls in the air. And I have examples of everything. I'm not just talking out of my ass. All right. Gave you guys the example earlier. We're going to tie it back in again. Meta. All right. What happened? Meta had the typewriter go up and it stopped at something like, 400, 410 bucks a share, 420, around that level. The exact cent doesn't matter for this conversation. It stopped there because it needed to see what the report was going to be. Okay. And same thing happened there, except kind of opposite. The thing was like a 16 times P, and then finally got its love back up to like 25 times. All right. But we remember what we just said? Is it growing 30% or 20? Is that accelerating 40? So we know, should it be 20, 25, 30, 35 multiple, right? Let's hear the report. And we talked about that 80% of the time, like kind of what's happening to NVIDIA and happens to a lot of stocks and just good scalpers and traders, just that's why they hate NVIDIA's and Meta. I get it because they're like, they're up so much. We're as traders, you're meant to think the other way. You're like, it went up $100, I should buy puts. Okay, I get it. But the valuation and math matters too. And I've proven that to you, that charts, technicals, and this, they all form. They all have ways to form. I showed ways that I was scalping up and down NVIDIA when it wasn't doing much, but I kept using those short-term profits, building my conviction to those 700 strikes longer dated, because I knew the math would catch up to itself. All these things play. All these things form. All right. So in Meta, we went into that earnings print, and what should have happened by the rule book of the basic trader is that, hey, this thing ran up a lot into fucking earnings. It should cool off or pull back. But what happened was the earnings was so much that they needed to keep the multiple or expand it. It had to, because it was now not 20%, it was 30, close to 30. I forget the exact number. But that trajectory. And now what is it? Now the PE is like more like a 27. The math follows itself. Yeah, if you bought short-term options for it to be 475, you went to 460, you're like, banana, your fucking math fucking sucks. It's not, that's not the case. Those are two different things. All right. There's short-term, technical, and then there's where the math catches up. All right. Now, so this segment I wanted to do a little bit more. We talked about the short-term charts and things and technicals of a lot of those stocks in the markets and what's happening. But on this off the charts segment, all right, I believe it's as simple as this. And maybe if you've been making notes, or sometimes I rant too much and then just make a little side note now, this might be one of them. But I believe, this is kind of what I'm trying to culminate all of this to, that Meta, SMCI, and NVIDIA, simply put, are buys when their forward PEs for the intermediate foreseeable future are below 30, especially 25, and then their trims or sell into strength as it goes above 30. And I've been kind of backtesting this a little bit now, that because there's not too much to backtest because the market's just caught up to some of this, right, as we've discussed right now. But I believe it to be true, and I believe the market's shown it to be true for the most part. Again, it's a little abstract. It's not as exact as we're going to bounce off the 50-day moving average that's $100.02. Okay. But it allows us to know when something as volatile as SMCI, okay? Just think about this, guys. I'm a pro. I've been doing this a long time. Whether you think I'm good or bad, it's for you to decide. Okay. But I've been doing this a long time. All right. And I posted some ideas on SMCI, blah, 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 blah. And there's times where I know that I can get very detailed and decisive with my charts and have a strong inclination it's going to go, like we said, to a specific cent and target. And I've shown that to you guys. Then there's times where it's not like that. And then there's times that other people still think it is. So, for example, I'm not. You haven't seen me post a chart on SMCI. There's a reason for that. Like Exclusive said, there's reasons for when we do or don't do certain things, right? And on SMCI, I posted more thoughts. All right, And to me, seeing the comments and interacting with the retail community and then our inner core community, kind of two different things too, has been kind of almost research for me, a new area of research, because my brain can't help but create another side algo that sees when I have too many people think a stock as volatile as that they know the exact, one guy's like 620, 670, another guy's like 740, and each one couldn't be more fucking different than the other one. Okay, I know what I'm dealing with here. I know that it was time to do an off the charts segment with MySpaces. MySpaces be different with exclusive. And if any of us start to think that when things start to move like that, because they deserve to, they're trying to re-rate, but there's so much profits and option craziness and scalping and vitriol that happens on such a journey. It's such an unbelievable journey because it is. There's very few companies in that pull this type of stuff off in the entire stock market, in the entire history of the stock market. There's only been a handful of companies in the entire world ever that have gotten to $1 trillion. Nvidia is one of them. So I get it. Actually, probable statistics, when you think of it that way, they're probably, if you knew how to like manage money very well in all sorts of landscapes, it's actually a good thesis for a short because you're betting on lightning striking, literally. But lightning has struck, and the math is apparent. And if we think that we're going to catch exact levels, okay, yeah, as things starts breaking yesterday's low, you can again scalp da 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 da. All right, but broadly again, I believe that if we understand that when these things are making this much money, it's not hype, it's a fact for this many quarters, and the market's attributed X amount of multiple, then when people profit trim, when people overjump on shorts, when it's just time because it's parabolically ran into 9 green candles and has a hanging man now, and it's time to visit a couple other candles below, that's the opportunity set for this segment. Again, the scalp and that stuff, we talked about that. Fucking exclusive was all over Nvidia puts. Okay. I showed you guys the SMCI hedges. I told you guys, I showed you where I took profits at 800 and 1,000, sold shares. I'm like, it's a hockey stick. But I still have to be open and honest with the off the charts segment that this thing is making that much money. And in fact, if it's to be true, which it seemingly is, that it's going to shadow, again, not all or even half, but a fraction of fucking all of NVIDIA's chips, then $85 billion, which is more or less this thing's flying around $100 a day. Okay. But I think that was at $1,000 a share. So I want to give the extreme view that will give us the conservative view inversely. You'll see what I mean. So if at $1,000 a share, it was an $85 billion company, I'm still trying to maybe plant the seed here. And I'm trying to come to grips with the two. And like, is this thing really gonna do? It's unique, to say the least. Okay. But the math for the intrinsic potential, if they just do a fraction again of what Nvidia is gonna do, then 85 billion is too cheap. And that was when it was $1,000 a share. Is too cheap. And everyone's like, this thing's fucking up 400%. How can you even use those words when you are trying to protect your commute and stuff like that? I got to give you all the balls in the air. I'm not going to sugarcoat or hide that. We don't do that here. Okay. This thing is going to continue to be too cheap. It's 20 right now. Now I got my screen back up. Hang on. SMCI. shit, I got too many positions. When it takes me that long to scroll, I know I'm getting a little cray cray. All right. This stuff is fluid in real time. Again, my app is able to calculate it. Not everybody's is. But my forward PE at 748, which the stock is trading around right now. Again, it was 692 like what, a half hour ago. At this rate, it's 25 forward. That's still too cheap. You get it? It's got it's gonna find it. It'll find you. Mark my words. All right. And there's no guarantees here. I kind of hate that phrase, but mark my words. This thing will find its way over a 30 forward PE. It's growing. It's not. You got to worry about that when the companies are not growing and PayPal and everybody's taking their business from them and stuff like that. That's not the fucking case here. All right, PayPal's got to come up with ideas that are like BS ideas right now. Maybe they catch something or copy and paste somebody else's thing, but they don't have like anything like disruptively innovative. This company does. Again, you got to kind of be honestly an MIT engineer. So when I hear a lot of people on like Twitter, including myself, I always lay that out. I do a lot of reading. So I will just dabble like one of them, but I'll explain. But I talk because again, in the earlier spaces, I've developed the success, luckily enough, through all those trials and tribulations, all those dark days, to get to a point where I hired an attorney to tell me about antitrust when it was going after half of my portfolio. Okay, I found people who build data centers who work in this field. All right, and from my understanding, this thing's the cat's meow. I'm pretty skeptical usually of that, and I still remain to be, and we should all be too. Okay, but it looks like a lot of Nvidia's chips are going to go into these racks. All right, that SMCI makes. And they work better that way. They're more efficient. They have more compute, and you're not gonna. That's what you're gonna want. Okay. It's if you can't get that. Excuse me. If you can't get that, or it costs too much for some particular budget, you will use AMD and you will use something else similar. And that's what I'm going to talk about later before we leave. What I believe is the next SMCI. It's like the Scottie Pippen to the Jordan as AMD is to NVIDIA. I believe this is to SMCI. All right. And they have some differences and they have some similarities, and that's where it's cool. And we'll talk about that before we end today. I'll probably leave that to the very bitter end for you guys. But again, so tying back to this off the chart segment. So that's why I wanted to bring you the meta example, because it's not just like I can say a bunch of shit and sound smart and you'd be like, oh, that guy sounds smart. But if I don't give you real market examples and experience, we can't tie this connective tissue, just have too many loose strings. And then it's like, is this guy a fraud or not, or whatever, that, like whatever. So on Meta, that physical, factual, mathematical number was so big. And then the trajectory, the guide for the future thing, like, well, is this a one-off? So it's a one-off. Well, sometimes they'll punish your stock more. If they thought that you jumped the shark or a high water mark, those are like, if a CFO, exclusive, you remember that day in Caterpillar when the CFO was like, what, 2-3 years ago, said high water mark and the whole market and Caterpillar took a dump. I mean, it was bad. And everyone's like, how could you say that? And it turns out it wasn't the high water mark. Like, so sometimes you got to be careful what they say. These terms are all kind of mean something. But if they would have said anything that made it smell that it was a high water mark, okay, this thing would have been overtly punished, especially for flying so high. But what turned out to be the case was the math. Was like, shit, they're growing at 30%. It's not stopping, at least for the next quarter or 2 or 3. For sure, the next one. They guided up for the next one. And like, what do we pay for this thing? I mean, like, those people who run the money that make your stocks go up and down, you think it's from the charts, but it's from a growth portfolio manager saying, I'm going to add 1 million shares or sell 1 million shares to my 8 million shares. That moves the stock, that actually moves the stock up and down, and a bunch of algorithms copy and pasting or whatever. Primarily that. But which we talked about again in another. So we had a lot of segments today, exclusive. So, and I still was able to cry in public. So awesome spaces. So, anyways, on Off the Charts, we were able to see that Meta, its math was superior to the chart, was superior to a topping candle, was superior to this is the place to cool off, technically. That's why it's important that we discuss all these different things. There's times where the valuation and the math, okay, supersedes. And there's times where this thing's just floating around. It's a while till some kind of catalyst to tell us where the math is or any updates. And it's just ping-ponging between moving averages or whatever's clever between support and resistance lines or indicators or our favorite flavors. Okay? And there's a million ways to peel that onion. All right. When you're scalping and stuff like that, you do have to watch things pinging off those different levels because that's going to be the difference maker of you being stopped out or not and stuff. Again, we've discussed all of that. We talked about like short term, like ODT, everything. All right. This is something bigger. All right. This is where I think I'm going to make millions, and people that maybe have $100,000 or $200,000 account can become millionaires. This is what I'm talking. This is the cooking. This is the kitchen we're in right now. The big boy kitchen. All right. I just made $1 million off NVIDIA because of my conviction in that math in front of all your fucking faces. I was scalping it up and down and trying to stay above water and keeping that account between 700,000 and $1 million. It was hard as shit with this thing going from 490 to 420, 490 to 420. And you saw those charts, and I was doing my best. And I was like, a couple times I thought I was going to go, but then I laid off of it. And then I timed it well. I got the months that it went. They were the only times it was on my monthly list. It was on February's list to go to 670. And everybody called me. Look at the comments. Everyone called me crazy then. It went to 740. All right. Because 700 was what? 20 times 35. All right. And then I had this tweet recently that caught some traction or didn't, whatever. All right. I've had more in depth and stuff. And sometimes, just sometimes, a couple words is enough or whatever. But I just did 25 times 35 equals, and I left that blank. And obviously everybody has a calculator to figure out what that is, but it's 875. That's where NVIDIA's going. That's where NVIDIA's going. You want to bet? You want to call me crazy again? You want to fuck with me? Nah, you don't want to do that. That's where it's going. But, you know how many options I had get screwed up short term? You know how many options everybody else got screwed up short term when it consolidated and chopped around and stuff like that? And could that be one of those periods? It kind of smells like it. It looks like it might chop around. But why the meta example? Why I tell us multiple balls in the air, cross currents, nothing linear. The salmon can swim a little harder than the river's pushing it. Sometimes the river wins. You don't know if the river's going 60% and 40 or 61, 39 or 60. This game, you got to kind of figure it out. And it ain't easy. And people say it's easy. It ain't easy. I know it's not. All right. But on the off the chart segment, where I think we can keep getting that conviction that Banana had that made that $1 million in NVIDIA, it might not work this time, but we did that time. And I laid out the reasons back then and why. And then we all saw the proof in the pudding. Okay. The pudding's being developed again. Okay. Is it going to prove itself out to be the same way it did in the proof of the pudding before? To be determined. Past examples and performance is not always indicative of future performance, right, exclusive?
That's 100% correct.
However, history doesn't always repeat, but it often rhymes. Is that correct, exclusive?
Yep.
So there you go. So in the off the chart segment, I leave you with this conclusion that I believe all of those specific 3 examples, Meta, NVIDIA, SMCI, are buys at a forward PE below 30 and trims and a little bit of sell into strength as it goes above that 30, 32, 35 times. Eventually, okay, this is a little, mark my words, but it's, I wanted to give psychology too, just a little side note here of things and markets and parabolic companies and events. And there's like few companies that achieve these things. And I've seen it a couple times. And this, when it starts to like, pass the smell test or act like a duck or walk like a duck type of thing, these unique once in a, generation companies. And these things don't ever top out or end with 25 or 34. These are like fucking so like GARP numbers. GARP, GARP, is growth at a reasonable price. Okay, you'll hear that term. It's another one of those terms that we make note of to understand the language of the stock market. Is like, has a language of words, and we highlight them when they come across. So that's one of them. And you're going to see, I'm pretty convicted of this, that when these things top out, it won't be at GARP levels. It'll be at some blow off level that will really pull forward all this thing. Will it just say, you know what, fuck this. This is the only, this is the cat, this is it. And then you get the hype, the bubble. That's probably how this ends. But it's not hype and bubble at a 24 PE at an $80 billion market cap if it shadows a fraction of what NVIDIA does. I don't care if NVIDIA was 1 trillion or 2 trillion or 8 trillion, as long as that growth is growing and I can see that for at least 4 to 6 quarters and that math is going up, then that earnings trajectory is going up. Unless I really see that it's at a 50p, 60p, 70p, that I know that 2026, 2027, 2028, and anything good they say in 2029 has been pulled forward. But that's not at one forward PE, one turn, one out year, things that are around a 30. Okay. Now you're going to get the people, we talked about this earlier, that'll say, hey, bro, this thing's trading at 20 times price to sales. I don't care about your PE. Okay. There's always this battle between even sell side and buy side, and the analyst community even, okay, of how to turn multiples, it's called in that world. And it's difficult because that's where there's an art and science to it. And I've only been around it so long in the big league world, briefly, but I've spent enough time with people that have run high AUMs for longer periods to know that thinking does continue to permeate through their philosophy. So they're not gonna, the people that really move money around are not gonna have an issue. If I had 2 billion, 10 billion under management, whatever it is, I'd have no problem. And I believe the same for these, that I could speak for myself and just tell you the experience I have with people in the financial community. They're not going to have a problem buying these things at 22, 24, 25, and 30 PEs. Okay. It's just a discount. It's just again, they're just like, if the short sellers in the FinTwit community want to take SMCI or NVIDIA down another $50 and they see it go from 25 to 23, they're just going to accumulate more from the trims that they did over that 30 PE, right? They're going to put those shares back, and hopefully they're going to try to do it where they like kind of watch their wash sales and things like that, because when you start to move that size around, tax implications are actual strategies that you meet with your CFOs, accountants, and risk managers on. So, but I believe that the professional, to button this segment up, that the professional money manager will continue to buy these things with the current guidance and current growth trajectory and current math numbers. They will continue to buy these things at under 30 PEs, especially 28, 27, 25, 24, 23 forward PEs, until something changes drastically in that. anything can happen. You would have to see the economy, and it can happen because people still thinking there's a recession. If you start to have a big recession coming, then some of that forward trajectory is going to change, and then the market's going to go, wait a second, that growth isn't as accelerating. We got to go from 37 multiple maybe back to 35 or 33, and those multiple turns down are vicious as well. Okay, so but that's not where things are right now. Okay, I can confidently say that just based off the facts. All right, I'm not omnipotent in knowing what the future is going to hold always, but I do base off of longer term things, and this is kind of a longer term trajectory. I am worried if the Fed gets, they are too tight and they stay too tight, that they could induce this recession. But some of these companies have shown a way to play through it, and then you could get a multiple turn or two back down. But we're not there, I think, right now. Okay, so to button this up with the current trajectory, everything seems like a buy for those levels. Again, you're going to see these things fluctuate $100 or so, and you're like, banana is going down. You said it's going the multiple. But the same way Nvidia fluctuated and lost people money that got mad, say, hey, you're too bullish on Nvidia, it's going to go to 300. That was gonna be taking it to like a 17. That was gonna be very hard unless there was a very big market dislocation drawdown. All right, that's where my conviction and my confidence is off this math that Exclusive and I are trying to teach you guys. Price to sales, price to book, price to earnings, and forward price to earnings. All right, please listen to the Exclusive rant he did a couple spaces ago. If anything, it's even more important than the rant I just did for 10, 15, 20 minutes, whatever it was, because that'll start to form the foundation. Then if you want to lay on top of that foundation, then you can listen to this banana segment. But the one that Exclusive laid out initially is a really key starting point. All right, so that's that. And now, because I just don't have, I'm not like the type of dick that just like, oh, last second teaser stuff. Like, I just kind of teased the teaser that way. But for those that listen long enough about thinking about what the next SMCI, and I saw somebody nailed it in the comment. And no, Josh, it's not ARM, although I do like ARM, and I'm going to talk about that in another spaces, or maybe just have to do a post on it because we'll be on a hiatus. So yada, yada, yada. But here it comes. And somebody got it right, and maybe a couple more people posted since then. But there was at least over a dozen or 2 dozen comments, and I only saw one person get it right. And I just want to bring it up so I could look at it as I have it. And what Banana thinks is the next SMCI. All right. It's a later alphabet name, so I'm just scrolling to the bottom of my positions. So bear with me. All right, there she is. All right, I'm gonna just tell you what the Wall Street description on the company. This company is engaged in the design, manufacturing, and service critical to digital infrastructure technology for data centers. Right, that's where we want to play. Communication networks. That's kind of like Arista. And commercial and industrial environments. Its segments include America, Asia Pacific, Europe, Middle East, and Africa, etc. The company's offerings include alternate current and direct current power management products, thermal, this is the key, thermal management products, integrated rack systems, modular solutions, and management systems for monitoring and controlling digital infrastructure in addition through its global services network. It provides lifecycle management services, predictive analytics, so that's software, and professional services for deploying, maintaining, and optimizing these products. So it's software for its products, which might be what? Software as a service, recurring revenue to manage the products they sell as a software overlay. I likey. A company offers integrated rack solutions, very SMCI, which include delivery of racks, rack power distribution, rack thermal systems. This is key. Configurable integrated solutions and hardware for managing information technology equipment. Now, that's just a bunch of marbles in a nutshell. All right. But let me just pick out a couple key things here, because this technology and this stuff could be talked about for hours of its just own spaces. All right. We don't have time for that. But just the key highlights here. All right. One of the most difficult things, you're going to hear this if you learn more about data centers. If you're just trading these names and not even bothering to read, there's like Tech Weekly, and there's like a special site just to NVIDIA technology and everything going on in NVIDIA world and stuff like that. And if you Twitter search Banana 3 stocks synopsis and SNPS, scroll a couple posts, you'll find one where I did a deep presentation on all those AI stacks, Lam Research, Synopsys. I did a very deep dive on all those companies, and I showed where I get some of the research. One of you guys messaged like, "Hey, Banana, can you talk about where you get some?" I'll try to see if I could ever put like a link of like a couple sites. It's just like fluent in the back of my head. I don't have like a sheet lined out anywhere like that. It's just like I remember, oh, I go to this place for that or stuff like that, or I forget about this place and something comes up in the market, I'm like, oh, this is a good place to go for that research. And I don't really have it outlaid all that well. But if you go to that synopsis search, you'll see some parts where I pulled out research from and I showed on that presentation of a thread of tweets. Okay, so that answers that question. Now, one of the key things that's going to be with these data centers, this high level of compute, right? It's like when your phone's running a lot of apps and you forget it, and it's burning a hole in your pocket and you feel your lap and your thigh getting hard, or for chicks keep it in a purse, or maybe that they feel it like against their hip or something, or their ribs, and it's like getting like it's like too warm. They're like, oh, my phone's overheat. It's probably got too many apps or too many things running, right? That's just that's the phone trying to bust out a bunch of compute all at once, more than normal, and it starts heating up. That's what happens. That's what we're about to embark on. Our entire way of thinking world's going to change, and I've talked about that and stuff, and some people think that's hype or whatever, but the internet and the infrastructure around the internet's about to be rebuilt. Okay, and for the most part, it takes a lot of computing power. Whether you think all the other stuff is hype or not, that part isn't. That's just a fucking science. That's like H2O. There's two molecules of hydrogen, two molecules of oxygen. The same thing is going to thermodynamics and understanding is like literally just classes of MIT engineers just learning that to apply that to this, to supercompute, not just like, oh, learning how to just deal with thermals. Just thermodynamics and just data set is a whole level of technology that's different than thermal variations and all other types of technologies. Okay, so it's complex, but those who can solve that problem are king in the land of heating up computers, heating up servers, I should say. Okay, computers getting hot. This is going to be a key thing, delivering energy. You hear Microsoft talking about doing small nuclear plants. And then I hear people saying, is this hype? You fucking bulls. It's all hype. Are you crazy? Do you understand what it take for a company of that size to think about implementing nuclear power plants? They obviously think they're going to be using a lot of energy for something, don't you think? This is not like some Josh. This is Microsoft saying this. You understand? These 5 companies, these are the decision makers. This is what runs our world. That and like 5 bond vigilantes and a couple presidents is what you see through the eyeballs in your head as life. So when one of those things say that, you're like disparaging the eyeballs coming out of your head. So that's that. Okay. So whenever things like, I really try always find this like analogy that can like, you got, if you're thinking this is like hyper small thing that's over soon, you're mistaken. With that said, the company is Vertiv Holdings, VRT. One guy got it right. Maybe some others did since. All right. Right, Josh? Did I not, Casey, Josh, Dead Money, I see some of the famous core parts of our community. Did I not pound the table on this thing when it was $25? Well, it's 67 now. It's just getting started. Let's see why. Look at the weekly chart. Okay, I'll post this later, but for those tagging along, you can pull up a weekly chart. You type in SM. I'm giving you the time to do it. You type SMCI in your search bar. You're on the ticker now. Now you're probably on some short-term time frame because you're a degenerate gambler scalper. So that was a tongue twister. And you just like Josh, you just want that 1 minute feed, that 1 minute chart. Well, go ahead and go to the thing that says W1W weekly chart. I know it's new. So if you look at the weekly chart of SMCI, it went parabolic up into that weekly big ass bull flag structure it formed, also known as triangles, ascending, continuation patterns, et cetera, et cetera. I can give you all the CMT quotes. That's not important. All right. What is important is whether it consolidates or not. All right. If this thing goes to 50 and you're like, hey, Banana, this is the next SMCI, buy $70 calls. Bro, it went to $50. What the fuck? I thought this was the next SMCI, man. Well, then you're going to miss the next SMCI, man. Because SMCI, man, didn't go SMCI, man, until it SMCI, man. Get it? Yeah. So that weekly consolidation, coiling, that spring loading that SMCI did is what led to this move technically. And like fib expansions and exclusive did a really good job of finding upper levels on this thing when I ran out of them even. But that's when the off the chart segment got to that. It was finding that multiple, right? We already covered that, right? But for this point right now is that this company VRT, I believe, is getting into that structure. So the opportunity will be if it goes to 50. But let's think about it like SMCI for a second, right? That's the example here. That's what Banana was talking, the next SMCI. So in NVIDIA, SMCI went to, that 350 and then consolidated in a big range, 200, I think it's a 350, let's call it, but a very wide range. If you had short-term calls, this thing went to 700, but it took a second. But if you had short-term calls, you're like, man, this thing, all the research, it's about to go, and then it went down to 220. Well, if you were dated out a week or two, you went completely worthless unless you stopped out or whatever. Completely worthless. You could have something be the talk of the town, right? And you're like, man, I lost money. I don't want to tell anybody. Somehow this thing just went up 400%, and I'm the one asshole that lost money. You know you're not. I've been that asshole so many times. You're okay. All right. But the way we're trying to think about this thing right now, all right, in the new SMCI is, what if I'm right? It's speculative because this is a speculative idea. This is not like I'm gonna think that Netflix is about to have good earnings and all the things that I wrote about for the reasons that played out. This is more speculative in nature, so that's important to understand that risk factor. Okay, can't go full. People who are full porting SMCI got lucky or are going to give it back somewhere else, and it's not the thing that exclusive and I teach here. All right, so but it ended up being all good buys after, right? If you bought time, if it was options or had the shares, you're all gravy. You got so much participation in gains. Yeah, if you're Mikey or exclusive or sometimes me or some of these other great traders, you specifically got that you're like, I see it going down this day. Not more power to you. Sometimes I do that. Sometimes I don't. But this segment isn't dedicated to that, right? We're not going to be able to I can't make $1 million scalping NVIDIA. It's just impossible. I made a couple grand here and there, but like the rest of us, but my eye was on the prize. And I won. And now I reap the reward for it. And I think something like that setting up in the SMCI, which did, and SMCI is still cheap. We talked about the reason why. It's very speculative in nature, but a lot of research, again, shows that if it's a fraction of all the stuff NVIDIA is going to go to, even 85 billion, which was around $1,000 a share, might be too cheap. All right. But we're talking about Vertiv, VRT. All right. And I want you guys to know right now that I used to have a pretty sizable position in it in my other account. And for the reasons of that account, it got bit, whatever. I was going to trim it, but I just ended up closing it. And for my own personal reasons, nothing against this. All right. I just had a big holding. I did. But I want to rebuild all like I don't have any SMCI in my big account, and I don't have any Vertiv. I have a decent amount of Nvidia, Amazon, etc., stuff like that. But so I just kind of wanted to clean that up. I was like, if I don't have SMCI in here, but SMCI has become a big part of the account and the challenge account that's grown to a multi-million. It's a serious account. It's a multi-million-dollar account. Then I'm going to do the same thing with Vertiv and see if I can rebuild here actively, even though it's gone parabolic, once again in front of everyone's faces, like I did with NVIDIA and SMCI. So I thought, to be fair to the community and fair to that challenge, the right thing to do on top of those personal reasons was to clip Vertiv. So now it's only in the same account as the same 400 shares I have in SMCI and the 700 shares I have in NVIDIA. I have 100 shares in full transparency. Again, just disclaimer, any and all of my positions can change at any time without any notice whatsoever. Something can happen in my life. I don't get on spaces, a million reasons, and I am not to blame or to be blamed for that anytime. I am not here to hold your hand through all of your trades or manage your personal accounts. With that said, Vertiv is sitting in that sweet spot of power management, which is going to be crucial as Microsoft and these companies are trying to actively solve by like, fuck, what do we do? We got a nuclear plant? So you see, that's a huge to think so out of the box, which is awesome. Means there's a big problem there. I know that much in this game. I've been around business long enough to know that when you're thinking that far out of the box, you got that far out of the box of a problem. All right. So that relationship is evident to me. Then how good is this company compared to SMCI? I'm still unpacking that myself a little bit. And from some people I speak to, none of them are using it yet. And they're already talking about orders going out and stacks being built with SMCI. So I don't know anyone who's worked with Vertiv products per se. So I can't give any anecdotal, and those are always anecdotal and not insider, anecdotal thoughts or opinions. Okay. So I don't have anything too much to add there yet, but I'm actively searching to find a Vertiv person who knows the company, who can give me ideas of what type of technology they're working of, but it isn't insider information. And that's always very, 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 very key. Okay. So if anybody has experience, and I'm saying this publicly, so that's even better, and transparent. If anybody has worked with the products or knows this company like the back of their hand, give me an exclusive a shout, and we'll see if we can incorporate some research and information the correct way, the legal way, always of disseminating any information. And the safe thing always to do, speaking for myself and for this space is for me an exclusive, is that just to share it with you guys. That way if somebody told something that I even think could be questionable or stuff like that, I anytime that's happened to me, again, I'm more new with you guys in Twitter land, but like I used to be on StockTwits a lot and whatever. Please don't go search me for there, because I am a fucking asshole on StockTwits, because that community has so many douche trolls that I just serve it back at them, and that's just like my place to let go of that. So I'm a nice person at the end of the day. I'd like to think so, a family guy, and my true personality is here. But sometimes I give my street Los Angeles, Brooklyn baller. I'm a big basketballer. And I played on the streets, and I've been in a bunch of street fights playing basketball, and sometimes that part of me comes out in StockTwits, so I apologize on that note. But back to VRT here. Technically, if you look at that weekly, everything long term, so like 100-week moving average, you guys have heard me use the analogy before of aircraft carriers and things like that, that longer term things like on a monthly, weekly, long, like 200 period monthly moving average, 200 period weekly moving averages, those things take a long time to form and to turn. Okay, so this is a kind of a new up and coming company. It was a SPAC. It was actually one of the great SPACs to come out, where everything else was kind of disintegrated that held that title. This was actually a real company with real prospects and real execution, and they proved themselves. And it was a great investment as a SPAC, but hard to decipher at that time, as many SPACs sucked. So like 98% of them. So this is one of the few that made it through, and I've been talking about it. And I'd like to give a shout out. Some people ask, hey, where do you find these names? It's all varies. So I don't have any specific answer to that. I apologize. Really, on this specific name, I got to give a shout out to my mentor, my good friend. He's dealing. It's not my place to say, but Tom Lee was posted it, so I'll only say what Tom Lee said. That Mark Newton, who's a little bit on the men's, dealing with a little health issue. We're all confident that he's going to be back at it. But just wanted to give a shout out that I'm thinking of him, and I love him a lot. And he's had a huge impact on my life and my trading career and my technical analysis. The guy's a prodigy in technical analysis. I learned a lot of the things, like I believe I'm older than Mark, or we're not too far off from peers. And I've studied as long or maybe longer, but the guy has a gift and is able to compile multiple technical strategies to one thesis, and it's been a pleasure to learn from him. I'm lucky enough to call him a friend, and that's that. And just wanted to say that I love him a lot. But he's the one that brought VRT to my attention, and then to his community's attention. And I'm thankful for that, because it ended up being a fabulous trade and a fabulous analysis. He saw the right things fundamentally, even though he's a technician at heart. He's a little bit like myself in spirit, where he's on Bloomberg and CNBC constantly, and he just has to talk about it. But he has a lot of thoughts and fundamentals in the markets, and he's a really bright guy on those things. But he knows like his lane and where to stay in it to some degree as well too. So just real professional. So he's the one who brought VRT. So you got to give the guy credit, because that's like, finding these types of things are very, very unique gems. But it even wasn't what it is per se even now. At first attention, it was just semi cap and hardware space, and in the right things, playing in the right fields, and acting correctly technically, and had just the right sprinklings of fundamentals, that he felt that it was a decent name to look at on the more like, not blue chip kind of speculative thing, finding a turbocharger, but you can't full port those. Those are things you put a small percentage of your account into, hoping that it becomes a big percentage from the performance, and you put your things into more conservative blue chip things as far as portfolio formation goes, right? So that's where VRT, in full transparency, came from for me. That's the source. That's the epicenter. That's the company. I read you about it. It's got a lot of the same smells and snifflings of SMCI. Its market cap is infinitesimal for the opportunity set. If this is all to sort of play out, it's PE. This is where the caution is, right? The forward PE is at a 30. So you see, it keeps finding this thing, and people who've been following me on this name in this trade since the spaces that I did with Josh have done quite well. I do receive messages, because I don't talk about it a lot, because it's a smaller company, and I don't ever want exclusive him and myself or our spaces to be associated with any type of pumping. And as his platform is rather large, mine's growing, but we don't do it for that reason. We're not stupid to the idea that a smaller company, if we put it on notice and a lot of people start jumping into the trade, could potentially even move the trade of a smaller company. I can't see Exclusive and I doing that on a company that's mega billions that this one already is. It's no SMCI by any stretch, but maybe, just maybe, we are respected enough that enough people start to jump on it. So I wanted to be cautious and bring that up too, that at least from here on out, I have 100 shares. I'm not making millions of bucks off of it if this thing goes nuts from this conversation. I think it's probably actually going to pull back from this conversation and consolidate a little bit, but it might start going. Either way, if we look back on the example that, like, where we started this last segment I'm doing, and then it's Exclusives Mike, and then we're going to wrap up the day, but that SMCI ripped your nuts off. We talked about that if you got the wrong short-term options from 350 to 220, right? But 350 and 220 and everything in between were great buys in hindsight, looking back now. Okay. And that can be very well the case if VRT is 80, 90, or $100 in the future, that 50 or 62 were great buys, but you have to be careful at 62 to full port to not treat this extremely speculatively and in that form, be skeptical of the speculation. Okay, be skeptical of everything I'm saying to try to save yourself money. I don't know about this one. Let me see, banana. This thing's run a lot. Oh, that kind of looks like SMCI. Go through that hashtag more homework. All right, but on VRT, if this thing gets a whiff of the fundamentals, which it already is starting to, that SMCI and Nvidia play in, and this thing is a small fish that's going to be a bigger fish because it's already got its foot way into the door of this particular river stream, then it could be a big winner, right? And in the option world, something that can go from $60 to $100 potentially could be even a greater deal. So after I finish here with you guys today, going forward, I'm going to look and see technical strategies and scalps and things and see if I can find something that can make me money and my little brother out there to start building shares, right? So 100 shares of this thing costs $6,200. All right. And if it goes to 50, it's 5,000, whatever. If I can find a way to make another $6,200 from trading VRT, then I will surely buy 100 shares. And I won't care that much about the entry, a buck or two there. I'm trying to accumulate and use itself to accumulate itself. So I'll look for this is now the first time that because again, and being just so overtly transparent with you guys and being cautious, because when I got into this Twitter community, right as I'm jumping in, this whole Atlas thing happened. All right. And just being honest, I have no idea what happened to those guys, their allegations and where they stand, if they're perfectly stand up individuals or if they were doing something. I have no right to speak on that. And somebody else that knows more can. All I know is that I don't ever want to be associated with anything similarly that even smells or whiffs like that. And the only way I can, and even if I'm being 100% truthful, I refuse to do some kind of pink sheet or extremely small company with you guys ever on these spaces, just for even the mere possibility of someone thinking that about me. That's how serious I am with you guys. That's how much I care about this community and how much I value my stature and my own respect. Okay? So I'll never do that. And this is my first time doing kind of a deep dive publicly on VRT. I spoke about it a couple of times on other spaces why, and said it's a small company that, and then didn't pump it or discuss it a lot. I did well with it here and there. Nothing like great, like nothing like crazy. Okay, but I'm out of it, and it's here in this 100 shares in this account, 101 shares. And I told you guys how I care about you, how I'm treating this, and how I wanted to present this in the right way to you guys today. Okay, that it might be at an interim top, that this is not something I'm running out and chasing, that this isn't this, that maybe it could get going because of the opportunity set, and anywhere that it pulls back or retraces feels more like an opportunity than to short puts on it. Okay, so I'm gonna look and see some different ways I look at technical analysis. And then now that I feel like I've transparently discussed it, I feel more confident that if I post about it or chart about it, that I'm not pumping it, that I've discussed my feelings for it, that it's something that I'm trying to gain a big position in. But this account that's a multi-million-dollar account that's grown from 30K, 100 shares, $6,200, it's not even really noticeable. Okay. But I want it to be, and I want to make a lot of money together in this community off this name, if possible. If it truly can be what it can be. If it isn't, then all of this presentation was for nothing. But we at least went through the exercise to try to see the next SMCI why, for all those different things I read about what the company does. Then the things I highlighted. If you're just tuning in, just listen to the recorded spaces later. And that's basically that. I just want to wrap it up on that we discussed NVIDIA, SMCI, and Meta on the off the chart segment and their forward PEs and the way to progressively look at those companies longer term. Okay. We talked about what I think is the next SMCI amongst a multitude of other things. But if we leave ourselves with all the things exclusive and I talked about, maybe an interesting speculative play that we all need to do more homework on, including myself. And that's why I wanted to put it out there too, that now I feel good about the way it's been presented, because now that mine and Exclusive's platform is growing and he has a large platform, maybe somebody else out there could add to our research on the name. And the final way I want to wrap this up is by putting Exclusive on the spot just a touch here and say, hey, buddy, would you hashtag when you have the time a little bit more homework so we can all be better from the way you look at technical analysis in your research, in your prism? Would you please, at some point in the near future, go over VRT through the way you look at things and then show us what it is that you see from your eyes?
So I've actually been looking at it since we've been discussing it, and there was some there's been some interesting option flow. There's been some interesting dark pool, and I was doing some study based on a mirror image of SMC, but not in the typical analysis that most people know. So I like to analyze time and do math based on time instead of price. If VRT was to mimic, not even mimic, to do half of the time value of SMCI's exponential move on the parabolic curve, it would put it around $113 a share within the same time frame if it were to move similarly.
Right.
Now, obviously, market cap wise, it's what, around 30 billion. So to put on that amount of value would be obviously exponential.
Right.
But should
the fundamentals.
But should their revenue increase, or should, I'm just speculating here, someone buy them, or they have some form of partnership or something? You know, there's, whenever I look at time and Fibonacci and basically a confluence of things, it always detects news before it comes out.
Right.
And based on time, if this were to take place, it would put it around May or around November for either one of these moves to take place. Again, not financial advice, but this is all speculation if it were to do anything remotely close to SMCI. Right. And that's people need to understand that SMCI, this study is based on the same measurements, which is an 1,800% move from my initial entry on SMCI. For a stock that's exponential, I mean, it was almost 300% just this year, 2024. Since on the very first space, we were talking about, these semiconductors and NVIDIA, SMCI, yada, yada. And I had February calls for, 500 strike that I even sent to you.
Nuts.
And
Yeah.
by the time last week they expired, by the time they came to expiration, they were $200 in the money. And these types of moves are only captured by getting something when it's not parabolic, when it doesn't have a measured move that's played out. And
you have to almost anticipate it to some degree.
Yeah, and when I look at VRT from, a weekly or a monthly standpoint, I think this year it just broke out of that broadening wedge consolidation. It's a pretty substantial move already, but I'd have to look at it a little bit more in depth. But they have earnings this week too, don't they?
Yeah, and that's why it reminds me of Essence. They're playing in similar spaces, but on the technical side, which you just did a good job laying out, SMCI had a similar parabolic move into that 350 as well, and we all look back on that like, oh man, I wish I bought it at 350. But like when it was doing that, it felt parabolic to some degree. It did consolidate that move to set it up. And it had this one earnings that was a hiccup that set up the setup. And you almost hope that's the case here. I don't think it's going to be, but you almost hope it's the case, because what happened with SMCI, a lot of people don't remember this. It wasn't the last earnings. It was the earnings before last. All right. And it sent the stock down quite significantly because, excuse me, I got the hiccups. But what happened was they had, again, my memory is pretty good, as you see, but getting the exact thing is not important to the conversation. But I believe from memory, it was around 3.5 billion was their guide before that quarter. So now 3 quarters ago, going into the quarter that was the one before last. And they came out and said like 3.5 billion again. So the market just said, wait a second, that's 3.5 again. I'm no mathematician, but that's no growth. It's the same number. And it was because they had issues in getting like the supply chain all together and actually physically putting everything together enough to ship out. That was the opportunity when they had reported that, and the algorithms and a bunch of short-term traders were like, oh, no growth, same number for something flying so high. And then right away the P jumped because it kind of was like the attributable P, the way the street was hoping is like that number was going to be so much higher that when it wasn't, they felt that they overpaid for already what was a high PE. They were hoping it was going to come down dramatically off of a good number, and then it didn't. So it was like double punished for that, right? But look back now, right? That was a huge opportunity set. So I would consider it lucky, which kind of changes the psychology of, instead of saying like, oh, maybe this VRT thing, their quarter wasn't. If they have some hiccup, I think it's going to be a great opportunity to have an entry into this company for my little brother and myself. I don't know your personal financial situation, so I can't give you specific financial advice, but those are my opinions for me and some of the people that look to me for advice, that are friends and family who are allowed to do so. So that's that disclaimer. X, I went through all my rants, brother. Mike is yours for a minute. I got to actually look at some names here because it's difficult when I'm doing this and that at the same time. But I'm just going to kind of mute myself for a second and look at some stocks for just like a couple minutes here.
Sure. So I think obviously something that everyone's been missing from me specifically on these spaces, because I've kept it off of the spaces just because of the moves that it makes, is SPX. And I know everyone loves 0DTEs. Everyone loves to clap something that's, pretty profitable pretty quickly. But especially in power hour, there's one thing that you have to understand with SPX. You can lose all your money in minutes. And when I say you can do that, not because it expires in minutes, but because you can be trapped and never recover in minutes. The end of day moves on options that expire same day. So it's basically like a Friday for weeklies, but SPX has some expirations every day for those who don't know. If you can't afford to lose 100% of what you invest in trading SPX 0DTEs, you should never even be touching the contracts. So with that said, let's say we look at some SPX. I've honestly been scalping SPX today pretty slowly because it's been chopping. It's been grinding higher, but it's been stuck in a range. It's still in a downtrend from the open, rejected the gap, and it's back lower. So I would feel a little bit more confident if we get above a specific price that I'm waiting for. I'm not going to mention it because I don't need anybody YOLOing into calls if it goes above. But I'm gonna be watching a few things and seeing if I can get a healthy entry. I tested one here just a while ago and it was a little bit profitable, but it was only about, I think it was about 25, 26%, which is not much for SPX. I like making 50 to 100% on SPX, so I'm gonna wait for the right moment. Some names I like into the close. I've gotten some good feedback on those lists. I've been toying with a few different things on the feed, and I'm only looking at, I've gotten a few comments and they're like, you forgot about this. And guys, I only look at stocks worth my time. If something has like a 2 million market cap, it's not even worth me looking at because the options aren't going to be liquid enough and there's not enough volume for me to buy size and shares. Not that I've only got $3 anyways, so we'll just put that out in the open. But it's got to be something that's got liquidity both for entries and for exits, which is why I like trading SPX, because I'm never going to be trapped. If I need to abandon a position or if I need to hedge a position, I can do it very quickly. So if you are trading SPX, 0DTEs, you need to make sure that you also have bracket orders or use trailing stops, have some form of automated exit with a limit. If you market SPX, odds are, if it's more than one contract, odds are you're going to have about $20 to $40 of slippage per contract because that's just the nature of SPX. So, again, I digress, but I'll find something here shortly if it presents itself. If it doesn't, then I'm not going to mess with it. Keep in mind there's also about a 15 to 30 second delay on spaces for the captions to populate. So if you hear something and a price is 20, 40, 50 bucks different than what was shouted out, again, it's not financial advice in the first place, but don't chase something that's up 10, 20%, obviously. But let's see here, what's moving. So in Power Hour, I look for two things and two things only. I look for relative strength and relative volume. So right now, there's an interesting move happening in a few things like Coin, SMCI, even Robinhood. They've all seen a little bit of a move starting in the beginning of Power Hour. So I'm going to be watching those. A lot of names that are beaten down have curled slightly. DraftKings, Roku, Tesla, Uber, Rivian, Apple, Baba, Carnival, Snapchat, Microsoft, Nvidia. So there's a few things. Let's see here.
Just miking back up. I was listening to you. I was looking at charts and stocks and going through the names. SMCI, nice recovery, huh?
Yep.
I didn't see that much as I was ranting about it. It's like somebody sent me a message like, keep ranting, it's going up. I didn't know. So you're welcome, I guess. Whatever. But I like what you said there on SPX because you can literally get, and that's the allure. And that was a good word you used earlier in the spaces today, I thought. And that allure is so magnetic. It's so strong for people once they get a taste, and that taste is very dangerous. And you gotta really be disciplined, like Exclusive is. You'll sometimes see me do SPX puts or SPX call. They're
I'm
few and
actually
far
gonna get
between.
some 4980 calls here.
There you go.
210.
And he's very nimble and fast. Me too. I'm not as nimble and fast at like um, typing it out. He's got like speed fingers to like a community member or something like that. So I'm not like a big SPX shouter outer. Sometimes I did it like one time, like all day long, just to like prove a point that I can read short term charts to people on the space. But um, going back to what he was saying, though, the risk part of it and the allure are the keys to you guys listening, right? If you think that with my account or my time in this market or just for shits and giggles, that once in a while I don't grab like an SPX put or call at the end of the day that I know is a little bit of gambly, I do. And every time I do it, I'm like, why the fuck did I do that? This is not going to change my life. This is a bad habit. But I'm like, I want to see what these little kids are feeling, So like, and then like I put on a SPX call or something like an exclusive set. I don't know, or put at the end of the. There's times first of all, let me backtrack this. He did a really good job of saying in the earlier part of today's spaces how ODTE primarily was invented and used for professional money managers as a hedge. And this is my world. And then I had times where I bought so many, like, people like, oh, you're always bullish. I own more puts than God sometimes to hedge. So like, you don't know the other side of it. And that's an instrument that's great if I'm feeling not so gravy about a specific day or just really worried. A real cheap way to hedge a long bet. But to directionally bet it is like straight adrenaline and gambling, like Exclusive said also later on. So that allure at the end of the day to put on
Take a
$200
trim here.
that can go in lightning speed 300% in fucking 4 minutes or evaporate before your very eyes is very alluring. But you have to have the discipline to know that this is like 1% or less than 1% of your total account, and even that's a lot. And like in like not all the time things. Now, if you want to be a professional SPX ODT trader and short-term trader, and like that's all you want to do, and you want to wear no other hat, man, you're embarking on a really interesting adventure here. I know maybe one person successful who's like does that, and his name is Exclusive, and like otherwise, I think he would even admit to himself and to you guys it's not that fucking easy to be super consistent with that thing because of how lightning speed it moves and go against you. And then the allure that you're like going to size up harder and go. He does the opposite. He sizes down. He gets afraid of himself. And that's a type of DNA. So it's almost like you need to have the right DNA to trade that. Besides like learning from Exclusive and Banana how to be a better market participant, etc. Again, not financial advice, but he's one of the best I know at it. I know a couple people. I'm pretty good at it. Every time I've done it, but even I fear it in a really, really big way.
Oh, what
And
a
then the
trim.
times that I just like put it on and it evaporates, I'm like, what a dumbass. Like why do I even do that? Like, and then I feel really stupid. So that's my whole thing.
So just to kind of recap the 4980 calls that we were just in. So we saw they went from 210 to 250, down to 2, back up to 250, where we trimmed and then it dropped. Now it's at 1. That's how this all happened in 2 minutes. And it's very true what you just said. SPX, especially in Power Hour, it is a very difficult to navigate investment vehicle because it's not a stock. It's not an ETF. It is an index. And people need to understand.
Too.
Oh my God, I should have flipped the puts after that. What an exit. Jeez. Coulda, shoulda, woulda. But so it's just, if you can't manage a trade in the sense of, trading off of a phone or trading off of a platform that's doesn't allow for speed, you shouldn't be trading SPX because it's just going to be detrimental. And wow, I really wish I flipped the puts now. Not chasing. Wow, that's a move.
On that little sell off, the markets kind of bounced pretty well because those names like SMCI and Nvidia started to bounce. Now they're back a little bit in profit taking mode, and it's almost like, to me, I'm kind of starting to just form theories because it's a little bit of a new game, the ODTE game. But I have a couple theories out there, and they're working theories. And I've been talking to colleagues that are like been doing this like on my level as long, and we're trying to think it out loud together and see the impact that this is having on vol and names to begin with. And it's quite significant. It's become a really big animal, and I've kind of dismissed it at times or been dismissive of it, but unfortunately I can't, because it's become such a big animal of the daily retail and even to some degree professional trading volume. The ODT volumes have gone through the roof. They're like the type of volumes that, remember, like I used to see like on Bank of America back in the day, or like Tesla, and like they're like ridiculous volumes. So there's obviously a lot of participation, and with that starts to create market moves and emotion, even on a shorter time frame, that could have more lasting impact than its super short time frame. Like you could have situations, and I've been openly working out these theories. There's no decisive answer to this, but there's like certain days that just, as long as I've been doing this, just smelt wrong, either going up or down. It's just the way the cadence. I call it the dance steps. And in talking to my colleagues, I was like, something's up. I've been staring at the tape for 20 years. Like something's up. They're like, no, you're right. And another guy talked to another guy who was like, yeah, we don't know. We don't even know exactly, but we're in a little bit in that world, derivatives world, and it's starting to feel like there's times where these contracts move so fast to someone's profit that move and has become so large in money because of the volume that it actually rapidly, almost as a fake out, or maybe somebody does know something very briefly, very quickly. That's what everyone's always trying to. Does somebody know something? Somebody knows something in the big world, and you see that rapid decline. It's sometimes just a bunch of people. I wanted to use another word, but people all gambling at the same time and all pulling their money in or out at the same time, not because the market's changed some type of intermediate even structure. It's just like, this is the dope trade right now. Everyone piled into it. The thing goes ballistic. It forces market makers to start doing opposite. Like they have to start selling stock or buying stock. It like forces them to do stuff. which then you exacerbates said move even more. It's like somebody basically every day, because the amount of money becomes so big, and this is even professionals trying to jerk each other around or screw all the retail community around, and not a lot of them end up doing it successfully. Trust me, everyone thinks like, oh, they're all making so much money. They're mostly losing, and then just hoping that like they keep their job and don't get fired and somebody gets redemptions. But I digress. On the ODTE thing, so much of that activity happens that market makers are forced to do things that aren't necessarily the actual faith or destiny of the market truly wanting to pull back or truly wanting to go up. It's just a bunch of gamblers that GME'd and AMC'd their way into an actual index for that day, and enough professionals that are tagging along to light to set a match to that M60. So our kind of working theory is there's like a group of funds a little bit that have started coming together. This is a little bit this is just banana conspiracy theory. So just don't even pay attention. But I'm starting to feel like a couple enough golf course meetings that I've been on, one or two of them maybe in my life, maybe, where they idea talk and they're like, yo, let's all think of this idea that this thing's a good thing to trade on, huh? And my concern is that somewhere some group of jerk offs got together and they figured out that almost every day, or on at least on certain days, that they do a big ass call. From my basketball days, one of like there's and the basketball players who are really good at this, and the ones who are really good got the thing to bite, and that's called the pump fake, right? Some of the best basketballers fucking had a sick ass pump fake and knew when to use that, and just got you to jump, got you to, you without a doubt believed your entire body. It was an instinct reaction. Your body language believed that this person is about to do something that they were only faking to do. So I'm starting to worry that a little bit of ODTE has become so lucrative for people that if they pump fake and get the market to bite, then it's like Exclusive said, you get a contract to go from $2 to 2,000 or 1,500 or 1,000 real quick. It's 300, 500, 1,000% in minutes. It's too juicy to pass up for professionals that like, you know what? Yeah, I run $10 billion, but I'm going to mess around with 100 million doing this crazy shit. See if I can do something. Worst case, I lose 1%, but if anything takes traction and I get this up to 10%, I'm going to outperform all my peers. I'm going to be the talk of the town. I'm going to get a new house in the Hamptons. That's how these people talk and think, unfortunately. It's not how I talk and think, but I'm just giving you guys kind of my cards face up. So that's my rant on ODT.
Yeah, and I think especially with zero DTEs, I never recommend anyone trading out of the money, either at or in the money. I mean, so like for instance,
because then you're like double asking for it. That's like all that stretch analogies we did in like super lightning speed.
And if you know if you look at it from a dollar perspective, okay, so like I just scalped the 49.65 calls, right? And they went about $300 a contract. The 49.80s went from 20 cents to 35
minutes.
cents. Yeah, this is all within 60 seconds. And
yeah.
so one person
Yeah.
on one person trading on the tape is looking at an option that's 20 cents and it's at 30. Oh, it's a it's a 50% gain. Okay. Meanwhile, the people that are trading the real money, we're looking at something that's in the money that's got intrinsic value. And obviously, if you're trading something out of money, 19 minutes before the close, odds are you're more than likely going to lose money rather than trading something that's in the money, right? Because this is when the Greeks start to really make a difference. It's not worth gambling, even if it's a small amount of money. I know it's $20 a contract, that's a small amount of money. but we can scalp for 20% and then we can scalp for 80 to 100% and then be done with it. You don't have to get something that's 20 points out of the money and just pray. That's not a strategy. That's gambling. So that's my sense on it.
Mm-hmm.
I'd say 2 cents,
It's
but we don't make 2
basically,
cents.
the way I look at it
Coins back in entry, by the way.
is all of this is just a lightning speed version of everything else happening in the market. So if you don't know how to risk manage, it's like earning like rights. And I've talked about this in another spaces, right? Exclusive. Remember we talked about like earning the right to like level up and stuff like that, you know?
Mm-hmm.
If you're not nimble of a trader and successfully nimbly trading options that are 2 months out or a month out or weeks out, I don't think you have any business trading ODTE as far as just the way I see it at first glance. Maybe that's where you have better luck and you think like that's where that's where it works for me. But I can't see, like, I just can't picture that trade. Like ODTE is someone who's like just you know what? This I have it's the analogy sitting next to me. Okay. Okay, so if you can't do this successfully, and it's coming out, but it's not. How do you have the right to go to? You have to earn the right
To party?
even in piano, to do trills, to go faster. That didn't start there. That started.
Oh my goodness, look at those calls go.
So the piano I felt sitting right next to me was just a great way to articulate that, because sometimes the picture's worth 1,000 words. Sometimes the sound is worth 1,000 words as well. And if you're wanting to get to the point of playing piano at super lightning speed, go sit down at a piano right now and fucking play a song at super lightning speed when you don't even know how to play piano. Neither of the two are going to happen. So first you need to learn how to play the piano. Then you need to get good at playing the piano. Then you can play the piano all fast and show off and stuff. I think that's ODTE.
You know, so sitting here talking about the premiums, right? On the 4980 calls and the 4965 calls. So the 4965 calls, since I said that I'm scalping them, have gone from 490 to about 710. And the 4980s are still trading around 35 to 40. So those went from 20 to 40 at the highest for 100%. But in order to get the profit that you would have gotten on something in the money, you would have need to make that trade 1,000% on the further out strike. So the ROI sexy return numbers for the gains aren't as attractive anymore when you think of it dollars to dollars. Now, sure, I personally have done it. A lot of other people do it and show off really crazy, high return numbers, and that's fine and
Percentages.
dandy.
Yeah.
But how do you get to that? You get there by compounding, and you take riskier trades that are out of money. You can take those trades with profit. If you're taking that trade with your initial
Exactly.
capital, you are gambling because you're literally buying low probability. That's like putting your mortgage payment on your first Texas Hold'em poker hand and expect to get a royal flush.
Yeah, it's like going to perform a song on the piano at a hotel and get paid for it when you've never played piano or successfully played that song.
Look, like, okay, so just since the last update at 40 cents, those contracts have moved $10, but the 49.65 calls have moved $140. So again, we're talking about the math. From 20 to 50 is $30 a contract, or from 490 to 8, I'm making 310.
Mm-hmm.
The ROI percentage doesn't really matter as much if you're not getting the same profitability. But I digress.
You see, when I hear you saying this stuff too, I we always both wonder how everything translates to everybody listening. But when I'm listening to you as a listener, to me, I hear like the same type of process and discipline you have in your other trades. You not only put in ODT, you're like on alert. You're like, this is where like we all fuck up, and we talked about that earlier. We don't need to reiterate that, but it's like where you're like really on high alert. You're like, I'm at my full level of discipline because you're a disciplined trader. So you know where the things are the riskiest, require the most of your discipline.
Absolutely. It's a good way of putting it too, because especially in this space, it's not discussed enough. It's discussed, but it's not discussed enough. But there's a time and place to be a little bit looser with trades, because especially with zero DTs, it's so risky. Like, it took forever for me to learn how to read and predict, and not even predict, but intuitively grasp what could happen based on multiple factors. It's not just, there's, man, I hear so many different ways. There's so many different things that you can pay attention to. The one thing that you can't teach is intuition.
Right.
You can't teach real-time experience until you've experienced it. And the way I learn something may not be the same way that you as a listener can learn something. You might be a different type of, you might be kinesthetic, you might be auditory, you might be visual. If hearing
Which you did a very good job of talking about those, by the way, in another spaces too.
And I think that was on like the second or third. I don't even remember at this point.
It was a real good one.
It really matters how you perceive and receive information, because what you think something is versus what it actually is and how you retain it are two completely different things. So you really also, that's not really discussed enough, but you have to understand how you retain information, because, what might be simple and easy to comprehend to me might be extremely difficult to comprehend for you, or easy for someone else. If you just flip it to reading it, or maybe looking at it with a visual aid or infographic or something like that, it might help you learn better. And that's where things like Investopedia is a perfect resource for this, because they have the text, they have videos, and they have images. So you have all your types of learning material for free. Again, this is stuff that you don't have to pay for. This isn't a paid course. This is free information on Investopedia.com. And so to reiterate to my point, I keep coming back to these two contracts because I'm just watching it happen. The 4980 calls, we get closer to the close. We have 9 minutes until the closing bell. Those contracts are now down 50% in value. But the 4965 calls are still in profit. This is where it's more important to stay in the money or around the money versus trading out of the money because it's not worth the risk. I mean, SPX can move. I'm not saying it can't move 5, 10, 15 points in 9 minutes. It can, absolutely it can. But you have to think about the amount of money controlling the flat price action in the market is designed to lure people in and trap them. Because again, we just like we can define our risk, market makers can define how they're going to take your money. And it's, we refer to it as chop zone. I refer to it as torture chamber days because it sucks.
I call it the food processor.
And it's painful to sit through it. But again, I'm going to harp on the point that I was talking about earlier. We have the privilege of waiting and sitting and waiting for the right opportunity, the right setup, the right chart pattern, the right fundamental report, the earning report, the catalyst that we're waiting on, whatever. We have the ability to wait for any of those things to take place before we ever click the buy sell button. So take advantage of it. That doesn't mean you have to be in a trade 25-8. And that's a step above 24/7 for those who are paying attention.
Yeah.
And we don't need to, because I saw a comment about this, we don't need to ever average down an option trade. We can scale into an option trade, but again, we have to be at that point in our account to where you're using 1% of your allocation and you can use another percent of your remaining allocation for the day, which means you haven't used 3%, and you can scale into a position that might not be ready yet. But if it's something that's already made profit, you never average down because you're basically paying the market to take more of your money on something that's not working. Water the flowers and cut the weeds, not cut the flowers and water the weeds. We have to be smart. This is our business.
I gotta go redo my garden.
We have to be smart with our money because if we're willing to invest money into something that we believe in, we should be right the first time around. And if we're not, we need to be willing to admit it to ourselves. Mark Douglas, Trading in the Zone, perfect example. We have to be willing to admit that we were wrong immediately rather than down the road. Because it's not a matter of being right and wrong. It's a matter of how quickly we can be right or wrong and assume the responsibility of the decision we make after. Okay, and again, I'm gonna bring you back to the SPX calls. 49.65 calls are at 7.50. The 49.80 calls are at 10 cents. Now they're at 5 cents. So
yeah, and that one increased, and that one's still stale because one person went farther on the stretch and the more gambling person side of it, and then another person said, even though I'm doing something extremely risky, I'm gonna try to at least minimize or mitigate is a better word, some of that risk by getting something like Exclusive did that's in the money. Now as the day's playing off and concluding, him making that decision in real time is the difference of there being profit in that contract, and someone who maybe made the decision for that other contract is sitting there and they're both having two different experiences. So we're 4 minutes out to the close, X. I'm going to take a second here. First of all, to thank everybody for what Exclusive and I set out to do was to do something special for like a special spaces, like a call it one episode or a second one. And then we soon and very quickly realized that we had something special, especially with you guys. And there was something that we concocted that felt right, which was this structure when we all love a show that we love. Not that Exclusive and I are showmen. We love this show, doing it for you guys. And it seems that you feel the same way about us for the most part. And so we were like, you know what? maybe we have something special here. Let's give it some type of structure where it feels like, you know, a show like we all love, like a whatever, Curb Your Enthusiasm, a Preacher, just some things come to mind for anybody, whatever favorite show they have, Game of Thrones, whatever. So this was like our Game of Thrones. And we, like, after doing 2 shows, realized that, and like a pilot, you know, we picked it up and committed to giving it the structure and committed to you guys and the consistency of it. So we sought to do every Tuesday and every week, and everything that we've discussed outside of here, that seems to be a very good sweet spot, especially today, because had we done it on Mondays or Fridays, you know, sometimes those days don't exist depending on holidays too. So Tuesday seems to be a good sweet spot. We've gotten good feedback on that, so I think we're going to leave that as is. But we will say goodbye today, which really sucks for me after crying on all your guys' shoulders earlier, and just in general, and just the camaraderie and the brotherhood that Exclusive and I have developed. So we're going to communicate a lot offline, you and me, community, and then Exclusive and I as well. I got a lot of stuff coming up just kind of personally over the next couple of weeks, but I don't see really my posts coming down. I always grab my phone or have a chart ready or something like that. I have my iPad and pretty mobile, so I'm gonna pretty much, I think, keep up my level of communication and posting and things like that. But it is goodbye. It is the season finale of the Exclusive Banana Show for season 1. And what we kind of tentatively plan to do, and this is so we're serious. We're committed to you guys. We love you guys. We've already done the graphics for season 2. So season 2's coming. So not too sad on the goodbye, because it's only goodbye for now. We don't have an exact date. A little bit because of the things going on, as I mentioned, and a little bit by design, because that's kind of how those good shows work, is that there's some kind of sweet spot they find within a 4 to 5 week period, or whatever different cadences of shows are, and make some type of seed planting, some type of announcement that, hey, we're gonna make a comeback soon. So
Real quick,
tentatively,
Banana, sorry to cut you off.
yeah,
If you're in
please.
the 4965s, trim at 10 to market.
Nice. You got a minute left.
Oh,
To
and
do a
guess
good,
what? Those
good shout out.
4980 calls that we were talking about at 20 cents are still going to expire worthless.
There you go. What a difference between the 2 contracts in the last minute there. Wow. Nice play.
I'm telling you, it's, you know.
Wow. And literally fluid time in seconds. The decision he made minutes ago, knowing how these things act in minutes, and he kind of had that intuition of how the end was going to work out. That end. And that was the key for that trade too, as he had pointed out. Look, guys, I want to tell you, it's been a special 8 episodes. It's not only that, it's because Exclusive and I were in spaces and stuff like that, but we felt like we really brought something special. And we didn't know what we had till we had it. And it's because of you guys. That's the special part, is you. And you realizing that something between us and you is special. So thank you, thank you, thank you for that, because it warms my heart. It's made it an emotional, passionate, and fulfilling journey to do these spaces with you. I couldn't ask for $1 or anything more than what I've already received. I hope you guys feel the same way. I know that a lot of you do. And it's sad to say goodbye, but it's only for now. And I think Exclusive and I, in about 4 to 5 weeks, might give an update of something special that we're working on next. And I'll leave it at that. And X, you got the stage for the final words. But thank you. Thank you for being such an incredible brother and partner. Really appreciate it.
Not a problem, man. And thank you. And guys, for those who, I mean, wow, if you tuned in for the entire day, you know, drop a heart, tell us something that you love, or tell us something that you hate, whichever. It's all good. And you know, just show the love, because you know, it's an unspoken thing. You know, I have my moments where I get a little bit irritated, but some things like engaging with the community is really fun. And, I don't know if it's a shadow ban, I don't know what it is, but for some reason, I don't see it a lot on my post. But if you comment something, I'm pretty sure I've always responded, unless it's some troll. I've responded to pretty much every single comment in existence on my feed. And some of the DMs, I can't get to all of them because there's a lot, but I do my best to get through them. And we appreciate the support from the community because there's a ton of things you could be doing. I know there's a lot of better things going on, and we appreciate you taking the time to listen and engage with us because it it just lets us know that we're doing the right thing. So because we enjoy this. This is for your benefit, not ours. It's fun to do. It's fun to teach and educate and do stuff for free. And we've got some stuff coming for season 2 that we think you guys might like. Maybe, just maybe, right?
Mhm.
And we'll be back
Mhm,
after a little
mhm.
hiatus here. We'll figure out the timeline a little bit better. In a few weeks, we'll have a more defined answer. But we'll see you guys off the spaces, and you know we'll go from there. I mean, it's been an incredible start, and just like most seasons, they do have to come to an end. But the next season will start, and we'll I'm sure we'll all be happy to reconvene, right?
Absolutely. Well said, brother. Let's do a hashtag season 2 for the people listening out there. Give us that reply. Give us some love. Give us a pulse to know what you're feeling. That's really the gist of that pulse. So we feel that heartbeat. And we can't wait to be back with you guys. And I know I can't wait. I know I speak for my partner in crime here. And it's hard to say goodbye, but we're gonna do it. We were with each other from start to close, and I haven't slept personally. You saw me posting at 1 a.m., 2 a.m., 3 a.m., 4 a.m. I'm gonna wrap up my day, catch a nap, take care of the kids. I'll be just fine. But I wanted to be with you guys through and through, show you the work ethic and the dedication it takes to be successful in this game, and the dedication it takes to be successful in anything, to even be a successful spaces. All right, I spent all night thinking about what I was going to say and talk about the finale. I had an audible with crying in public for the fifth or sixth time, or maybe more. But just thank you guys for all of that. X, it's been an incredible 8 episodes, bro. Like really, really, really has. We've shared so much. We've given so much, but maybe we've even received more.
Oh yeah,
and
for
and
sure.
and
That's an
that
easy
that
yes.
gives me the appetite for season 2,
Oh yeah. I'm gonna, forgive me if I'm talking about someone's personal business through some of these DMs I responded to. Someone was able to get braces for their kid. It was like a few weeks ago. I think it was from Spaces number 3, I believe.
Mm-hmm.
Someone was just able to get like a new outfit for their kid. I mean, whenever it's a DM about somebody being able to do something that they might have otherwise not been able to do as a direct result from something they learned or heard, that they were able to make a decision on their own that happened to make profit, and you do something positive for somebody else, whether that's your children, your parents, your friend, whatever,
Yeah, it's amazing.
that makes me feel so much better on the inside. And
Yeah,
because that's something you can't buy that from somebody. You know what I mean? You
yeah.
can't buy
It's priceless.
generosity. Like you can buy fake generosity and gold diggers, I guess, but
Mm-hmm.
you can't buy genuine generosity. People have to make that decision on their own. So, if you have experiences like that are directly correlated from these spaces, send me a DM. I'm gonna go through the spam ones because sometimes even if I've never engaged with you on Twitter, it goes to like a spam folder. I don't know why, but I'll look through those later this evening when I've got some downtime. I've got a ton of charts to update because of this stupid red day, but that's part of the job, right? We have
Yeah.
we have to review trades. We have to look at Sedge. Oh my goodness, Solar Edge is going. It's our job to journal our trades, update our charts, pay attention to aftermarket news, pay attention to what's going on in the China and Europe markets. And we have to stay in tune with the market because it's not just the US. We have to pay attention to what's going on around it. But anyways.
Well, sadly, it's a wrap.
Yep.
Season 1, episode 8 has come to a conclusion. We look extremely forward to season 2. We'll have an update in the next couple weeks about it. I know Exclusive and I will be posting, and we'll stay in touch with everybody, but it'll be something to look forward to, something to miss, and something to prepare for, because I think, honestly, for some people are taking this real seriously. I'm just going through some DMs too, and I can already tell from some of the stuff. But if you take this, not because we said it, if this was somebody else's stream, okay, I would listen to this. All right. And if you at any level spend the time to go through the recordings, treat it like homework. Hashtag more homework. We work hard in this community. All right. If you're not up your game, if you're working your ass off and not making money, it'll come. All right. But we work our ass off here. Exclusive works really hard, and I do too. We expect the same from you. So if you haven't been as hardworking, that's okay. Or learning more about the markets, or seeing if it's something that you want to allocate more work towards. Okay. We support that. We're here for you. We're here. Hashtag more homework. Okay. I've been up all night. Exclusive. If it wasn't this night, he's been up other nights. Don't worry about that. All right. We're going to say goodbye. It's hard to do, but it's going to be real exciting to make a comeback, right? And we'll have something to look forward to episode 1. Hopefully, I might have another banana. The third one to actually really, really complete the bunch. And we'll be re-energized. And if you guys can come prepared from doing all the homework that we set forth into season 2, it's going to be more prosperous for all of us. All right. It's goodbye, X. It's so hard to say, man.
I know we keep avoiding.
I know I keep circling the wagon, but it's just hard to do. But you know what? We'll post. We'll be, because it's hard to say goodbye to people, but we'll be posting. We'll do our stuff. You know, we're in the game still, but it's a little hiatus. It gives us some time to refresh and prepare. You see how much work we put into everything, including the spaces, and that's the same energy and effort that we want to bring for season 2. So look forward to season 2. That's a wrap for me, man.
All right, guys, take care. Trade safe out there, and as always, do your homework.
Goodbye.
See you guys
later. See ya.